Eunice.
Well, Joe, I am at the Huawei store, and I don't know if you can see behind me, but there is an Apple store right across the street. It's one of the many that have seen people
Tell her I said
heading over
hello.
since 5:30 this morning to get their hands
How
on
are
the iPhone
you?
16. Now, over here, Huawei
Have a
fans are coming in to
smooch.
get the Mate XT. So this is a tri-fold phone. It is a tablet and smartphone rolled up into one. Obviously, it folds 3 ways. What was also interesting is that the screens allow for a lot of different windows to be open at the same time, and it's really very lightweight, just a little bit heavier than the iPhone 16 Pro Max. Now, scalpers outside of the Apple Store told us that the Pro Max was the winner of the lineup of iPhone 16 phones. They've been trying to buy the phones off of consumers, saying that they would buy them at a markup of $70 for black and white models and $42 for desert titanium. Now, online orders for the Pro Max are backlogged by 2 to 3 weeks. This doesn't mean, though, that Apple doesn't have problems here. The Apple Intelligence AI service is still not approved by Chinese regulators here. And then, of course, there is the competition from the Chinese competitors, including Huawei. And Joe, you said you couldn't decide which phone to get. Well, it looks as though Huawei is going to be taking, or at least ramping up its fight with Apple overseas. Their sources who are familiar with the matter say that Huawei is planning on launching this $2,800 trifold phone in overseas markets in the first quarter of next year.
Yeah, that was definitely sarcasm, Eunice. I'm gonna get rid of this.
Well, maybe you can get your hands on one.
I'm gonna get rid of this Motorola flip phone that I've been using. Becky might get rid of her BlackBerry someday. But in all seriousness, when I send a text and it comes and it's like green, it's like, who are you? You don't have an iPhone? I don't even understand what are the Android, Samsung? People have those?
Yeah. The cameras are pretty good. The screens are pretty good.
No,
Once you're in the Apple ecosystem, it's really hard.
It's enough for me to be doing this, Eunice, and there's no way, I can't even imagine trying to learn how to use a Huawei or even a Galaxy. Is that what they're?
Yeah, my dad had one for a while, but it was finally the family chest.
It's a different ecosystem. It's based off of the Harmony OS, so Huawei has been investing in its own technologies, especially with all the sanctions. Harmony OS. So it's a different OS. Yeah, so you'd have to get all adjusted to that. And yes, but they also
Huawei.
But they also have a lot of challenges themselves.
Joe.
Because the pre-order numbers were 6.8 million. But there were fans who were complaining that they weren't able to.
Okay, well, I'm getting out of here again.
Text. So there have been some analysts who said.
Have a good day.
They wouldn't comment on the numbers that have been produced or the numbers that were delivered today. So still a lot of challenges for Huawei to.
I'm a blue text person snob. I think less of a person. When it comes back and it's green, it's like, what kind of phone do you have? Why don't you?
No.
You don't think less of?
No.
Tim,
I think maybe they walk their own.
If Tim watches something, he must love this.
Can't you like both? Blue and green?
No. I wonder what's wrong with this. iPhone.
There's my support.
If you don't have an iPhone, I don't understand.
Let's see if it holds. If not, we're in for more trouble.
Thanks, Eunice.
I have an iPhone.
I know you do. I do too. No, I do too. And it's not an old one.
But I don't make fun of people who don't.
I'm not making fun of them. I'm saying
they're stupid. You don't understand them.
No, you say I think less of them. I'm kidding. I'm kidding. But when you get a green thing back, don't you say, who are you?
I honestly don't get that many green things back.
That's what I mean. And when you do, it's like, get into them. It's 2024. Let's go.
When we come back, we're going to talk about the new CEO at Nike and the challenges ahead for the company. Squawk will be right back.
in Peacock.
Nike CEO John Donahoe is stepping down, and company veteran Elliott Hill is coming out of retirement to take over as CEO next month. Joining us right now with more on what this means for the future of Nike is Adrian Ye, who is Barclays U.S. Retail Senior Analyst. And Adrian, this is a big move. The stock is reflecting that. It's up 6.5% this morning. What needs to be done, and what can he do in quick order?
So I think the big piece of it is that just fundamentally he's a product and marketplace person. And so from the prior management, who had been sort of more of a consulting background and more of a technology background, retail really does need that person who understands product and brand and consumer. So in short order, I think it's just the direction of where he's going to take the company over the next 6 to 9 months. What's already in the pipeline is coming at us, right? So that innovation, and we're starting to see that in early 2025.
Yeah, the stuff that's already in the pipeline, okay, that's not going to be things that he can get his hands on and feel around it. We've gotten reports of excitement at the company headquarters, people looking forward to these changes because they know him and know him well. My guess would be there would be outside partnerships that would be pretty important too, Foot Locker and other places too. How quickly can they rebuild some of those partnerships and connections?
So from the wholesale channel management, you can start to do that almost immediately. And we already had heard from the company over the past quarter that they were moving away from this DTC strategy, sort of back to the wholesale channel.
Right.
Direct to consumer, exactly, direct to consumer. And so that shift back to the wholesalers, the Dick's Sporting Goods, the Foot Lockers, that had been sort of abandoned for a period of time in favor of their own direct to consumer business. They already had started to move back to that, because he has, a 30-year veteran of the business, and one of his charges was marketplace. So marketplace is this wholesale retail partnerships. That can immediately start to feel some impact.
My guess is that to be a retailer today, or to be a product today that's really successful, you have to have both. Relationships with direct-to-consumer, your own way of reaching them, but also these great partnerships with retailers. Is that a job you think he will be able to do well? If he's coming from the old school way of thinking of things, and the pressure from shareholders and the board and everyone else is that we went too far towards direct to consumer, is there a fine line that he'll be able to walk without kind of shoving that important part of the business aside?
So interestingly, the strategy that was employed was before he actually retired in 2020. And so this movement, or the kind of march toward direct-to-consumer, led by digital, right? So this whole world of e-commerce and moving toward that digital environment. What I'll say about kind of the channel mix is there's been so much talk about whether they want to be DTC focused or whether they want to be brand, wholesale focused. And at the end of the day, it's really sort of an output of where the consumer wants to shop and how the channels work together. So I don't necessarily think that he's going to direct from the input side of things where they want to be at some point in time. I think he's of the kind of both of the channels work together. DTC launches and innovates product. It proves the worth of those, and then it moves into the wholesale channel. And they're very, very symbiotic.
So Adrian, what do you do with the stock today? It's up 6.5%, year to date still down 20%.
What I would say is these types of management changes, so we're at equal weight. So we obviously, are at an equal weight. This is a positive development, just absolutely a positive development. If there are people who tend to kind of think very, very forward-looking about the brand health is still there. This is not a broken brand. This is a brand that's lost its way and can be resurrected, but it will take time. Right, so he steps into the seat on October 14th. They have an analyst day. He'll be at the helm on November 19th. That's going to be a critical moment for investors. And then from there, it's probably about 6 to 9 to 12 months before he really starts to change the business from the trajectory that it's on. We just previewed their quarter. We think the quarter is going to be fine. Right, we think they've de-risked the FY25 guidance, that they don't need to lower numbers, that there'll be a little bit of upside. But remember, China is 15% of the business, and China has gotten materially worse over the last 3 months for everybody. So that's one of the risk factors.
It's a horrific looking chart, Adrian. It's dead money for 5 years, right? 6 years almost. Same level where it was. Go back and tell me. I don't know why I don't remember. What did they say on July, whatever that was, 19th? I mean, stocks like Nike aren't supposed to go from 97 to 70 in a single day. What the hell was that?
So you are 100% correct. Over 5 years, we've basically gone up to 177 in the peak of 21, and then we came all the way right back down, and we're 15 bucks off of the pandemic low in March of 2020. Right? This is not a good low. What they said in July on the last quarter, they lowered the FY25 guidance, and they basically guided to negative annual sales. This is a global growth company. You cannot be putting up negative sales. They also had guided, I remember the consensus was somewhere hanging out around 380, and they guided to effectively $3, right? They talked about franchise management, pulling out product out of the DTC channel, their core franchises, Air Jordan, Air Force One, Dunks, right? This is and then they talked about moving back to wholesale, which was going to be margin dilutive. So it was sort of a negative on a negative on a negative. And frankly, the leadership was the same. Right, so there was no underwriting of this strategy under that past leadership.
Interesting. So if this new guy had been there, none of that would have happened, Adrian?
It's interesting. Like, in order to get to that point in time, decisions had to be made over John Donahoe's 4.5-year tenure, right? So we had a couple of things that you couldn't control, right? Vietnam shut down on the marketplace, manufacturing, the excess inventory. But what I would say the difference is that if, retail's all about the details, right? And so these big sweeping moves to DTC because the margins are better, big sweeping moves to get out of these franchises because, you think you're selling too much of them. I guess at the end of the day, we really think that somebody in there might have handled these issues a little bit better if they were very focused on inventory, very focused on supply chain.
Adrian, thank you.
Thank you.
It's more than just a little after 7, and my fault, I guess, kind of. Although
It is.
you're watching
The rap cues, but it was
5 after. Yeah, it's
interesting information.
It's a $200 billion company that's
It
worth
matters.
$90 billion now,
matters.
or 97 billion. Squawk Box on CNBC. I'm Joe Kernan along with Becky Quick. Among today's top stories, executives at the Port of New York, New Jersey tell CNBC that they've begun preparations for a potential complete work stoppage by the Longshoremen's Union. A strike would shut down 5 of the 10 busiest ports in North America. Jay Powell's thinking about that. Macy's plans to hire more than 31,000 full and part-time employees. Sounds like a lot. That's for the holidays, but it's fewer than last year. But the department store is gearing up for a busy season, as usual. See how many pumpkins are at the supermarket right now? It's like a month and a half, right?
Oh, they've been out for a while. If you go to the drugstore, all of the stuff is Halloween. Spooky season.
Trick or treat.
I love scary movies. I love that holiday. I'm not really a pagan. It makes me feel like a pagan. And YouTube is now showing ads that when you pause videos, it joins DirecTV, Sling, and Hulu by using targeted ads on pause screens. The new ads also pop up when you pause videos on the YouTube mobile app. They're going to get you no matter where you are. So just be prepared.
All right, checking the futures this morning. Looks like right now Dow futures still barely in positive territory, up by about 5 points. S&P down by 15. The Nasdaq a little weaker. It's down by 87. Let's get over to Dom Chu. He's got a look at this morning's pre-market movers. Hey, Dom.
Happy Friday, Becky. Happy Friday, Joe. We'll get things started off with a check on some of the earnings movers out there. Besides kind of that whole story with Nike. Homebuilder Lennar is right now just down about 2.5% pre-market after hitting a record high in yesterday's market rally. Now, it reported beats for both quarterly profits and revenues. Lennar, though, also reported year-over-year gains in both home deliveries and new orders. And it added that the Fed's move to cut interest rates this week will lead to more demand for housing. Nonetheless, a pullback from yesterday's record high, down 2.5%. Then you got shares of FedEx, story of the morning, driving a lot of the market story today. Currently down just around 13%. You can see here the package delivery giant reported lower than expected earnings and revenues. It also cut the top end of its full-year profit forecast and then lowered its full-year revenue guidance. Now, that's led to a number of analyst revisions to ratings and targets. Among them, Morgan Stanley, which cut the stock to underweight from equal weight. It also reduced the target price to $200. It was $215, saying that expectations need to be recalibrated, to use some Fed speak today. United Parcel Service, UPS, is also down 2.5% in sympathy with that. And we'll end with consumer staples, and PepsiCo shares currently down just about 1.25%, due in large part to a downgrade by Morgan Stanley as well. They cut the soda and snack giant to an equal weight from overweight, due in part to potential risks to organic sales growth and market share losses as well. And by the way, for more on those and other top stories of the day, head over to cnbc.com/pro. Becky, I'll send things back over to you.
Down 40 points
On FedEx.
on FedEx?
Yeah, it was, if you put it back up
I mean,
there.
it's a
I'll show you
it's
the
a-
one-year chart on this as well. It's actually been pretty good, FedEx and UPS, but if you look at the one-year chart of both of those...
Oh, now how are you gonna pump it
UPS
now?
has obviously been a big underperformer versus FedEx, but that kind of mean reversion coming back is maybe one of the reasons why you're seeing FedEx shares down
You know
as
Dow
much as they are
theory.
right now.
You know Dow theory, Don. It just transport-wise, maybe the 50 basis points is starting to make some sense.
Well, if you want to talk
I
about
don't know.
Dow theory, I mean, what has UPS been telling you about Dow theory, right?
Yeah.
Over the course of the last year, FedEx has actually done pretty well by comparison,
Yeah.
but it's this right here that's caught
Yeah.
a lot of people a little bit off guard.
I mean, those are shocking package numbers. I don't know what it means. I don't know what
It's
any
that
of it.
people don't need it immediately, and they're not going to pay premium prices.
Yes, the
Yeah.
premium price thing, I think, to
Yeah.
Becky's point, right? Everyone wants to shift, even the corporate customers are shifting more towards economy-type packaging and delivery versus the premium stuff. So, who knows?
Thank you, Don.
You got it, guys.
All right, coming up, we're going to talk Federal Reserve and its impact on the markets, and then a new shark is circling. Kind Snacks founder Daniel Lubetzky set to join the Shark Tank panel, but before he does, he's going to join us on Squawk Box. We'll be right back.
Educator.com/TV.
Johnson & Johnson reportedly increasing its baby powder settlement offer. This is according to Bloomberg, which says that the firm is upping its bid to settle thousands of lawsuits to more than $8.2 billion. I think that's about $1.7 billion above what we had heard earlier. The plaintiffs argue that J&J's talc baby powder gave them cancer.
Let's take a look at the futures this morning. We are seeing a mixed picture. I think the S&P might be down, NASDAQ down a little. Actually, now the Dow is also down, so we're down across the board. Joining us now, Mimi Duff, Gen Trust Managing Director. Mimi, it's good to see you. What were your? We haven't had you on since Wednesday. What did you think? And what was behind that? Have you ever recalibrated anything? I'm going to start using that word.
That's the key message. It's a recalibration. I think the most interesting bits of the Fed meeting were that they are taking a level-based approach. They think that 5.5% is the wrong target rate for this economy, lowered it pretty aggressively to 4 3/4 to 5. So they're not going to wait for material weakness. They are basically trying to calibrate the funds rate to the current economic conditions. So that was one bit. And the next thing for me, the most interesting, I think, was the amount of disagreement on where the long-term Fed funds rate is. So they edged that up to 2.9%. But if you look at the variability in the dots on that dot plot, there's a lot of variability. See that last column there? And that's affecting the whole path along the way.
Mimi, I just think in the past, like maybe it was Greenspan or just the experience with Volcker, the risks weren't ever really seen to be balanced. Like the economy, I think the Fed, people thought, had less to do with being the engine for the U.S. economy in terms of jobs. And the Fed was more there to guard the sanctity of the dollar and to keep, the most insidious force known to man is probably inflation. But I guess after the Japan experience and other things, no inflation can be bad too. And it almost looks like this Fed, it's almost equally concerned with each mandate, which is, I think, recalibrating. Because I just don't understand it, you build up this dry powder to use for the next slowdown. With where unemployment is right now, it doesn't seem like the jobs picture is as important as keeping inflation at bay after what we just went through. They seem to think that seems to be on the back burner now, inflation. And they're full on with pedal to the metal for job growth, which is already at historic levels, the employment.
Yeah, I'm not disagreeing with you there. Look, I mean, on the inflation, the Fed does have a dual mandate. Most central banks have the single mandate, the inflation target. Again, I go back to that long-term dot, the long-term neutral. Nobody thinks it's 2%. That's interesting to me. On the degree of recovery that they've seen so far on the inflation picture, if you're looking at the monthly prints, they really do look good. So I think that given the deterioration, the recent deterioration in the job side, they are pivoting. I don't disagree. They're definitely taking their dual mandate seriously here.
And you, as an economist, you think that I would go 2/3 dollar stability and 1/3 labor. I don't think the Fed should be concerned with, the U.S. economy can take care of itself in terms of job creation and innovation and everything else. Just give me a stable dollar and stable prices, and everything else takes care of itself. Do you agree with a 50-50? Or right now it looks like 75 labor, 25 inflation.
Well, I think, listen, I mean, they have a dual mandate. They're not GDP targeters.
It's a stock market, maybe that's what I'm getting at. I think they like stock markets that go up too.
They'll never say that. We know that. But the stock market yesterday, there was a lot of exuberance, a little delayed reaction there.
We're at all-time highs and we're cutting interest rates like the world's ending.
Again, they're coming to this level argument, right?
So we're recalibrating.
They're recalibrating.
We're recalibrating. All right, I'm gonna try and come to grips with that. Thanks, Mimi.
Thank you for having me.
Okay.
Up next, Mark Cuban jumping out of the tank, and replacing him is Kind Snacks founder Daniel Lubetzky. He will join us next to talk about inflation, startups, and more. He is the latest shark to take into the tank on this.
Is Cuban's leaving for good?
I don't know. That was news to me reading that.
He is? What's he gonna do? He's not gonna be Treasury Secretary? Probably hopes. All
right, and later, Harvard's Jason Furman joins us to talk about the economy and the race for the White House. Squawk Box will be right back.
Time now for today's Aflac trivia question. Who holds the NCAA record for the most career passing touchdowns? The answer when Squawk Box returns. NBC. And now the answer to today's Aflac trivia question. Who holds the NCAA record for the most career passing touchdowns? The answer? Case Keenum from the University of Houston with 155 touchdowns.
All right, there's a new shark circling. Kind Snacks founder Daniel Lubetzky is going to be joining the Shark Tank panel for season 16. Longtime shark Mark Cuban is leaving the show. Some of Daniel's most notable investments on Shark Tank include Yellow Leaf Hammocks, as well as deals with Fit Fight, Tandem Surf, and HumViewer. And he can tell us about what all of these are. Joining us right now is Daniel Lubetzky himself. Of course, he's the Kind Snacks founder and Camino Partners founder. Daniel, thank you for being here. First of all, why jump into this tank? What is it about Shark Tank? What do you want to do there?
Shark Tank is a magical, very, very unique show already going into 16th season, 5-time Emmy Award winner that brings together all generations. Like, I watch it with my kids and I use it as an opportunity to teach them a little bit about business with pause, and we discuss valuations, we discuss what the entrepreneurs doing right and wrong. It's a really entertaining. They found the right magic to keep people really, really entertained while teaching them about entrepreneurship and the American spirit and the incredible opportunities that our country affords us all.
Yeah, I watch it with my kids too. It is an incredible teacher of things that probably they're not learning in the school system all that often. You're so well known for Kind because you took a company from 0 to 5 billion and you did it with just an investment of $5 million. How did you do it? What did you learn along the way that you can bring to Shark Tank?
I think what's interesting on my experience that I can bring to Shark Tank is just the success of Kind, but also the failures before it. I had 10 years, Becky, where I was like making 2 steps forward, 3 steps backward with my first company, Peaceworks, and all of the mistakes I drew then, I drew the lessons to then get it right for Kind and just describe what happened then. And so I think I can bring to the entrepreneurs every step of the way from when I was a one-person operation in the windowless basement of my building, right across from the trash compactor. There was like spewing all these noises and smells, all the way to building, 5, 10 team members, 10, 20, 50, 100, 400, 500, billions of dollars in revenues. And it's, in my experience, the mistakes, as long as you're self-reflective, are as important as the successes because they teach you how to calibrate and pivot.
Yeah, a lot of the pitches that come are from people who are at just that point. Maybe they're 3 people, maybe they're 5 people. These are very small operations that a lot of times have great ideas. What do you look for in those pitches that makes you decide, okay, this is somebody I want to put my money on versus, no, I think I'm going to pass on this one?
I call it the 3 its. First, I used to, when I started investing, just looking for grit. So I wanted to be fighting, but that's what I used to have in the Peaceworks years, but I didn't have any of the wit. So I would just try to go through the walls, but there was a window or a door right next to it that if you were creative, you'd be able to get through. So you need to have the creativity to level the playing field by really, really outwitting your competitors or the large giants. And so you need the grit, the wit, and then there has to be a fit. Like the marketplace has to want the product. Somebody needs to really appreciate your unique selling proposition, and if that exists, then that's kind of what I'm looking for.
What kind of trends are you seeing right now that you think are hot, that are investing trends that you want to be on top of?
Well, through Shark Tank, we invest very early stage, but through Camino Partners, we invest much later stage, $20 million to $100 million investments, and we're doing a lot in the restaurant space. I've been here before to talk about Cava. We're very early investors there. I think we're just at the very beginning of that journey. That's an extraordinary CEO and brand and journey. So we do a lot of restaurant. I think people are still coveting health and wellness like the same way that we did with Kind, where we're giving people something that's healthy, but also tasty, wholesome, and convenient. I think there's still an untapped potential to deliver solutions in the restaurant and CPG space there. And then in AI and technology, the disruption that I'm witnessing is greater than anything in my lifetime. And I think a lot of us also in society are very shaken up. This is called the builders movement because we're really fed up with all the people creating troubles and rather than coming up with solutions and all the forces contributing to toxic polarization. We're trying really, really hard to elevate problem solvers. You talked about in schools, but also in our corporations, to bring a builder's mindset, creativity, curiosity, compassion, and courage to actually learn and teach how to navigate differences and create value, build bridges, build jobs, build opportunities.
That's great. Daniel, very quickly, the Fed cutting rates by 50 basis points. What does that mean for the entrepreneurs that you're looking at in Shark Tank? What does it mean for businesses that are very small businesses that at this point that are hoping to become bigger?
My advice to small businesses is to not get distracted by that. For the big boys like you guys, it matters. For the guys starting out, whether you're one person or 500 people, you can break through all of that. Kind grew triple digits from its day that it was born for the first 10 years, cash flow positively and profitably, and that included going through the financial crisis 2007, 8, 9, 10. Every year we would go triple digits. I didn't even understand what was going on. We're just holding on to the rocket ship. But if you have a good product, a good culture, a good team that you're empowering and giving them ownership, nothing can stop you, even inflation. Not to say that it's not super bad for the economy, but for the entrepreneurs, for the people at those junctures, just focus on your product and your value proposition.
Well, Daniel, we are excited to see you as a permanent shark in the tank, and we hope to have you back here on Squawk again soon.
Thank you, Becky. Thank you so much.
Thank you.
So to come this morning, Harvard professor Jason Furman on the economy and the election. Check out the pre-market leaders and laggards on the NASDAQ this morning. Squawk Box coming right back. From the past, Constellation Energy announcing plans to restart the nuclear power plant at Three Mile Island.
What?
Let's get it going. Fire that baby up. Microsoft is signing a 20-year deal to purchase the power output from that venture. The plant's expected to be ready for service in 2028. See the shares right now. Not moving on that, but
well, the Constellation shares are.
Yeah. 3 Mile Island was the site of the biggest nuclear accident in the history of the U.S. nuclear power generation. A partial meltdown of the reactor led to radioactive gases and iodine being released into the air back in the March of way back in 1979.
Man, if you are behind the nuclear movement and you want to get nuclear restarted in this country, what PR person signed off on saying, yeah, let's start with 3 Mile Island?
Without changing the name. That'd be a better name. 2 Mile Island, think people would still know it, yeah.
I think they might still know, but look, I understand the need for nuclear in this country, but wow.
Coming up, Jason Furman at Fukushima, staying closed, I think, right?
For now.
Jason Furman with reaction to yesterday's speech on the economy from President Biden. I bet he liked it. Checking the futures right now, we can see that the Dow's down about 20 points, NASDAQ down 85, S&P off a little. We'll be right back.
Okay. That we are.
Fed lowering interest rates isn't a declaration of victory, it's a declaration of progress. It's a signal we've entered a new phase of our economy and our recovery.
That was President Biden speaking at the Economic Club in Washington, D.C. yesterday. Joining us right now to talk about policy ahead of the November election is Jason Furman. He is Harvard Kennedy School professor and former CEA chair. And Jason, let's just talk about what the Fed's move actually does signal, what it indicates, because it's been pretty confusing to be watching this saying, okay, when Chairman Powell came out and said the economy's in great shape, the jobs market is still strong, but we're going to cut 50 basis points. Why do you think that is? Does the Fed see something happening, whether that be in commercial real estate loans, whether it be something in the job market that concerns it? Why cut 50 basis points if everything's great?
Look, I would have cut by 25 basis points. I don't think it's a big deal. I think it was a close call. The cut was 3 steps progress. Inflation's come down a lot, but 1 step moving in the opposite direction in the job market with the unemployment rate up. I don't think the Fed has some secret information about economic weakness we don't have, but they're a little bit nervous about the unemployment rate going up. I'm a little bit nervous about it too, just not quite as nervous as 50 basis points.
I think satisfaction thinking inflation has been tamed is one thing, and we certainly have seen some better numbers and some improvement. But if you look on the horizon at the potential for strikes at the ports, for the strike at Boeing, some other things that could go wrong along the way, that could lead you to think that inflation could come back in some way, shape, or form.
Oh, absolutely. Look, I think inflation's running at about 2.5%. And that's why the Fed is still keeping interest rates at a contractionary stance. The loose labor market. I'm sorry, the loose labor market will continue to put some downward pressure on that inflation. But yeah, there's a risk. In fact, if you look at wage growth right now looks like what you'd see in a 3.5% inflation world. So there are definitely still risks to the soft landing, both from resurgent inflation and from recession. It's just that the balance of those risks have changed, and the inflation one's gone down, the recession one's gone up, so rates should come down.
It just would be pretty disconcerting if the Fed had to turn around and focus more on the inflationary side of the ledger of the dual mandate at this point, rather than watching labor market if something happens in the next few months.
But that's why they've moved so gradually. I mean, that's the nice thing. If they made a mistake and did too much, they just need to not cut at the next meeting or not cut at the meeting after. They're not in a position where they're going to need to reverse this, because rates are still contractionary. They're still going to be contractionary for a while. I'm not necessarily sure that it's the best way for the Fed to operate, but they operate with this gradualism. So they only move when they're overwhelmingly sure they should move. And even this is still not getting to where you'd want rates to be this minute. If you wanted to constantly have them in the right place, it's part of a path that they're going to go gradually on, and they can adjust.
I think that's probably why some people were in the 25 basis point camps, and including yourself. It's what you would have done too. Why don't we switch and talk a little bit about the election and what is potentially out there from each of the candidates? You had an op-ed earlier this week where you said basically both these candidates have crazy economic plans that have economists kind of ripping their hair out trying to figure out what to make of this. But you said Kamala Harris is the safer choice. Why don't we start with the economic plans we've seen from each of them so far? What's your favorite part?
Look, there's things she has that I like. An expanded child tax credit. That's something JD.
No, I'm sorry, for each of them. Why don't we? I was being a little sarcastic. Why don't we talk about the crazy things in both of these plans that drive you nuts first?
Sure. I mean, it's not going to tank our economy, but the idea that you might try to block a Japanese steel company from investing and helping support the growth of American steel production is just completely nuts. Saying tax-free tips, tax-free this, tax-free that, I think is pretty nuts. The idea that price gouging is right now keeping grocery prices higher, and there's something we can do about it, I don't think is understanding the economy. So there's a lot of things out there that, I'm not loving what I'm hearing.
What do you like the most about, why do you say Harris is the safer plan?
Look, there's three big ones for me, and it's the question of what you want to do and what you're able to do. First, trade. This administration did a bit more tariffs than I would have liked, although there was some theory and argument for them. 10 or 20% across the board tariffs, tariffs on allies like Australia, tariffs on products like ballpoint pens that we don't make. That's just a global trade war in the making. It's something Donald Trump could do all on his own without Congress. So that's number one. Number two, on the budget, I don't think anyone's taking it as seriously as they should, but pretty much every independent rack-up of the two says Donald Trump would add much more to the deficit. I total more than $5 trillion from him, and from Harris, depending on what she does, either some deficit reduction or $1.5 trillion of increase. And by the way, if he's elected, he will probably have a Republican Congress and can get it done. Finally, there's the Fed. His threats to the Fed are just awful. I don't think he could pull them off, but I'd rather not take the chance.
Some of those markups include her ability to raise taxes by $5 trillion, and that probably wouldn't happen either. Jason, I read, I don't know, you had a good piece in the Journal. John Paulson.
You can stop there.
Yeah, John Paulson. I could, if he were here, he would. He makes an interesting case for targeted tariffs, and Biden did lead some on. And you're right, ballpoint pens, I don't know about that, but like the defense industry, in general, we average about 2% on imported industrial, a tariff of 2%, and it's just much higher from everyone else. We are definitely
not everyone else. Most of the advanced economies have pretty similar tariffs with us. These are our close allies. We're going to put a 20% tariff.
I don't know about 20, but
Australia.
Okay, how would you? In 2022, we had a record for the trade deficit, 1.2 trillion, and then we had a 1 month record just in July of 103 billion. There is a problem.
But tariffs won't do anything about it. First of all, we'll do tariffs on them, they'll do tariffs on us, plus the exchange rate will adjust. Statistically, there is no relationship whatsoever between the level of tariffs and the trade deficit. What tariffs affect is the volume of trade. So we'll end up with less imports, which hurts our consumers, and we'll end up with less exports, which hurts our workers in those industries. So it just shrinks all of this trade, isn't going to rebalance it.
It must be hard for you because it neither
to be in favor of free trade. That's pretty.
No, I know. But it's almost like there's actually a neo free trade group that are like libertarian. It's very strange. Both sides have some strange hybrid ideas. Now Trump wants to get rid of the SALT cap. So I mean, there's crazy stuff going on. And I don't know how many trillions that would be. You'd probably like it. I don't know what Massachusetts is.
No. I would keep the SALT cap that was done in the reform. I think the structure of the 2017 reform was actually quite good and thoughtful.
Right, getting rid of all those.
Couldn't afford getting the rates down quite as far as they lowered them.
Well, there's nothing you like on either side at this point, to be totally honest. I understand we both have our axes to grind, but there's crazy.
There's nothing quite like tariffs on $4 trillion most of the goods we buy.
But just like you say, it's going to be a Republican Congress, so we don't have to worry about Kamala's absolutely bat something crazy stuff with price controls and unrealized gains. I mean, if that was going to pass, and you couldn't say, well, it'll never pass, you'd be hard pressed to try to defend some of those wacko ideas coming from AOC's side.
I don't like her price proposal. I think it's sort of like what most states
unrealized
do.
Gains?
Where it's in emergencies.
Unrealized gains
I might like a bit more than you and most of your viewers, but we can talk about that another time.
All right, let's do that. Go back in that little pod or whatever you were in. Then I can just focus
I'm in a hotel now.
Are you really?
I thought you were.
In Canada, where they're just terrified about the tariffs that Donald Trump wants to do on them.
Jason, thank you for joining us today. We'll see you again soon.
All right, coming up, what the wealthy really pay in taxes. Robert Frank has that story next.
It's usually.
Copper prices pushing towards all-time highs. U.S. Gold Corp offers investors leverage to both gold and copper at its project in mining-friendly Wyoming. U.S. Gold Corp has a reserve of almost 1.5 million ounces of gold equivalents, permits to mine, zero debt, with only 10.73 million shares outstanding, and a portfolio of world-class American strategic metals assets. U.S. Gold Corp. Join the golden age.
Your shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Sponsored jobs on Indeed are 2.5 times faster to first hire. Visit Indeed.com/hire.
I made a promise to my daughter that I would get my college degree. I had 20 years of experience as an HR professional. I had reached a ceiling, so I enrolled in UMGC. UMGC removes every barrier. Everyone treated me like a person with individual needs and met me where I was. I would not be the person that I am today, the mother, the business owner, had it not been for the partnership with UMGC.
Over 90% of cobalt used in batteries comes from China. Electra Battery Materials, awarded $20 million by the U.S. Department of Defense, is bringing the battery supply chain home, reducing dependence on China and revitalizing our industrial base. Electra Battery Materials.
Okay, ready to watch this? 1 second, I gotta finish my laundry. Jess, it's girls' night. 1 second, I use Rinse.
What's Rinse?
The company that will pick up, wash, fold, and deliver your laundry and dry cleaning at the touch of a button.
I do not trust other people with my laundry.
Rinse guarantees your satisfaction. I've been using it for months now with no issues. Okay, let's watch this.
Wait, I'm gonna do my laundry.
Better hurry. Done. All scheduled.
Sign up for Rinse at rinse.com to get $20 off your first order.
Big balls, man.
This is Belichick.
Higher, lower, coach.
He only needs 1 yard. Higher.
Duly appreciated.
Sign up with promo code TE1 to get a free pick.
You just told us all. Most people call leaf filter when their gutters are clogged and they notice one of the many issues that can bring. Well, sometimes it's the smell of mildew when water has seeped into the interior walls, or maybe they've spotted mold in the attic. But most often, it's the more obvious signs of damage, like rotten soffit, fascia, or water pooling near their foundation. You can get ahead of costly damage by protecting your home's gutters today. We're in your neighborhood and ready to help.
Schedule your free gutter inspection today. Call 833-LEAF-FILTER or visit leaffilter.com.
For years, I've been very conscious of the water that I drink, and I realized I wasn't thinking about the water I shower with. So I switched to the Jolie filtered shower head, and it has been life-changing. Highly recommend.
With both candidates pitching their tax agendas on the campaign trail, our friend Robert Frank, took a look at how much ultra-wealthy are really paying in taxes. I guess it depends, doesn't it?
No, there are actual numbers, and we're going to give them to you. Vice President Harris making the tax rate of the wealthy a big pillar of her campaign.
Billionaires and big corporations must pay their fair share in taxes. Because here's the thing, it's just not right that those who can most afford it are often paying a lower tax rate than our teachers and our nurses and our firefighters.
Also not right are those numbers. In fact, according to a new analysis from the nonpartisan Joint Committee on Taxation, the highest earners pay the highest tax rate. The top 1% pay an average federal income tax rate of more than 16%. That compares to a rate of 5%. Again, this is the effect of what people actually pay for the bottom 90% of Americans. Half of Americans, in fact, pay a negative rate of 2%, meaning they get money back from the government. The very highest earners, so the highest that we can measure, the top 0.01%, they earn an average of $13 million a year. They paid a federal rate of 31%. That is 6 times the rate paid by the bottom 90% of Americans. Yes, the wealthy have a higher share of income, but in 2021, that's the latest year available, the top 1% paid a record 46% of all federal income taxes. Their share of income was 26%, so it is a progressive system. At least 40% of Americans paid no federal income tax. Now, for more on what the wealthy pay and how they're preparing for the election, you can head to cnbc.com/insidewealth for my latest.
What if you don't have any income to put you in the top 0.01%? If you're just rich and you don't...
You're living off
Then you should tax unrealized capital gains, and you should sign up for...
No, but do they pay any taxes?
Are you asking whether billionaires...
If you stay out of the top 0.01% in income but still have $1 billion, but you don't pay any income, I mean, she can find people...
Yes,
that
there are individual billionaires in any individual year that because of capital losses or because they're borrowing and using that borrowing as income. But this is the point, you can find examples on either side, but on the whole, the top 0.01%, the smallest top group that we can measure, pays by far the highest rate. When you include all federal income taxes, they pay 34%.
I think what may throw people off is when you look at the statistics from the IRS saying that these people pay less than 5%, pay less than 6%, pay, when they're looking at the top 50 or rest of them, they're not paying income, but it's also not an apples to apples comparison, what you actually pay versus what the rates are for those levels. And I think that's, I didn't realize 50% of Americans were getting money back.
Right, and again,
that's Mitt Romney's 40,
right.
Yeah, 47%.
Right, but again, what we're talking about here are the effective what they pay rates, not the published marginal rates. And that's what was surprising. Most estimates I've seen before this are about, and this is why Chairman Wyden, who's the chairman of the Joint Tax Committee, actually disputed this finding.
Right, but
he actually said this is not
but
correct.
Robert, that's not going to stop the demagoguing and the fair stuff. Elizabeth Warren, even though she calls it Kroger, that's how tuned in she is to Kroger, she calls it Kroger, she's still using comparisons on profit gains based on a prior year's quarter where there is a $1.4 billion goodwill impairment charge. That's how she gets to these big, they don't care.
Right.
They do not care.
Our job is to give people the real numbers.
Right. The populace...
And they can make a decision. Look, it's a legitimate argument whether the wealthy should pay more, whether you should tax, but let's at least
Becky will bring the.
No.
The EU has been tough on big tech, but a new incoming antitrust chief may shift policies toward companies like Meta, Alphabet, Apple, and Amazon. Join us now with more on global tech regulation, AI, and much more. Peter Huntsman, CEO and president of Huntsman Corp. And it's good to see you this morning, Peter.
Joe, very good to see you again.
Are we behind the curve in terms of this in this country, and the EU's right, or do we need to be more like them, or do they need to back off? What do you really believe, Peter?
Joe, we have multiple billions of dollars of business in Europe, and I really struggle to find one aspect of European industrial, energy, or tech policy that we would want to even begin to regulate, particularly their environmental policy, that we'd even want to begin to regulate in this country to be like Europe.
Do you see any, so we're talking about a shift, is it going to get worse, or the pendulum already swung too far in the EU and it's going to start coming back the other way? Was anything learned from what could have been a disaster after the Russia-Ukraine situation with natural gas and everything else? Has anything been learned?
I hope we've learned a couple of things. First of all, when you think about big tech, when you think about AI, it all begins with hydrocarbons. We can talk about all the green energy we want. We can talk about all the renewable. There's no such thing as green energy. There's not an energy source in the world that doesn't depend on oil, that doesn't depend on the chemical industry to build out the infrastructure, distribution, transformers, storage, battery technology, solar technology, wind tech. All of this comes from hydrocarbons. So when you have a policy that's anti-hydrocarbon, that's anti-chemicals, first of all, that's just a complete contradiction. And when we think about AI in this country, the competitiveness of AI will be both technically driven and energy driven. And that energy needs to be able to come from a source that is reliable, that is affordable, and readily available. And when you think about that today, that's mostly natural gas and it's mostly coal in this country.
We just had Pete Buttigieg on, Transportation Secretary Pete Buttigieg. I don't hear that. When I hear a lot of people talk about the energy transition, I don't hear what you just said in their calculus. Do they know these things, and are they misleading the public, or do they not know? Have they not connected the dots between what they're saying they're going to do in one area, and AI and technology and everything else in the other area?
I can't speak specifically on what he said or what he thinks, but I can talk about reality. The reality is what we face every day, what we face as a manufacturer, what we face as consumers every day. And that is what we pay for every day. If you're going to have green energy, you have to be willing not only to pay for it, but to pay for the backup sources. Green energy, a lot of the wind's only about 25 to 30% efficient. I'm not anti-wind. We make the raw materials that go into the wind industry. But I'm not willing to pay for 2 or 3 sources of electricity and only have one of them operating at any one time. That's not going to keep me competitive. And that's one of Europe's big problems.
We got to have you back because they don't want to. There's a lot of people that are misleading. We are going to go and we have Tim Cook on the screen, Peter. So we got to go with this new Apple Store. But we'll have you back. Thanks.
That is Tim Cook waving to the crowds. Apple, in fact, opening the doors to its flagship Fifth Avenue store as the iPhone 16 goes on sale. Steve Kovac's there, and he joins us right now. And out comes Tim.
Out he comes indeed, and that's also, I believe I just saw Deirdre O'Brien, the head of Apple Retail, there with them. This is the tradition every year, Becky, taking selfies with the fans. I talked to a number of people in line who come here every single year just to do what you're seeing now. Meet Tim Cook, take a selfie with them. I talked to one guy who's been here every year. He takes work off, for example. But I'll also talk a little bit about the line here. Compared to the last 2 years I've stood out here for iPhone launches, the 15 and 14, a little bit shorter. Usually around the corner, they put the spillover line. It's a little shorter than it is or has been in the last couple of years. And this is coming, of course, amid questions and mixed data about demand for this iPhone 16 line. Just this morning, UBS put out a note just showing, again, those pre-order times are a lot lower than in years past. UBS called demand muted for this cycle, but also said, let's wait and see. Of course, we're waiting for Apple Intelligence to launch. That's going to come next month, at least the first couple features of that. That's not stopping Apple from marketing this, though. Behind me, the entire Apple Store has been redone into that glowing look. You can't see it as well now, but early in the morning when it was dark, it actually looked pretty cool. But that is a nod to this update that Siri is going to get with this new artificial intelligence features. But again, just because they're marketing it now, just because you're seeing so many commercials with it now, it's not ready on the iPhone yet. The big feature here that everyone I'm talking to in line, they're just in it for the camera, not necessarily for AI. I talked to one photographer, I talked to a bunch of people. They're excited just to upgrade their phone because they're Apple fans, and the AI thing, at least to the people I spoke to in the line, is just kind of a secondary bit, guys.
I wondered if they were going to show you, Steve, because I saw you earlier, and then I saw Tim Cook. You guys look like you're in some like band together, or you look like. Are you dressed exactly like Tim Cook right now? And did you do that? Is it some kind of cult, like a Heaven's Gate thing, or you guys?
That was not intentional, Joe. I did not talk to Tim ahead of time. I think he's wearing navy. I'm wearing black, so we mixed it up.
It looks the same. It looks the same. I thought you had like a roll of quarters in your pocket, and there's like a comet coming or something. That's very. Did you see him?
I didn't see him before.
I saw him earlier. That's amazing.
Steve, I gotta ask.
Great minds.
The camera and the battery life, those would be the two reasons that I'm interested in this. And I know that new iOS will eventually make these things work with all of the promises of AI, but it's been a while since a lot of people have upgraded, and maybe that helps Apple out in this cycle too. What do you hear on that?
Yeah, that's the other part of this. The real question is, all these estimates that we've seen. A couple weeks ago, Nikkei, for example, reported that Apple has already ordered 10% more phones than they did in the year ago period, and that could just be because the last major cycle we had was about 4 years ago when 5G came to the iPhone for the first time. That spurred a big upgrade cycle, and those people 4 years out are just kind of ready to get a new phone. So the real question is, Becky, how much of it is people just upgrading because their phone's 3 to 5 years old, or because they really want the artificial intelligence features that are coming to this new line of phones? And the latter is still a big mystery, but again, we know people are going to upgrade. Carriers are offering amazing deals. You can trade in, basically get the phone or the new device for free, or get an installment plan. So yeah, there are a lot of incentives rather to upgrade, but the big one, artificial intelligence, it's going to be many months before you figure out if that's actually going to pay off.
All right, Steve, thank you. Steve Kovac, who is there at the opening of the iPhone, or at the opening of the Apple Store for the iPhone. I can see that.
The color is different. I can see that now, Steve. You're right. But similar. Definitely dressed appropriately for the whole deal. Among today's other it's a really cool store.
It is a cool store.
Kind of glass and futuristic.
Right where FAO Schwartz used to be, right behind it.
Yeah, exactly. Could be bad luck being where FAO Schwartz. That's sad, isn't it?
It is.
They never came back, did they?
I think they have a brand. There's one at 30 Rock. There's a store there.
Among some of the other top stories today, check out the shares of Nike. The CEO, John Donahoe. See, this would be horrible if I left Squawk Box and the ratings went up like that. A lot of people say that would happen, but if you're a CEO and you leave and the stock surges, it's bad. Donahoe is stepping down from the sneaker giant after close to 5 years in charge. He'll be replaced next month by company veteran Elliott Hill. Hill started as an intern at Nike in the 80s. Donahoe helped the company build out its e-commerce and data gathering operations, and sales boomed during the pandemic, but definitely critics would say the company lost its way. Recently, a lack of product innovation at Nike and other issues. It was $180 to $170 stock, and this is the same level it was 5 years ago in terms of the share price, but up quite a bit today. FedEx shares falling. Look at this, what's happening here. If you're, what?
I don't know, you don't have to say everything you think.
I do. Well, look at it. It's down 40. It's down 40 points, is it?
No, I'm talking about your last comment. I'm still.
If you're a CEO and you leave and the stock surges, that's bad, right?
You really don't feel good about yourself.
Right, and I'm not a CEO, but in my case, it would be if.
Never mind. Let's get back to FedEx.
All right. How about this? If you are a Dow theorist and the transportation
Yes,
average
this is good.
doesn't do well, and the Fed just cut 50 basis points, and suddenly you see FedEx down $40 because package delivery is weak, but you're telling me it's for premium packages, right?
That's what the reports I've read have suggested.
So it doesn't necessarily mean the economy's
It
weak.
means margins are hurt. I don't know what it means for overall package. I know that UPS announced this morning they're hiring more people than they ever have for the holiday season coming up. So I don't know what that means or how you read it.
Lower margin delivery
And I
doesn't
think what
mean
Don
that,
pointed out earlier is that FedEx has been an outperformer to UPS, so maybe this is a reversion to the mean too.
Another stock mover, Lennar. The company beat estimates for its fiscal third quarter, but gross margins in this case could be responsible. 3.6% drop in the stock and lower per square foot revenue. As you can see, those shares down a little bit. Coming up, I'm not leaving anyway, so we're never going to know. It's the kind of factual.
Okay.
You know what I say. On a slab, Tom, leaving this place. The latest on the escalation of fighting in the Middle East, Israel and Hezbollah trading fire across the Israel-Lebanon border. Earlier this week, we saw that attack on the communication devices, both walkie-talkies and pagers. After a break, we're going to talk about where things could go next and whether things are going to be escalating or the prospects for de-escalation. Stay tuned. You're watching Squawk Box. Never an unspoken thought on CNBC.
At ollie.com.
UN peacekeepers in Lebanon calling for calm amid heightened tensions and violence between Israel and Iran-backed Hezbollah. That conflict is nearly a year old, which I couldn't believe next month is October.
I know.
I could not believe that because it seems so.
It's my daughter's birthday.
Still hostages. October 7th then? Know that. Yesterday, Israel's military said that it struck hundreds of Hezbollah rocket launchers that were getting ready to fire, and this follows the exploding pagers and handheld radio attacks against Hezbollah earlier this week. Thousands were wounded, at least 37 people killed. Israel has not directly commented on those attacks, nor has it taken responsibility, but Hezbollah's leader has vowed to respond. For more on all this, let's bring in Firas Maqsad, senior fellow with the Middle East Institute. Is there any way at this point, Firas, that this does not escalate, or is there some hope that, given some of the restraint, I don't know if you call it restraint, but you know, if we talk about Iran and what could have been a possible retaliation in recent months that didn't really come to pass, could that happen again, or is the die now been cast in your view?
Morning, Joe. Yeah, I mean, to discuss the parameters of the coming conflict, the trend lines first are very clear. There are clearly escalatory trend lines across the board, and both Iranian-backed Hezbollah and Israel are locked in a Mexican standoff. Israel wants Hezbollah to cease rocket fire across that border to allow for some 60,000 plus Israelis to come back to their homes. However, Hezbollah is simply unwilling to yield. And we have to understand that after October 7th of last year, Iran, Hezbollah, and the various proxies in the region, the militants that are under Iran's umbrella, declared a strategy of the united fronts, the unity of fronts across that Iranian-backed axis. So for Hezbollah to back away from its demand that a ceasefire in Gaza be declared first, that would mean to risk that entire alliance and that entire strategy. So I don't think that that's going to happen. And unfortunately, we're kind of locked into an escalatory cycle right now.
But Firas, the worst case scenario has not come to pass yet. And we've scratched our heads and asked about that. And people have said that Iran really isn't prepared to bring on the full wrath of Israel at this point in terms of its nuclear facilities and everything else. I don't want to say that that they fear Israel, but I guess that's what it is. Have they been less aggressive than you thought they'd be at this point, the Iranians?
Well, yes and no, because the Iranian strategy has always been to take the fight to Israel through 1,000 cuts rather than a knockout blow. They do not want a direct war with Israel. They understand that they will come out on the losing end of that. So they want to undermine Israel using asymmetric warfare, all these various proxies firing at Israel from Gaza, from Lebanon, Syria, the Houthis in Yemen. That is their strategy. So I'm not surprised that they've kept this relatively contained. Now, that said, I don't think that we're going to go from what is essentially up to today a border war to the nuclear option, which is Hezbollah firing its Iranian-made ballistic missiles, flattening parts of Tel Aviv, and Israel also flattening parts of Beirut. I think both parties are able to escalate, but keep this below the threshold of an all-out war. That said, Iran has made it very clear that if Israel threatens Hezbollah in any significant way, that it reserves the option to also jump in. And that's the worst case scenario, that kind of contagion that brings others in the region into this war.
What do you think Israel is up to right now in terms of equipment moving? And I mean, I don't know how you connect the dots to what's next. What do you think is most likely?
Yeah, I mean, great question. We see that armored brigades and commando paratroopers are being moved out of Gaza further north to that Lebanon border. Clearly, Israel here bringing a lot of military capabilities and firepower to the war. The big question is, will there be a ground invasion? There will certainly be an an uptick in the tempo, broadening of the scope of Israeli attacks, pounding Hezbollah positions, its arms depots, its fighters, targeting some of its commanders. But will there be a ground component? And will Israel try to create, or recreate, I should say, some kind of a buffer zone? I think there's some daylight between Israel's stated war objectives of being able to return its residents to the north. I don't think that they're going to be able to achieve that solely using the military. They need a political outcome here, a deal of sorts that the Biden administration has put on the table. But I do think that they're very much capable of degrading that ring of fire that Iran has created around them, starting with Hezbollah, Iran's ace in the hole.
And how much leeway or how much time does Netanyahu and Israel, how much time does Netanyahu have? How much time does Israel have for the United States to be, fully behind what it's doing? It's been almost a year, and we've seen it. That was the worry right from the start, that the PR war would be difficult for Israel to win.
The PR war is difficult. It has been difficult in terms of what's happening in Gaza, the utter devastation visited on Gaza, and the human toll of that. It would probably be more difficult if there are significant loss of life in Lebanon. But listen, the Israelis know us well. They understand that this is an election cycle in the U.S. They understand that the Biden administration, where they're very frustrated the fact that Israeli Prime Minister Bibi Netanyahu has not found his way to some kind of a ceasefire in Gaza, that would then also unlock a solution in Lebanon, one that the Biden administration has pretty much negotiated, but which Hezbollah and Iran refused to sign on to without a ceasefire in Gaza first. So there's a great deal of frustration amongst the Biden administration, but I think Bibi Netanyahu understands also the limits of the kind of pressure, the political will in Washington right now to force this to an end. So you can bring a horse to water, but you can't force it to drink.
Very good. For us, thank you, and we look forward to speaking to you again in the future, and hopefully at some point we're in a better place at some point, but I don't know what the prospects are for that, but thanks for your time today.
When we come back, we will go inside a pair of important labor stories. Former Commerce Secretary Carlos Gutierrez will join us on the potential fallout if East and Gulf Coast port workers can't get a new union contract by the end of the month and they go on strike. And after a week, how much is the Boeing machinist strike costing that company, and how long could the work stoppage last? That's next. Squawk Box will be right back.
Eli Lilly is asking people who took knockoffs of its weight loss drug to give the company access to their medical records. The company's building a case against businesses selling compounded versions of the drugs. Compounding pharmacies have been using a legal provision that allows them to make knockoff versions of Zepbound and Mounjaro when they're in short supply. A spokesman for Lilly confirmed that to Bloomberg it sent letters to patients asking for access to records, part of its ongoing efforts to monitor and evaluate the safety of its medicine.
Would people actually turn that over? Like I couldn't get access to it, and so somebody made me a cheaper version and gave it to me, and you would go after them, so I'm going to give you my medical records?
Yeah.
I would be concerned about the safety aspects from the compounding.
Really? So that you got the knockoff and you injected it into your bloodstream.
Yeah, I would be concerned about the...
People are...
But the idea that people would do this to begin with makes me think they would not be likely to turn over their medical records.
Right.
I would never inject it myself.
No, and don't go to Mexico for like butt implants either.
Yeah, I've seen the stories on that.
Yeah.
All right, Boeing machinist walked off the job last Friday. We want to know if they are any closer to a new deal than they were a week ago. To answer that, we turn to our very own Phil LeBeau. Phil, what are you hearing? What are you seeing?
They're not any closer, Becky. Settling in for a long strike. I think that's what most people are looking at when they look at what's happening out in the Puget Sound area between the machinist and Boeing. A couple of things to keep in mind as we look at where they are 1 week in. Furloughs start today for tens of thousands of Boeing white-collar workers. They're going to be rolling furloughs. So you're off for a week, then you come back, then another group are going to be furloughed for a week. This is all to save money for the company. The talks were held on Tuesday and Wednesday. Here's the bad news. The machinist came out at the end of Wednesday and said, yeah, we didn't really make any progress on the key issues of pay and restoring a pension. Reminding you again what the difference is between what Boeing has offered and what the strikers on the line are saying. We don't know if Boeing's or the machinist leadership is saying 40% for sure, but you know that every striker that I talked with out there, they said, I want 40% over 4 years. Boeing is only offering 25%. By the way, 96% of the machinists voted down the idea of a 25% raise. That's nowhere close to what they need. Wells Fargo out with a note saying, we think BA, meaning Boeing, needs to reach a resolution with its union by the end of the month or potentially issue equity. This is the problem for Boeing right now. It doesn't have the free cash flow that it would normally be getting from the planes being built and delivered. And as a result, its liquidity at the end of the second quarter at $12.6 billion. More than a few people on Wall Street think they're getting close to the threshold where they're going to have to make a decision of about $10 billion. Meanwhile, the credit firms are all warning that they may cut Boeing's credit rating. The debt, the long-term debt at Boeing, as you take a look at the stock over the last couple of years, $53.2 billion. Guys, if they cut their debt down to a junk status, the price and the cost of that debt is going to go up. So the next 10 days will be telling. Can they get a deal in the next 10 days? Sure, anything is possible. But reading the tea leaves and talking with the people that I've been talking with, listening to the workers on the front line last week, they're nowhere close. I think this could be a long strike here.
I mean, if that's the case, Boeing needs more cash. They better do an equity raise before any of these credit rating agencies lower their debt rating.
Well, that may trigger a cut too, Becky.
By
that may
raising
trigger
equity?
a credit rating cut. Yeah, that's the challenge.
There's a lot of challenges to this. I mean, have you heard the idea? Because, look, flat-out pay raises and going back to the pension set up the company for potentially disastrous results. However, if they do well, the workers should do well as alongside the company, and that's been the issue. The 25% raise being part of the problem, but they did that hand in hand while saying we're going to cut your annual bonuses. That seems like a kind of stupid thing to do. Why don't you say, okay, we're going to give you X amount in pay raise, and we're going to make sure that if we do well, you do too. So we will give you annual bonuses that are based on performance of the company. And we will go to the idea of giving you stock instead of reinstating your pension. You get a 401k and maybe you get stock that if the company
All
does
of it
well,
makes
you do
sense,
too.
Becky. All of it makes sense. You're 100% right. All of that are the moves that Boeing probably should make. And Kelly Ortberg wants to get a deal done. It's a question of whether or not Boeing says, you know what, it's going to cost us. One way or the other, it's going to cost us. So do we pay it now, and do we pay more in terms of bonuses? Do we say, look, we'll give you a little bit extra on the 401k? The pension is probably never going to happen. There's nobody I've talked with who believes that the machinists are going to get the pension back.
There's 10 million Americans that have a pension left these days. There's 90 million who are in 401k plans. The rest of Americans don't get anything along those lines. It is a question of safety, though. If you are giving stock incentives and bonus payments on a flawed system that was prioritizing speed over safety, is that part of the problem here?
That has to be reworked, and that is being reworked. But the flat out taking away the annual bonus, that really bothered a lot of the people that I talked to who are picketing right now. They sat there and they said, wait a second. Immediately you're taking away. There has to be a system that needs to be worked out, Becky, where if you are meeting certain quality control standards, then you get a bonus. And I'm not sure exactly how you work that out. But just flat out saying it's gone is that's a non-starter with the workers.
And the leadership of the union, how are they that out of sync with their membership? We're 90.
They've long been out of sync.
5%. You know, you're either totally out of sync with your membership, or it's like the smartest rope-a-dope you've ever seen, where you get them to agree to some package that you know your membership's not going to pass, so that you can then come back and say, oh.
Becky, I think they're out of touch. And I heard this when we were there on Thursday when people were in line getting ready to vote. As much as they are angry at the company, at the offer, there was a lot of anger towards the union leadership for not only accepting it, but then recommending that the rank and file approve it. You got to read the room, and the room is clearly that the rank and file are not happy with the leadership.
Phil, thank you.
You bet.
All right, coming up, much more on the markets following yesterday's Fed-induced rally. And top Apple analyst Tony Sacconaghi will join us on the debut of the iPhone 16. Stay tuned, you're watching Squawk Box. This is CNBC.
.com.
We're now hearing that potential investors in AI giant OpenAI may get some good or bad news today. Kate Rooney joins us now. What do you mean, Kate?
Hey, Joe. So OpenAI today is going to tell potential investors who is in and then who's out for this ongoing funding round that would value the AI startup at roughly $150 billion. That's according to two sources familiar with the matter. They asked not to be named because the details around this funding round are still confidential. I'm also told by a source that there is a minimum investment threshold. So OpenAI suitors are going to need to pony up at least $250 million to be part of this round. I'm told by a source that the round is raising between $6 and $7 billion at this point. Bloomberg and the information first reporting some of these details last night. A source also telling me right now that Josh Kushner's Thrive Capital is going to be the one leading this round. They're putting in roughly $1 billion through a special purpose vehicle, or an SPV. I am told by a separate source that MGX, so that's an Emirati state-backed fund, a sovereign part of the sovereign fund, is also looking to put money into this deal as well. And then there are others that have been reported. There is Tiger Global that CNBC has confirmed, and then reportedly Microsoft, Apple, and NVIDIA have all looked to get into this latest round at this point. This AI darling, you have likely heard of it by now. It's led by CEO Sam Altman. It has really ballooned in recent years in terms of valuation. This after launching a research-based nonprofit. That's how it started. It's really gone on to raise billions at this point. And these AI companies, they need a lot more cash than your average startup, for example. Building these large language models, which is what OpenAI does, takes massive amounts of computing power, which also takes a lot of cash. We're going to find out more today. I'm told OpenAI is going to be calling these potential investors directly. I'm kind of thinking of it as The Bachelor, as the rose ceremony. We will find out today who gets a rose, Joe.
Really? Kate, you're going to go there on there's a...
I don't even watch The Bachelor, actually, but that's
That didn't sound like
Shark
more
Tank
like Shark
pitch,
Tank, maybe.
where you get you find out who's going to team up with you.
Closer to Shark Tank, but yeah, I'm sure a lot of potential OpenAI investors are going to be checking their phones today.
Kate, the latest, if you really don't know, is and I know this, there's a Golden Bachelorette. Just started
I saw an ad for that.
a couple of nights ago.
You watched it?
I did not watch. It's on at 8 o'clock. It's on at 8 o'clock.
Limited offerings.
It'd be tough. So I'm not going to be a contestant.
Oh yeah, because you're not up that late.
It'd be tough. I have heard though, Kate, that she's very nice and that some of the men are very nice. Remember the last Golden Bachelor was a disaster.
That was not good. I didn't know if you knew what you were walking into there.
That guy was a disaster. He was a disaster. He was a sociopath.
Hopefully this OpenAI round goes better than some of these prior
You
batches.
have to stay up too late.
Yeah, exactly. That might put a crimp in my dates.
Yeah.
I'm married. I don't need him.
Kate, thank you.
Joe, you can't be on The Bachelor, are you?
No.
You are not a bachelor. Let's get back to the markets right now. The Dow and the S&P coming off a session in which they both hit new highs. That came after Wednesday's Fed interest rate cut, the first one in 4 years. And joining us right now to talk about the market's reaction is Andrew Slimman. He's Senior Portfolio Manager at Morgan Stanley Investment Management. Andrew, you thought we would see a strong market heading into the end of this year. You were looking for the S&P to hit 6,000. It looks like that's a more likely bet than it had been, but it's not necessarily working out because of the reasons you thought it would happen. You want to walk through what you see right now, where you think markets are headed?
Sure. So good morning. So look, the market got back to the presidential kind of handbook cycle of how it trades. Once Joe Biden dropped and we had a less known candidate. Prior to that, the VIX all year was very low because both candidates, we knew what we got. And once that happened, the VIX started to spike, which it normally does in a presidential election year, and then until the election night. And that's when the market gets back to fundamentals, and that's when we get a rally. So I understand the Fed cut 50 basis points. That got the focus. I'm surprised by the magnitude or the speed with which the market has so positively reacted. And really within the rally, it's been so led by what I'd call high beta value and growth stocks. That has surprised me. Although, I'm obviously constructive on the year overall.
I know you think that the market could go up after the election just based on the idea that, okay, the volatility's gone, we know what we're getting. What happens if it's either a blue wave or a red wave and one party takes the presidency, the House, the Congress? Almost every guest we talk to says, don't worry about the craziest provisions that these candidates are talking about economically because there's no way that's going to happen. What if it does?
Sure. Look, I'm no expert in that area. I've got to go with what the experts say. They say it's a low chance. I think if that were to happen, you'd see a substantial correction in the market because of increased uncertainty. I think the reason the market tends to rally after the election, and I think that's very powerful this year, is that fundamentals are pretty good, and the bottoms up number for next year for earnings is $280. Now, Wall Street top down is a lot lower. It does remind me of last year where the bottoms up, which is guided by companies, are saying a stronger economy to start the year than what top down does. And I think that's why the market will focus on that after the election. But I do concede you're absolutely right. If we get a sweep, we'll be more focused on Washington than back to fundamentals.
The 10-year is back above 3.7%. 372 is where we're watching this morning. You say that's a sign that inflation could come back.
Well, yeah. This is, again, when I go back, I'm surprised by the acceptance of what the Fed said, which is lower inflation, economy soft landing. That surprises me because usually when you get this type of cut, there is some anxiety that perhaps both sides of the ledger, low inflation and soft landing, doesn't work out perfectly. But that's not what rallied. What rallied is, yes, they're going to be right. And now you're seeing the 10-year move up, break-even is moving up, which suggests a hint of maybe inflation will come back at some point. And I think that's a possibility. So to me, it's just a question of positioning is now very optimistic, and that gets me somewhat concerned that what could happen. The chance of we get an economic data print that says hard landing, or inflation print that says maybe it's not so obvious inflation's coming down. That's what worries me.
In terms of a trade, you said you'd add to some of the semiconductors. Which ones and why?
Well, I just think, okay, short term, very short term, we watched the beta factor, and the beta people are just chasing risk, and that's not quite overbought yet. Now, that was very oversold. People were buying defensives going into the Fed announcement, so it doesn't surprise me. Defenses are selling off and risk is coming back. So I think what's going to happen here is people are going to look around and say, well, what's still down a lot from where they peaked out in June? And I think the semis, whether it's a land research, applied materials, those stocks are still down 20, 30%, 25, 30%. And then, I think NVIDIA is still down, 15%. So I think the semis will be a short-term play to chase this kind of rally. And I suspect in, a week or two, you'll get the defensives that are sold off enough that people will start to revisit. Maybe we're getting a little bit too optimistic.
Okay, Andrew, thanks a lot for your time.
You married Andrew?
Because Joe's in the market.
I am.
You are married.
You want to sign him up for Bachelor?
No, just, seems handsome.
I think my
nice.
kids want the Bachelorette.
Seems nice, doesn't he? Successful.
I will say I'm more drawn in because the Bachelorette, or the Bachelor, the Golden Bachelor was a failure. I'm more interested.
Carol.
I know that guy was a. Ooh.
You're allowed to say that?
Dirtbag?
That's okay.
Yeah, it's like the inside of a vacuum cleaner, right?
Yeah. That's all.
That's what I thought.
Hey, where's he now? We don't know.
Andrew, thank you.
Thanks, Andrew. You're next.
Where's who?
Oh, no, he's not. He's married.
Okay. When we come back, East Coast port workers counting the days till a possible strike. That could come at the end of the month. After a break, we're going to ask former Commerce Secretary Carlos Gutierrez about the nationwide economic consequences if workers decide to walk off the job. Right now, as we head to break, let's take a look at where Bitcoin and other cryptocurrencies are trading. Bitcoin jumping close to 6% yesterday. This morning, above 63,000, 63,461. Stay tuned. You're watching Squawk Box, and this is CNBC.
should you lead?
Port of New York and New Jersey executives tell CNBC that they are making preparations for a potential dock worker strike at the end of this month. 5 of the 10 busiest ports in North America could shut down if workers can't get a new union contract. Some businesses are trying to get ahead and bring in more imports now ahead of that deadline. Joining us right now to talk about the impact of all of this on companies, consumers, and potentially on inflation is Carlos Gutierrez. He is former U.S. Secretary of Commerce, also a CNBC contributor. And Carlos, I think in some ways we're thinking we have beaten this inflation situation, but if you look at the potential for a strike here, this is hugely concerning, not only what it means for inflation, what it means for the ability to get goods in, what it means for a lot of things in our country. Why don't you lay out the situation? If this happens, if these ports go on strike, it's about half of the incoming ocean-going cargo that we bring into this country that would be shut down.
Yeah, that's right. Hi, Becky. It's about 50% of the imports that come through the East Coast. You know, this is, on one hand, it's shortages. Every day that there's a strike, you have a compounding effect, and it's not one day of a shortage. It kind of adds up to a week. So it's big in terms of the impact. And it's not only the shortages, but it's the costs. The cost of the freight increases because you have ships sitting at the dock. They're not being unloaded, and that just increases the cost of the goods coming in. So it's bad. I don't think this is something that will make the Fed raise rates again, but it's going to have an impact, and it'll impact families. It'll impact, again, it'll just remind people of the period of shortages and the period of inflation. It will have an impact. There's no question. I think the thing here is to look at the union and the companies, and I've never been a union buster. I haven't dedicated my career to that, but there's a sense here, at least I feel like, to stand against science, to stand against innovation. That's not a winning proposition. So the union here can have a kind of a tactical victory, but long term, it's a strategic defeat. And this is why companies are constantly looking for areas where they can build plants without unions. So, and also it's hit them when they're down. Inflation's coming down. Nobody wants it to go back up. Now is the time to hit them. So I find that they're totally overplaying their hand. I don't see the option. If this is where they remain, no new technology, 77%, I don't see what you can do other than take a strike.
The idea that there are so many companies that are trying to bring in excess inventory now to make sure that they don't get caught with shortages, could that potentially be covering up economic weakness we wouldn't see otherwise, or is it too small of a number?
Well, it does, impact a lot of companies. When you have stocking of retailers, you're just going to sell less the following month and the following quarter. So, you're bringing sales forward. And this would show up in the numbers slightly. It won't be big enough, but yeah, inventory increases cover up potential softness in the economy, because increasing inventories doesn't mean that you're getting more demand. So there are ripple effects everywhere. Nobody likes loaded warehouses. That's terrible for the future. So this isn't good for anyone. And again, it just comes down to, at what point do unions or the longshoremen realize that a compromise here is good for them long term? And they're just totally overplaying their hand.
If they're overplaying their hand and they go to a strike and it shuts the economy down, maybe they're not overplaying their hand. They have a pretty strong hand.
Well, okay. The overplaying their hand long term. Today, we don't have one single port in the top 15. So we're already known as having, not the best ports, inefficient. I think our top port is number 17 in Long Beach. And even Long Beach is known as being inefficient. CapEx projects take 5 years, and a lot of it is because of labor. So eventually this will come back to bite them. This is the type of thing that continues to give labor a bad name. Labor has a role to play, and I'm not saying let's get rid of unions, but the idea of hitting when a company or an economy is down is going to backfire. So yeah, they've got a good hand. They'll have a nice tactical victory if they win here, but a strategic defeat long term, because it doesn't play well for the union movement at large.
There were other people who looked at what happened with the West Coast with its new deal that it came out with, and I think the raises were something closer to 32 to 35% there. Thought that would be a template for what we'd see with the East Coast and Gulf Coast ports. Why do you think that has not been the case?
Well, it's a good point, because it was half. The increase was half on the West Coast, and you can make a case that those are the largest ports, Los Angeles, Long Beach. I think the longshoremen see an opportunity here. They got a huge increase in the 2018 contract, and they believe that this is a place to squeeze. And they've been very vocal about it. It's almost as if though the rhetoric sounds like it's coming out of the 1960s. The union movement, that we have to find a new way to move forward. Unions cannot be against technology. They can't be against innovation. They can't be against progress. So, the government won't get involved, and President Biden has said he's not going to touch it. Of course he's not going to touch it. But how about public-private partnerships, reskilling, retraining? There has to be some kind of maybe payment for that reskilling. But this can't continue to go on. China, Asia, European ports are moving forward. They're very efficient. And we're kind of standing still. So I do think that the West Coast was left, I won't say off the hook, but I think the union sees an opportunity on the East Coast, and they sort of proved it the last time around when they got the 77%. Now they're asking for the same 77%. So it's hard to say that, things are better now than before, because they've been hit with inflation. But it's, I think we'll probably see a strike. Unless a miracle happens, a strike, and maybe a strike is the right thing, unfortunately.
Secretary Gutierrez, thank you.
Thank you, Becky. Good to see you.
You too.
Coming up, Apple's iPhone 16 hitting the stores. We're going to get analyst Tony Sakanagi's thoughts on the new device and ask him how much he thinks it could move the needle for Apple investors. Stay tuned. Watching Squawk Box on CNBC.
Insurance.
There you go, iPhone 16 going on sale earlier this hour at Apple's Fifth Avenue flagship store. We're a bit north of here, northeast. But some key AI features missing from the device. Joining us now, Tony Sacconaghi, Bernstein, senior research analyst. That is the next thing, I guess, Tony. It's not a car, it's not a TV. We've been waiting for all these different things for years. Some transformative thing for Apple, and the stock hasn't needed it. The company hasn't needed it. Great new iPhones have done it. Is this a great new iPhone?
Good morning, Joe. The phone itself is what I would call a standard upgrade physically. Better camera, faster processor, a new camera button. But the real feature, which, as you mentioned, is on the come, is having Apple Intelligence, which is its version of AI on its phone. And those features will not start coming to the US until next month, and many of them won't roll out to the rest of the world until later this year or even next year.
In your notes, you seem to be saying that if the lead time seems shorter, which means there's not, some people have tried to say that it's people aren't as excited about getting it. You point out it's both supply and demand. Maybe supply is better, but what you just said just now seems to be arguing that it could be less demand than previous upgrades.
Well, typically investors and even Apple doesn't really know what the demand trajectory is looking like until, November. So it's still very early days. But there are some questions around the trajectory of that demand. Specifically if these features, which are only a software upgrade, they're not a hardware upgrade, if they only come out in October or in other countries come out early next year, will consumers wait? And I think that's a big question. Our perspective is that Apple's installed base is about 25% larger than it was in 2021 when it had its last big upgrade cycle. And so accordingly, there is pent-up demand. If upgrade rates go back to where they were before and the installed base is 25% higher, Apple could sell 25% more phones. Is that going to happen this year, or might some of that get pushed out to next year? I think that's really the big question.
How about everything else, Tony? You got 50 basis point cut that should help multiples. Is the stock? You can see it hasn't really ever backed off, no matter what. Would you buy it here?
I think if you have a 1 or 2 year horizon, I would buy it here because I do think this Apple Intelligence cycle will be pronounced. Historically, there is a bit of a seasonal trading pattern, Joe, where the stock typically does well in the April to September timeframe in anticipation of an iPhone release. And then it kind of treads water for a few months as people digest that anticipation and try and figure out, okay, is this really going to be a strong cycle? So I'm not sure this is up and to the right over the next few months, but I think if you're looking for something over the next year or two, Apple should benefit from Apple Intelligence.
All right, we're going to end it there. Thanks, Tony. Good to have you on. And that's it for us. Make sure you join us next week. Squawk on the Street's up right now.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber at Post 9 of the New York Stock Exchange. Kramer's at One Market in San Francisco, wrapping up this blockbuster week on the West Coast. Futures mixed as we come off the 39th all-time high of the year for the S&P. Bunch of corporate news today. Nike, FedEx, Lennar, Microsoft. Fed speak resumes today. Harker at 2 p.m. Eastern. Our roadmap begins with that shakeup at Nike. John Donahoe is out, replaced by a longtime Nike veteran, and shares are rallying ahead of the open.
Plus, FedEx fails to deliver. Shares of the shipping giant tumbling pre-market. This after posting a significant decline in profits and cutting its full-year guidance. And the AI and data center power surge continues. Constellation Energy is planning to restart part of the 3 Mile Island nuclear plant. Why? Well, they want to sell the power to Microsoft.
Let's begin, though, with the changes at the top of Nike in the wake of challenges in China and some heightened competition. The sportswear giant says CEO John Donahoe will retire after nearly 5 years at the helm. They'll be succeeded by company veteran Elliott Hill, effective October 14. Hill has spent 32 years at Nike, including a stint as president of Consumer and Marketplace. Throughout the month, we've been talking about Donahoe's future at Nike. Take a listen.
So you're on the record now calling for Donahoe to go? I don't want to put words in your mouth.
I'm saying that if you look at that chart, you think that it does have a real Starbucks-like feel before Brian Nichol came in. And there has to be a bit of a revamping. How about a revamp?
Revamping. Yeah, running out of time, one would think.
Yes.
Donahoe. All right,
he's out of touch by David. He's out of touch. He's out of time. What's happening is that the erosion of Nike matches the erosion of Intel. These are companies that right now they've lost their way. What?
That's rough, man. That is rough. Isn't this enough to satisfy you? It's not good.
Snickers satisfies me. I always like to say, who's next to go? Who's not cutting it? Damn it, I'm getting Nike over and over and over again because they think that a technologist, someone who is a consultant, is running the company, and they're getting taken to by New Balance, by Adidas, and by Vans. It doesn't stop. This is the drumbeat, David. Donahoe.
You literally tweeted a picture of you wearing them this week.
Well, I know, but that was the Air Force One Special Bob Kraft anniversary, and those can be run with formal wear.
Jim, Investor Day's coming up November 19, and some discussion of what they can put together before then.
Look, they're in trouble. Now, it isn't shocking that they're in trouble because you looked at the stock chart and it says they're in trouble, but there were so many mistakes made by this man that you kind of wanted to figure out, did they think he had some sort of master plan that nobody knew? He didn't. I think that this is a welcome change to bring someone back in. But what they really need to do is try to figure out how to make better shoes, which somehow got lost in the shuffle.
All I know is if Kramer just changes his tune on me, Carl, and starts to say Faber's got to go, then that's gonna be it. That's gonna be it. I guess I'll start my exit negotiations immediately.
Faber's good.
Okay, good. Thanks, Jim. This is two now. And listen, I know we're overstating it and/or any real impact. Obviously, you're reflecting what you're hearing, Jim, when you listen to a montage like the one that we just heard. But it is interesting, of course, at Starbucks, now Nike. I don't know if there's more to come. I do know there's one more name on your list that you continue to go to as a particularly negative performer. I'm not sure a CEO change there is going to help. I don't mean to take us off Nike. Obviously, I'm talking about Intel, but these changes are significant. It seems less clear in your mind, though, that the incoming CEO at Nike is going to have the same effect, perhaps, that you think Brian Nichol will at Starbucks.
Well, look, I think that the Chipotle model works really well at a place like Starbucks because it's about service, it's about hospitality, it's about quality, it's about employment. I think that whatever you try to do at Nike has a lot more to do these days with New Balance and with Adidas and with Hoka, with on. I mean, these places are just doing so well. And we have to spend some time on this notion of direct-to-consumer versus actually touching and feeling and putting on a shoe. Because I don't know who on that board thought it would be just a great idea to have it out with Foot Locker. You may not like to go to Foot Locker stores, but now they're run by Mary Dillon, and you better start liking it because she's well ahead of the curve and is better than you. They forgot who their customers were. I think they've forgotten who their outlets were. I think they just thought about themselves, and the fault was in themselves, not in the stars.
Stock may be moving to the upside today, Jim, but of all the sell-side reports we read today, only Wells is the one that moves. They do they maintain overweight. They have some targets. I think it was Cowen today, Jim, that pointed out EBIT margins since 2019 down 100 basis points.
Yeah, look, there's just so much is wrong. What you would want to do if you were this gentleman who comes in, Elliot, I think what I would do is I'd call all the companies that had been great partners of ours. I know that they were trying to repair the relationship with Mary Dillon at Foot Locker, but say, look, we've made mistakes. which, by the way, is okay to say. It's never a sin to say that you made a mistake. It's a sin to continue to do the same thing. And we made mistakes. We didn't judge how much you could be our partner. We want you back in. Please tell us what we can do to be better partners. We know we can't just take, we have to earn back the space that you have given to all these other shoe companies, and we're going to try to do that. But right now, I've got to tell you, they have lost space. They were about to lose space to Under Armour.
Jim, you know, I'm looking at the UBS note here.
They're losing space to Vans. I mean, Vans are like, they were like 7 years ago, Vans.
I'm looking at a UBS note here, and the analyst, I mean, he is named Jay Soul, so you know he knows his way around a sneaker.
He's actually a very smart guy, but that's very good. He laughs.
Yes. But he says, you know, again, given these deep direct-to-consumer challenges and the company's recent commentary, the market is assuming Nike will start to make a much bigger effort to regain momentum in the wholesale channel. Interestingly, he writes, Mr. Hill was part of the Nike leadership team that set a goal to dramatically reduce their wholesale partnerships. And so he wonders and questions whether he will look to reprise or change that direct-to-consumer strategy.
Look, I think during the period of COVID, you didn't want to go out of your house to go to Foot Locker or Champs. And that makes sense. And I think a lot of people made judgments during COVID that seemed to be lasting ones that turned out not to be. I'm not talking about Amazon and Jassy saying, listen, you got to come back to work. I'm saying that maybe you felt, you know what, direct-to-consumer turns out to be pretty good. We're doing better than we thought without all these different retailers who, frankly, we don't even like to walk into because the stores aren't to our liking. Nike started thinking it was better than Nike. The great thing about Nike was that it was a competitive company that never always wanted personal best. And they got away from personal best. In the meantime, you have people like Deckers who spent a fortune in years on Hoka, and then suddenly it breaks out. You have New Balance that never lost its tech change, that got reinvigorated, which is amazing. And then you have On, another outfit totally out of nowhere that people didn't see coming. And meanwhile, Nike is trying to figure out how to get that shoe to you faster at home when they should have been thinking about how to stay at the top in the scrum, which is what they were.
Jim, two things. One is this knock on Nike that they've spent too much time worrying about where they're selling stuff and not enough time worrying about what they're selling. And then this notion of blue chip management shuffles at Boeing and Starbucks and Nike. You could even go back to Disney.
Yeah, but look, I think that all of these are places where if you look at their charts, they tell you we are part of the stock market that people don't like anymore. We are just doing things, and people think we all pay ourselves way too much. Every one of those companies, by the way. And all we do is win, and the shareholders lose. And I think it's great that boards are waking up to the idea that, wow, we are really underperforming. Maybe we got to shake things up. And by the way, maybe we should shake up the board members who got us here, and shake up the other people who came in and recommended the strategy. The DTC strategy was a very good strategy, like Walmart developed the DTC strategy, but Walmart never took its eye off the stores, for heaven's sake. And when I go back, I did a lot of work on Nike behind the scenes, and what I hear is so damning. It's that the product isn't as good as it used to be. And that was something that you never heard. You might have heard distribution, maybe not good, but the actual product, and I have to believe that Buck Knight heard the same thing I did. He talked to a lot of people. The quality
so how long does it take to turn around a product then that in the eyes of the consumer perhaps is not what it once was?
This is multi-year because you need because the other guys, Nike gave these other guys in this small window that was this man's tenure, Nike gave up a huge amount of shelf space. It's very hard to get that shelf space back. Very hard. Especially because the other companies are all really good at what they do.
We're going to talk a lot more about it today, of course, Jim. Let's move to some broader markets as well after that Fed cut-fueled rally, which did result in record highs for the Dow and the S&P. NASDAQ up 2.5%, helped by Tesla and NVIDIA. Jim, Russell, 7 days green. Got BMO going to a street high 6,100.
Well, look, there was this weird delayed reaction. We got a 50 basis point cut. It had been telegraphed. As long as something like that is telegraphed, given to the Wall Street Journal, so we knew in advance, then you know it's just good news coming, and we get the good news. I'm used to seeing the good news being sold off. Well, that did happen for the first 2 hours, but then I think people realized, well, let's take a look at what's come down a lot. Let's buy some tech, and tech has come down a lot. There's a lot of tech companies that I think are viewed now as being part of the AI joke. And they're in on the AI joke, and you're not. And I completely disagree with that. I think AI is incredible. But I do feel that other than Mark Benioff at Salesforce this week, I didn't see anything that made me think that it's going to set the world on fire. Not yet.
Yeah, you know, it's funny, Jim. I continue to hear similar things now, which is that in the enterprise, they're not finding at this early day, and this will change, but right now, not finding a lot of use cases. And in fact, interestingly, I've been told by a couple of consultants at least that it's making employees who are trying to work with it less productive, or at least those who are trying to implement it, less productive right now as they search for applications.
David, one of the themes of Dreamforce, was the main reason why I came out here, is that Copilot is not doing what we thought it would be. The Copilot's not as helpful. Copilot, the novelty's worn off. Now, I don't know. This is Microsoft. They're going to figure out something. But David, you're right. I mean, I think there's a sense of, is that all there is? And if that's the case, then there's a big rebellion within the whole food chain that leads up to NVIDIA. I think that it's the failure of the imagination of people who have AI, rather than the fact that AI is not doing something great for them. You have to figure out what to do for it. It doesn't just like wake up and change your brain. You don't get a new cerebellum. Say, hey, give me the new cerebellum. No, it don't work like that.
While we're on Microsoft, Jim, this headline that crossed about an hour ago, the owner of the shuttered 3 Mile Island going to spend $1.6 billion to restart it by 28 and funnel all of the power to Microsoft.
Biggest story out there. Now, it's funny, they've been talking. When I first heard it, I heard it from a utility executive, and I said, like, no, see, that's like the worst nuclear accident. But of course, there was one of the towers, one of the units was working until 2019. Right. This makes a ton of sense. These things take forever to build. I mean, the ones that are being built right now are 2032. So this one, a nice shortcut. And, David, nuclear power, you know as well as I do that nuclear power is the cleanest, safest power.
Yes, and we talked about this a lot lately. In fact, I think we briefly mentioned it yesterday as well. And the recommissioning of these...
3 Mile Island, we be kings.
Yes, recommissioning of nuclear power plants, which is occurring. And to the point, and Carl just shared that news, all of the power is going to go to the data centers that Microsoft is using to run, by the way, the GPUs and the large language models that power, for example, it's Copilot. But again, back to the idea, nobody seems to question, Jim, that at some point this technology will be transformative for all of us, including the enterprise. It may not be there yet, but there's nobody questioning, oh, it's a fail. Not at all. It's the opposite. They're like, oh, this is going to change everything. It may take a little time.
Yeah, I was at an excellent, and we do these really great things. We had this absolutely great CFO dinner last night, and when I get around and talk to the CFOs, here's what they say. It's like, they all try them. They try Gemini, and they try Claude, and they try ChatGPT, and they find that every single time they go back to it, it is better. Work in progress. It's kind of up to where like 8th, 10th grade. So David, I think it's going to get a college degree, probably gets SUMA, gets into good graduate school, and then just has a fantastic time and makes a lot of money.
Yes. And then we get into the big existential questions. I was at an AI dinner last night where they were entertaining some of those. What is identity? What is personhood? Can AI have consciousness?
Well, AI wears a tie.
Oh, really? Follows your lead.
Where's a Brioni? Make yourself look something. Make yourself look better.
And it's Brioni.
What is that? What is that you're wearing there?
Okay, good morning, retail traders. We're back at the first support. So I'm thinking we can drop a little bit more, but I always say that. But I got two other supports. I'd really like to see it drop about $3 from here. The SPY. We hit the 200. You see it on the 5-minute? I'm going to start incorporating that 5-minute a little bit more just to see how the moving averages react to it compared to the 1-minute. So I'll go back and forth between the 1 and the 5. There's some buys coming in. Somebody's buying it. Somebody's buying it. Probably one person right here at 185. All them 500s, 500, 500, 500, 500, 500, 500, 500. 1, 2, 3, 4, 5, 6, 7 of them. So there's 3,500 easily right there. But it didn't move the needle. So that could have been a mistake. They didn't call a washboard. It's a triple bottom off these two black crows. So we might get us a call here. Good morning, Luna. Good morning, Patrick. Good morning, everybody else on YouTube. Good morning, room. Mike put some good information in this morning. Recalibration, I've heard that over and over and over and over. He might have saw something that he didn't want to admit to because we cut that 5 points. I thought it would send the wrong message, and I still think it, but they're buying the dips. Get my water here. Make sure you drink enough water. That's key to good health. I drink about 7 or 8 of these, 7 of them for sure, every day, 16 ounce. One big one before I go to bed. I was up every hour and a half pissing last night. It's the only bad thing about it. Fibonacci. Yoko, Fibonacci's. On the 5 minute. We got the 200 right here on the 5 minute. Now, what did I just say earlier? I must have been looking at the 1 minute. What the hell was I looking at? We got a double bottom here. High or low. Oh, that's a 15 minute. Okay. On the 15 minute, we could hit the 200 and bounce up off of it. There's some more 5s, man. They're buying the shit out of this at this support level. This is probably just one person doing all this. See it all the same price? That tells me that somebody bought it at 94. What was this other one down here? 84, 85. September the 23rd. Oh, these are going to be cheap. Let me see. Yeah, these are going to be cheap. 572 strike. Or the 570 if you want to spend a little bit more money. Ordered 5 of them. This is for the 23rd. I'm going to put a line right here. Or off this and remind myself that that's the $200 SMA on a 15 minute. Is that what I said? Yeah. price line on there and change that color. They're only selling a 500, so I don't know what I'm kind of confused. These are big lots coming through here. So how many is that? Oh shit. They want to keep this up. I can tell by the tape. Snake breakout symmetrical flag, so we should have a pop. What time is it? We got 7 minutes. Tempted to go make me a little cup of coffee. Ooh, it dropped. Oh, this is going to be good. This is going to be fun today. So we dropped. Now we got a double bottom. So I'm going to put a support here off this shoulder line at 5690. See if we trigger that right at open. I did not hang out at Diddy's place, Obama. I know you did. Little pervert. Everybody knows Obama was gay, right? And a crackhead. So we had a little pullback on FedEx, which gives people a lot of, makes them think twice about if this economy's all that good after all. It could be mismanagement. There's some selling going on for sure. A lot of early morning. I mean, this tape is definitely confusing this morning. It's like someone had second doubts here. I mean, that's big blocks coming through there, 500 at a time. I'm going to give it some time before I get too crazy with it today. We got 3 more minutes. I was gonna make some coffee, but I'll just wait here. I got a steak that I've salted. It's gonna be about 15 hours. So I can't wait I'm gonna do a cold sear on it. Where you put it in the pan and then you turn the heat on high, let it come up. I'm gonna cook it that way and see if I can. Still ain't got it down to perfection yet. This will be number 4. I might go back in there and buy a couple more of these ribeyes.
Get a little technical and dive into some charts. Firstly, thinking about S&Ps and options flow, Mr. K.
We're not flat, we're in the red, but I have a feeling we're going to try to run this. I don't know. This market's been buying the dips, but I'm a little confused with the tape this morning. We break out, we've got a double top to the 200. Odd. Market's undecisive. Bitcoin's correction ends but must hit a key target of 70K. There we go, off to the races. These things are, got to move them up to 570. Damn it. So I'm watching the SPY calls, September 23rd, strike 570. I might, if I can get these at $1. The 571s are at $1. They've got a little bit more volume on them. It's a bearish candle on the 5-minute. Nvidia at 117, Apple up, Amazon up. Walmart up. These are high volume movers today. The Donald's at 1370, down $1. I'll be watching the Donald. Meta is flat. Right now we got a tweezer bottom, double bottom. On SPY. CRM's up 388. CrowdStrike's up. Somebody's trying to push it up here. I didn't get in it. We got 3 white soldiers. I would have got out of it there though. They hit the 200 SMA. So we're going to squeeze and retest this first candle.
Taking over that top spot. He will be the new president and CEO. Elliott has a long history with the company.
So Nike,
for more than 3 decades, 32 years.
Nike's got a new boss.
The hope is that he will bring Nike back to its glory days. We know that Nike
These
has
people, I mean,
challenges.
when they're in trouble, they go through CEO after CEO after CEO.
Its glory days again. So he will
Boeing's the one that's really screwed up. Nike's just got competition now. And they went woke. That was their biggest problem. They did a tranny commercial. I was, what the hell's wrong with you people? Marketing 1%, not even 1% of the population. If I was CEO, I'd be marketing my my primes. I mean, I'm not going to, in a frame shop, I'm not going to go out on the street and try to sell somebody a $150, $200 picture frame to somebody that's on welfare. Your everyday Walmart shopper. They're definitely pumping this thing up. I want to see it come back down one more time and take this trade. I'm seeing a lot of bearish flags here. But there you go. Now right there, they just pumped it up. It was down here, and all of a sudden they got above that candle there. Manipulation. That was a manipulation buy right there. I'm going to move these to 571 again. Now we're above the 200, so we're definitely, well, we were bullish. Meta had a good run yesterday. A real good run. So to come back to the old support, which is 553, man, it's way up there. That's up $6. I think that was a little bit overdone too. We got the 9 crossing the 21. So we're getting ready to squeeze any moment here. I don't know which way, but I'm just going to hold my britches here and wait. Be patient. I think today needs to have a little bit of patience involved. So start buying some right now. They did all their positioning pre-market. We got 3 black crows with 2 spinning tops and a hammer. I wonder who makes tampons. I ought to check out that stock. Okay, we're going to be coming to something right here. Fruition of whatever's going to happen. got a 1, 2, 3 down here. Come on, you bitch. That's bullish. That's semi-bullish. Couple long leg dojis. It's been 10, almost 15 minutes. FedEx plummets after disappointing earnings and guidance. And that's their number one stock they pumped yesterday. If I'm going to buy any of them, it's going to be FedEx. Because UPS is has bad issues. Then they come out this morning and said UPS is going to be hiring a bunch of more people than normal for a Christmas time where they really pack them up. Okay, there we go now. We're going to find out right here how tough we are. I'm going to try to get 93. Okay. I'm in. Now I'm going to get ready for the sell here. So I got 10 contracts at 93 cents. Now I'm going to get ready to push the sell. Three black crows. break it. I almost grabbed 5 more down there, but so far it ain't working out too well. Meta's bouncing. Back to even. Back and forth, back and forth. What'd I get these at? I got them at 92. Okay. That's good. Not 93, but 92. It's going to have to do something here real soon or I'm going to get out of these suckers. So far it's held the tweezer bottoms twice. We're getting ready to squeeze. It's having a hard time making up its mind. Yeah, I'm not sure about this. If we maintain this high or low. Nope. It's not going to do it. It's been too long. 5, 10, 15, 20, 25 minutes. We've got a 1, 2, 3 here. Come on, baby. Not looking good. Bastard. Quit pulling my leg here. Seems like a lot of uncertainty right now. It's been 27 minutes. Yeah, it's not. Down 100. Ooh, that don't help. That didn't help. That didn't help. They're bringing it down. Big time. Apple stock could gain from Friday's S&P rebalancing. God damn it. What to do? I think it can get worse. SPX is at support 569081.
Be looking to the highs that we saw up around 101.80, for example. The September highs are the next big hurdle to get up above. But this is a market that's been trending lower, a series of lower highs. There you can see it since the middle of screen there, up to 8.5 now lower highs. I mean, this is a market that's kind of cascading and recently taking out those end of December, beginning of January lows as well. So, yeah, again, off the most extreme levels, but no rejection as of yet.
Well, bonds also have faded, turned around with just a tiny bit of weakness in treasuries, yield creeping. If you look at a 10-day chart for the 10-year yield, then I think there is something kind of interesting if this thing trades much higher. If we can get to a multi-week high in the 10-year by the weekend, that would be interesting. And that's at 377. That's not far away.
You know, I think a lot of people are a little
Tempting to
surprised
get out of
see
these
yields
right
edging
now,
up
but
after the Fed cut 50 basis points, Oliver. I feel like
I'm going to give it just a little bit more time.
that have been built into this market headed into the Fed, where we saw some investors buying bonds, and you know, we saw the yields that had come off a little bit.
Because it ain't
into
working
what was
out
a
too well
3.5
here.
into the Fed, I think,
Exactly.
and retested
Yep.
the lows from the week before, I think it was, and then actually,
And did actually move through them a little bit.
by a matter of ticks.
Totally, but
yeah.
there it is. There's the 10-day chart.
Yeah, but
I mean, look,
so maybe some investors kind of recalibrated and getting out of that trade where they were, you know, again, buying some insurance, buying some bonds, some futures.
kind of by definition, too, the rate cut is sort of your classic example of like buy the rumor, sell the news, because you get a very different bond market on each side. We got the bull steepener cut.
Buy the rumor, sell the news. I said that the other day.
You know, of some kind of cut, all yields were coming down, but then when you actually deliver the cut, it's like, well, we just
Yeah,
kind of
this
gave
ain't
the
working
economy
out.
a little, you know, shot
Come
there.
on, baby.
And then all of a sudden, we've got a bear steepener now. It's like the yield curve shifted a good amount here the last week, and I think to your point, a lot of people didn't expect that.
Yeah, maybe that's what's got the dollar kind of, you know,
Exactly.
holding up, faring pretty well, right?
There you
If
go.
we had seen yields continue to crater, in theory, you would expect to have seen the dollar kind of open up or see some of that follow through also. But that gives us something to keep an eye on next week, I feel like, because again, you know, if we were to see kind of return of the, you know, concerns about some of the demand. And you know, those inflationary
Let's just
pressures
break the
continue to
9.
push back. We were talking earlier in the show about how crude's been relatively contained. Those prices haven't really sparked inflation concerns. I mean, yeah, it'll give us something to watch for next week, that's for sure. You know, I was looking at some of the comments from Mark Chandler, Bannockburn. Again, a regular on the Future Show, he talked about how the MOF weekly report showed that Japanese investors bought 2.1 Japanese yen trillion of foreign bonds last week, the most since May, so it's significant. Japanese investors have been net buyers of foreign bonds and stocks since the BOJ's intervention. He spoke about how the BOJ, again, the CME futures market, non-commercials, Oliver, had their largest gross long yen position in nearly 8 years as of September 10th, and the smallest gross short yen position since January.
Times they are changing.
Always
For
clean.
Sure. It's produced a target net long
Man, don't
yen
start
position
this again
since
today.
September, the largest net long position since September of 2016. So
that, to your point, also might help firm up the dollar a little bit. Ironically enough, because the kind of, you know, explosive pressure of that yen trade seems to have fizzled. And because we were getting like this spiral where when the dollar was really falling apart and the yen was ripping, it kind of got into this, you know, uncontrollable vortex. So
Yeah, this ain't working.
the fact that maybe now the boat's a little bit more one-sided, or sorry, it's a little bit more balanced rather.
And
in the end,
taking a look at that move, we spiked up into the middle of September. That took out the highs. If you remember, that was the highs that we had seen earlier in the year.
Talking the yen, yeah, exactly.
Last year, beginning of this year.
Yep.
But again, similar to the dollar breaking down to that lower level, it didn't really see any follow through. The yen didn't really see follow through to the upside. So. Keeping an eye, there it is. There you can see the yen again taking out those highs from end of last year, beginning of this year.
It doesn't show up quite as well in the line as the candle, but I actually do think you're making a very important point, because the dollar chart is kind of hard to see the way it's firmed up, but the yen was like a very sharp rejection of the breakout this week. So, and I also was kind of funny that I don't really hear much talk about this, where it was literally just a month and a half ago. So many people were saying that this was like the biggest skeleton in the market closet, the whole yen trade, and that, you know, it was going to bring the house down.
There's been a few of those, Oliver.
Right, yeah. There was so much concern that the yen was going to bring the house down. And now it's like, I really feel that as we've gone through this massive Fed shift to 50 bips and the yen failed to break out,
New lows.
Trade really is kind of like toast at this point, in terms of like being this nuclear.
So we got a
threat,
double
like,
bottom.
market. I think we've pretty much dissipated that.
Yeah, I would tend to agree with that. Again, this was a swift move off those lower levels. Most of it probably has been unwound, but again, I also think the fact that the BOJ held pat, and didn't go ahead and hike, contributing to some of what we've seen in terms of the intraday volatility there. But yeah, these are currencies to watch into next week, that's for sure.
All right. So helping give a little bit to the dollar and helping give a little bit of a bit into yields, selling in bonds this morning. Dollar at the highs and bonds close to the lows. Thanks, Ben. Appreciate that. Good look at the market. Gold also a little air came out of its early rally, given the strength in dollar. Move higher in rates. Bitcoin down about 80 bips right now. So getting a little bit of movement here, starting to pick up the pace, but not a ton. Let's talk some news in tech and news in power. Mr. Kevin Green back with us, taking a look at Microsoft, the dabbling in power from 3 Mile Island. That's pretty fun. Constellation, a connected stock as the energy business that runs a bunch of nuclear facilities, including, I think, all of them in Illinois, or maybe one's not run by Constellation. What's up, KG?
Let's go. Well, Oliver, I gotta say, you are a tough man to please, man. NVIDIA, not impressing you. It's 4% up yesterday, man. I gotta say, it's a
got my lines.
Oh.
I gotta pay my lines at 120. That's I'm a caveman. I got a line there. Stop below line, bad.
So we do have a deal that's being made here. Constellation Energy and Microsoft has signed a 20-year deal to reopen Unit 1 on 3 Mile Island. This is a nuclear reactor in order to be able to power the AI, the AI infrastructure that Microsoft is really trying to put in place here. So this is actually a very big development. Now, this actually was the #1 producing nuclear power facility before it actually shut down, but just due to cost issues, they just weren't able to keep it up.
Okay, it's not doing good.
An opportunity. And Constellation plans on spending around $1.6 billion to try to restart this reactor, and they're hoping to have this restarted by 2028.
You just hit my other support, my second one.
A lot of these technology companies are looking for methods in order to power these large data centers, and they're looking towards nuclear because it's carbon-free, technically, and they're also looking at natural gas as well as other renewable energy sources here. So we are seeing Constellation Energy up around 12% in the session here right now, and we will probably continue to see this type of development where technology companies are looking towards utility companies in order to try to power these data centers. In fact, Google has a partnership with a company called Fervo where they're actually utilizing fracking technology in Nevada in order to power 2 data centers there. Now that's a concept that they are putting forth, but it does seem to be another, let's say, sustainable way that Google is able to power their data center. So a nice reaction here. You're also seeing uranium, ETF, the URA catching a little bit of a bid after this as well. So another phase within the AI story. We know it's going to be power. It's just where we're going to be sourcing this electricity and generating it.
Yeah, nice. Constellation Group, big breakout, big move for that stock, 12.5%. Pretty fun story, restarting it. I mean, big deal. I feel like for those who are believers in nuclear power, frankly, of which I am, that it's pretty exciting to see this being tapped and used because I mean there's a lot of unused kind of potential in the American nuclear infrastructure. Like it's pretty decent, It maybe is not as like avant-garde and breakthrough as what they're doing in China or the Middle East with all the small modular reactors, but we did talk about that just this week too, because we had NEE CEO on, which is a nuclear business, and so there's a lot of different ways that we can get creative, I think, with the power needs for these plants.
Yeah, I agree with you. I think the biggest challenge and headwind that you're going to see in the near term, Oliver, is going to be supply chain for uranium. Now,
Tesla down $5.
Today, so people should definitely check it out.
I saw that.
Trying to source this material, the enriched uranium material, is going to be potentially a hurdle for Western countries, as we are seeing a power shift, especially when you're looking at Russia and China and what happened in Niger last year that kind of cut off supplies for France, and then Russia's President Vladimir Putin actually did kind of threaten a vague threat that he could actually halt some exports of commodities, which would include uranium. and they're the biggest exporter of enriched uranium in the world. So it's a positive development. We do have the infrastructure that's in place. We have the micro nuclear facilities that can be built up, but I think the longer term time frame as far as trying to source uranium, which is very scarce, it may be a problem here for us to be able to scale in the manner that I think a lot of nuclear bulls really want to see.
I'm looking at some of the other nuclear plays that are in the more kind of cutting edge small modulars. Light Bridge up about 4.5%. NNE, Nano Nuclear, that's the CEO that we talked to earlier this week. Shares up about 16%, but that's a really volatile stock. So
Nothing's looking bullish yet.
3 Mile Island, wake it up. Cool. Constellation Energy, rallying big. Got to power our robots with something. Thanks, KG. Let's trade it with Dan Deming, managing partner, KKM Financial. What do you think, Dan? Nuke-powered robots? Is this getting too weird or what?
It's an interesting dynamic.
Awesome?
What's that?
Is it weird or is it awesome?
It's probably a necessity. It is a little problem. I think it's outside of what they're used to their business model, but nonetheless, I think moving forward, it's a necessity. So I think the jury's out as far as is it weird or awesome, but it's probably a necessity. So and I think that's also being priced into other markets. I think the last couple of weeks, Oliver, natural gas is kind of holding this low end of the range. But if there's AI is going to need a ton of power in the future. And so there's some talk now that natural gas could start to see a bid here as you move into the next couple of years, because that's another potential generator of electricity. That would be another possibility where we could see some higher prices there as far as the build out for AI. But in the short term, Oliver, at least in the next couple of months, I just don't like the chart pattern of Microsoft. I don't like the chart pattern of the NASDAQ in general. I mean, it didn't take out its July highs yesterday. We saw the Dow and the S&P go to new highs, but the NASDAQ is still lagging and not showing the relative strength that I think is necessary for it to maintain this upward momentum. So when you look at Microsoft, a very similar pattern, a lower high, potentially we could see a test of the 390 level if we see some more further weakness. So today's trade example is
we got to break
567.60. Have the opportunity to get put in the stock. So I'm looking at buying a put 1x2
567.33
to again possibly capture some downside price action in the next couple months.
All right. So take me through the structure, because you are, Microsoft has been about as strong as you can ask to put in some highs. It may not look like quite the meta chart, which is kind of like the leader of the group right now, but
that's true.
I could see one to ride the wave.
Yeah, I mean, it's just looking to me more like the NASDAQ as a whole. And so when you look at the price action of Microsoft, about this 437 level, giving up some ground today. But, looking at, if we were to see some further weakness, I think we could drift back down to that 390 level that we did see.
Three white soldiers.
August. So this trade is a November put spread.
Turn that down a little bit. To do. Right now it's 9:20. It's depreciated quite a bit. I almost grabbed some down there at 50, 52, but that would be a lot better off. Okay, now we're at the 63, so this is a double top. If we can break this, I think we can get up here again. Let her exit the trade. We definitely broke out of a snake. Nine is trying to cross the 21. And we're flagging out here on the 1 minute. Whoop. That I didn't want to see. Market's flat, but the NDX, it's got down 88. Oh, God. Always clean this, Jim. Who is this?
My name is Shane with Educator Solution. How are you today?
I'm busy right now. I'm in the middle of a trade. So could you take, what do you need? Hurry, make it fast. Pieces of shit. Who is this? I'm busy right now. I'm in a break it. Looks like we're getting a little bit of strength here, but we got to break the 63 in the 50 SMA. And we got the 9 crossing now, so we just might get it up there. It's really important here in the next minute. Okay. Still not made it above it yet. I need one body above this 63 here, and I think we'll be safe. I'll be safe.
Sorry, but your call cannot be completed.
You motherfuckers. Man, or somebody, AT&T, don't ever get their service. They kept me on their little call zone, and then I got infected with all these stupid calls. I don't know how to get rid of it. Da, 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 da. We've been open almost an hour now. We should have recovered a little bit here. We come back down and hit this shoulder line one more time, and then I would be afraid to do that. I want to break this 63 now. I don't think we've quite had the pullback we need to get out of the snake here.
Commission. The company owns
They bat at 106. Okay, we're back down there again. Big drop on FedEx. Okay, we're back to an inverse head and shoulders. I'm going to find out real fast here. Right to it. I can almost predict the next moves on this, so it really has to come out of this right here to be good, to break that VWAP. That's our new resistance, 567.47. Turn my water on. I'll be right back. Take my phone just in case. snake breakout pullback. Nice breakout on CrowdStrike. SMCI's held. Walmart. Recession stock. Coin flagging out. We got Apple up $1.55. SPX is at the 63. There we go. Come on, SPY. Break out. The 200's a lot lower than I want it to be. It says it's bullish right now, but I'm not sure about that. $568.22 would be nice. What to do? Three white soldiers, and a black crows right here. XLP trying to go green. What chart, Yoko? Put your stock ticker in there so I don't have to look around and try to figure it out. That's funny. Oh, it's a TTM trend. Okay, I got you. I'm not getting off on the sediment this morning. Micron's fourth quarter earnings. I guess MU had its
interesting price action that kind of goes straight against sort of all the things that I just said.
All right, the price action has been dubious at best. It's like it fell asleep at the wheel. Ben, what happened here to Micron?
Well, I'll tell you what, you think about this in terms of the other two stocks that we're looking at. One of these things is not like the other. I mean, this has been making that intermediate to long-term downward trend. Big, strong move into that August low. It's a little bit of a relief rally. But now, Oliver, look, it's been compressing down into this.
Definitely, it's down $70 from the high. MU is.
That triangle centered right over the earnings announcement, right? So we think, okay, earnings is a catalyst to drive this further down. That's what we would expect. Technically, because generally we think the trend going into the triangle is the direction that it's going to come out. But look how
You'd think by the way the tape acted this morning. I signed some uncertainty this morning in the tape, but man, it was looking.
The more likely it is potentially to break in the opposite direction, which would be to the upside. You've got.
No, I can't listen to this guy right now. He's full too much of excitement. I'm liking how we pulled out of the snake breakout pullback to head and shoulders. So if we keep going higher highs, I think we can reach the 200. That's probably where I'll get out with a small loss. But this is depreciating big time. It's a 3,200 lot go in there. Be right back.
Mark if they can pull it off in terms of same-store sales growth, and that's expected to continue. So you can see why this stock performs the way it does, because it just kind of is reliable. It's consistent. They report numbers on a pretty regular basis with some of those monthly figures that they give.
Constant updates.
Very little surprise from this company, and it just it lends to a pretty consistent performer, absent market volatility on its own.
Yeah, very well said. Earnings ahead of us. Usually a pretty calm event, and when it's not, it's turned out to be a buy the dip opportunity. Any cracks in this chart anywhere, Ben?
No, I mean, I think you look at this from the standpoint of that trend, that moving average, it has been consistently moving to the upside. You're above this most recent kind of solidification of resistance, now acting as support, kind of right around that 890 mark, and testing a little bit higher here, moving again towards new highs. Think about this, and you think about those fives, right? Alex talked about it. They announced for the first time in what, 4 years now, a price increase for the annual membership cost. It's the cost of an additional Costco chicken, for crying out loud, and
crying out loud.
Not something that's going to crack this support level to the downside. Now, that being said, intermediate term sentiment, that solid line in the lower panel, is diverging a little bit bearishly. That may just mean it trades price for time and goes sideways around this 900 range for some time. Doesn't necessarily indicate the possibility or the likelihood of a reversal and a move to the downside, Oliver.
All right, great stuff. Costco, just a rock. Seems like it's very solid. Thank you, Ben. Thank you, Mr. Alex Coffey. Good stuff. Next week, earnings. Costco Thursday, Micron Wednesday, KB Home Tuesday coming up. Gonna get a developing story in and a little market meetup, little chat as we are looking at stocks. Trying to firm back up. BTC flipping around. Positive, trying to hold out to signal some risk on here. Stocks, though, still down. Check out the Russell, though. That's a nice little development. Small caps firming up from the lows of the session.
This is the second touch on the right shoulder, so I think it's got to squeeze now. It's got to, or it's going to drop more.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
There's really not much that's going to make this thing go green right now.
Stocks hanging in there as the Russell was down earlier, almost 1%. It's trying to firm up, so shaved off about half that loss. Overall, the moves are fairly muted. I got Kevin Hanks back with me here. Host of Fast Market in studio, Mr. Scott Durfee, Senior Manager of Trading and Education, joins us as well from Salt Lake. Scott, this morning I feel like we're just trying to hold on to yesterday's big bounce. What do you think?
Yeah, and there's nothing wrong with that, right? I mean, we get a big bounce. We can't expect to have another big bounce day after day after day all the time. I mean, it has happened. But I think that this is probably something that is most traders and investors have been in anticipation of. Obviously, we got some great energy based on some data this week. Obviously, not the least of which being the Fed announcement. So, you know, we'll see how this goes going into the week. But I think we're set up, you know, at least initially for some good moves and some good action in the markets going forward. Obviously, we've got stuff coming up on an election and other things, always something looming ahead of us. But
yep.
I think that we're in pretty good shape right now.
I don't know about that.
The move here, Kev, after the big gap, I mean, we're pretty much sitting at the top of the gap.
Still within the margin of error for a catching your breath move here.
Totally, yeah.
I agree there.
You know, the second half of this day, I think, as we get closer to expiration and that whole...
Oh, it's quad witching day today, too.
Market will show its true personality.
What time do you thinking that comes out?
Repositioning.
That personality.
Well, usually...
30 minutes left?
Yeah, half hour to 20 minutes. Okay. In the old days, you used to get the market on close orders about 2:40 Chicago time, and then things would start to move. I'm not sure they even do that anymore. If they do, they don't release them like they used to. But
you're right back.
Think that the end of the day will show, the second half of the day and the end of the day. I care, based on everything that's happened this week, where stocks end the week. And if they're at or close or within the margin of error from where they were at the highs yesterday, really good end of the week.
Basically, if we're above that range that we were stuck in before we broke out. So, as we were talking earlier, for S&P's, at least 56, 50, right? Like at the minimum that we should be able to hold on to. But we'll see. I mean, we do have a little bit of red in some of the tech stuff. Nvidia's down below 117, lower by about 1%. But Apple's up. Bitcoin slipped and turned around. So there's definitely some nibbling happening on some key areas of risk right now, Scott.
Yeah, there's no doubt about that. And not only that, but we've got some individual stock movers too recently, right? I mean,
yep,
so
this ain't gonna be good.
Apple, I almost said Amazon, you mentioned Apple, but we've got Nike and we've got a few others too. I think that as we start to see some of the earnings calls released as we go through the rest of earnings here, if we see some of the retail and some of the home builders, now we've got PCE next week, we're going to keep an eye on that too. But as we kind of keep an eye on these things, I think that we'll be able to kind of keep a pace on the feelings of the sentiment of the market. So, we've got still plenty to look at, still plenty to do. We're not out of the woods. We still that's still always in front of us. So we're just going to see how it goes starting next week. I love that Kevin, wants us to see us firm up at the end of the day today. I agree with that. I think as we go into the weekend and we have a better vibe, we'll be able to start the week next week with something more similar.
Okay. Looking at
double bottom
small caps yesterday, which faded. Scott's point, there's a lot of stock-specific stories. We got the Constellation up big on the Microsoft deal.
I think
Nike.
I don't know why Microsoft is down on that news, because this is another early. This is Microsoft ahead of the curve again.
Absolutely,
Oliver.
By a long
did
shot.
it on ChatGPT.
Yep.
They're doing it now on energy, because the energy needed for AI is massive. Another indication of Microsoft ahead of the curve. Oh, and by the way, just to get you, because I know this will make you smile, CrowdStrike. The defections and churn way less than expected. Citi and Goldman like CrowdStrike hit something.
There it is. How did I know? OJ a little sleepy on a Friday. I knew you were going to sneak CrowdStrike in there.
You let your guard down.
Got me. That's all right. That's okay. There's not a lot. I mean, another 4% is worth talking about. The thing is like kind of jamming a little bit. So yeah, stock-specific stories. Macro kind of quiet. Nvidia, down $1.50. Only thing I'm kind of watching a little bit is it's kind of flailing somewhat. But look, bonds are still pretty calm, but some selling there. Treasuries have been kind of lifting off and yield a bit here the last 3 or 4 days, Scott. We cut rates, but bonds are kind of insistent on selling right now, it seems.
Yeah, and we need to keep an eye on that. We need to be aware of what's happening there as we move through this whole process of rate cuts, etc. And just as a reminder, as we start seeing that, we're going to need to start keeping our eyes on some of the kind of aristocrats of dividends, right? Because those will become more attractive as we see those, as we see the bonds and stuff starting to become less attractive. We'll be starting to move into that as well. So obviously we're in flux. There's just no other way to put it. We're going to be in flux for a minute here, and as we are, we'll just
whatever flux is,
being ready for something when it finally sets up to move in a more solid fashion in either direction.
Okay. What do you think, Kev, about the bond selling? It's fairly kind of building some momentum.
I think that's very technical, as they were overbought going into the number. But remember, the least likely scenario came true. A 50 basis point dovish cut by Powell. Incredible week.
Yeah, all right. So today we got yields pushing a little bit higher. We've got a little bit of flattening in the curve. All right. Thanks, Scott. Thanks, Kevin Hanks. Thank you for joining Morning Trade Live. Trading 360 with Diane King Hall is up next. This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree.
We got yesterday's low on the SPX.
A lot of the best and brightest students, because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the big formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Go get my coffee.
Trading 360. I'm Diane Kinghall, live from the floor of the New York Stock Exchange. Nicole Petalides will be back with you on Monday. We're about 90 minutes into the trading day. Let's go through what we're going to be covering coming up in our show. In our 360 Spotlight, we'll look at the 2024 election and what impact that could have on your portfolio from either party. Today's disruptor is courting after a price target hike over at Susquehanna. And in our 360 roundup, we'll look at all things semiconductors.
And we could drop to 565.
On the markets. We've got some cooling in all the major averages after we saw some all-time highs hit yesterday. You're looking at the S&P 500, the broadest benchmark of the U.S. market, off by about 0.5%, down 27 points. NASDAQ 100 losing a little bit of ground as well, off by 132 points, or a little more than 0.5%. That was one of the leaders yesterday, although the S&P 500 hit a new all-time high. It's 39th of the year. Blue chips losing some ground as well, down by about 0.2%. Small caps also under a little bit of pressure, down by 0.5% as investors just take some chips off the table after that big rally yesterday. You're seeing some firming in the dollar, up by 0.3%. Gold has hit a new all-time high today. It's up by about 1% at the moment. Crude oil easing a bit, still on track for a gain for the week, just like equities in general. Crude oil off by about 0.2%, trading near $71 a barrel when we're looking at WTI. Bitcoin losing a little bit of ground, but it also had a big run up in that risk on Bitcoin off by 0.3%, but again, it gained a little more than 6% yesterday's market action. But let's take a look at some of the top moving stocks in today's market. For that, joined by Alex Coffey, senior equities contributor and co-host of Next Gen here on the Schwab Network. All right, Alex, we are watching FedEx after their earnings yesterday. Big miss their guidance week. The stock seems to be reflecting that. Take us through some of what you're watching.
Yeah, this is the mover of the session, no doubt about it, here on this Friday morning, Diane. Stocks down over 15%, which coincides with, of course, a $45 stock price move to the downside for the shipping giant. FedEx, as you mentioned, did miss on EPS pretty substantially for the quarter, reporting $3.60 versus the estimate, which was way up in the high $4 range. Revenue came in light as well, 21.6 billion, missed the near 22 billion revenue estimate. But to your point as well, what I think the market is scratching their head about is how a miss could be so substantial, yet they just adjusted modestly their guidance. They had previously seen it between $20 and $22 for EPS for the full fiscal year. They only adjusted it to 20 to 21. So I think the market is questioning whether or not that's going to be something that is attainable or not. Operating margin was a pretty big miss as well, coming in at 5.6% versus the near 7%.
That's not good for FedEx.
Expected. I think also not surprising, analysts are slashing price targets. They're downgrading the stock. Baird slashed their target to 320 from 340. They didn't keep the outperform rating. UBS goes to 311 from 333. They also keep the buy. Evercore 318 from 335. BMO to 300 from 325. HSBC downgraded.
I see it.
Hold, and they have
support right around 243 off the 200. It's bounced off the 200 a lot.
Repricing in the market and a pretty substantial adjustment taking place from the analyst shops as well.
It does look like that, and that does seem to make sense off the back of those latest numbers. And, the other peer rival that I was watching was UPS, and it's getting dinged as a result of this, although they had a tough quarter as well, right, Alex?
It was real bad.
Yeah, they did. You actually see Amazon a little bit weaker as well, as it just could be a reflection of just broad weakness in the e-commerce space. But again, we know some of this has to do with execution from these particular companies. There were some bright spots to note as well. Their freight pricing story continues to remain intact, but you missed that substantially. You slash guidance in a market that's trading broadly near all-time highs. There's secular growth stories like the AI names. There's just not patience for turnaround stories at the moment, and so any type of disappointments led to massive repricing. We see that with FedEx today.
All right, that makes sense. All right, Alex Coffey with the deep dive on FedEx's quarterly numbers. Senior equities contributor here on the Schwab Network. Thank you, Alex. All right, let's get some insight on the news that's shaping markets this week. For that, I want to welcome in Andrew Wells, CIO of Sanjak Alpha. Andrew, thank you so much for joining us this morning here on this Friday. I want to get your take on the market action this week. Yes, we're seeing a little bit of weakness overall in many asset classes today, but we had that big rally yesterday off the back of the Fed's move to cut rates by 50 basis points. What's your reaction to the overall move in the market that we've seen this week? Does it make sense from your point of view?
Well, I think it does, and thanks for having me, Diane. That's great to be here. I think what we have to watch here is the Fed messaging was pretty clear in that they're not going into an easing cycle. They're not going into a place where something like QE is on the horizon. They're going into a recalibration cycle. In fact, Jay Powell said that several times during the press conference. And
said it 9 times.
Everyone picked up on. So that tells us that the markets are not necessarily, the equity markets seem pretty good because they seem fairly resilient, but the bond markets are not convinced, specifically the long end of the curve. They're not convinced that we're going into a place where you're going to see kind of a massive bond rally. We've kind of rallied already a lot. So we think that we're most of the way through that move, and we would look for the longer end of the bond market to be fairly stable to choppy, possibly up in rate. And that's kind of why we're seeing a sell-off in bonds today.
So what's your expectation with regard to volatility through the balance of the year?
Well, I think equities, again, are probably going to look a little bit more stable than bonds. The reason I say that is because when you have a situation where the economy is in decent shape, and we saw a great print from the Atlanta Fed GDP now, they're looking at 3% now for GDP. That tells us the economy is certainly not the reason necessarily that the Fed is easing rates or cutting rates. What they're doing is trying to get back to neutral. So what that means, I believe, is that the bond market is probably going to revolt just a little bit on that, because it's kind of uncertain exactly what the next 2, 3, 5 years look like in terms of the Fed policy. We could see a lot of pauses in rate cuts. We could see possibly recalibration sometime in 2025 if inflation rears its head. So that's where we see the volatility is really important.
So then let's talk a little bit more about fixed income then, and the attention you're paying to the long end of the curve. For that, what should investors be paying attention to, especially you said the bond market doesn't appear to be convinced, to your words. How might this kind of play into investor sentiment, especially when you look at the long end of the curve?
Well, I think you just need to be really careful going long bonds here outright. I think, first of all, everyone needs to have exposure in the bond market. We know what the portfolio should look like, so you need to have income. You can get income in the front end of the curve right now and remain flexible for moves that could occur in both Fed policy, inflation, possibly the economy. And we look at somewhere around the 2, 3, and 5 year point on the curve. So a little bit closer to the front end. We would not be looking at the long bond right now. We would not necessarily be looking at the 10-year. The 10-year is going to try to pick up a longer run inflation number and express that through yield. We think that longer run inflation number, specifically the floor, could be higher than expected, meaning that we're not going to see 5, 6, 7% rate of inflation prints. We're going to see a higher floor where the neutral rate is probably now somewhere around 2.75 to 3% in terms of equilibrium. So that means the inflation rate could be rather choppy, meaning it may bottom out kind of where it is today at around 2.5%. And then we may see some chop upward, especially if commodities, oil, things like that start driving that CPI number a little bit higher. So we're not convinced that we're going to keep going lower.
Okay, and let me ask you this, in the context of what's happened this week with regard to rates and the expectations for the path forward, is the 60-40 portfolio back in your point of view?
I think it's still there, and it's back. We've kind of seen how the risk parity trade has lagged a little bit from the old reliable 60-40 model. So we think that that is the best portfolio position right now. You definitely need exposure to bonds. We would probably be looking at something at a little bit shorter dated corporates in the investment grade realm. Even in the lower end of the investment grade market, that's where we're looking right now. There's a little bit of value there. Credit spreads are still very, very tight, which is one of the reasons why we're not really concerned about the economy, not really concerned about the stock market, because the credit spreads typically lead the way. So I wouldn't necessarily dabble in high yield, but down at the lower end of the investment grade, the triple
The SPX.
You could look at.
I'm going to watch the 5700 here.
Versus the Treasury market. The Treasury market basically is just a duration expression right now, and we would just be careful about duration, specifically on long duration right now, because that you can see some real volatility in that.
Yeah, okay, that makes sense. And then let me ask you really quickly, I want to go back to the point that you made about the language used, the recalibration. A lot of attention has been paid to that, Powell's language there. What's your takeaway about what that signals for the path forward for the Fed?
Well, we believe that the Fed has it right. The dot plot
5700
on Wednesday that was released show the Fed around 3% or somewhere around the lower three handles in terms of where the Fed fund rate should possibly terminate in terms of a couple of years. So by the end of 2025, they kind of have us in the low threes, somewhere around that for the consensus Fed dot plot. The futures market, however, has 2 extra cuts in there. They're coming in around 280. So what we think is happening here is the futures market is viewing this a little more easy as an easy cycle. We think the Fed's viewing it as a true recalibration. So I think they did a really good job of messaging that. And they said another word or another phrase that was really important, and that was risk management. And that tells us that when the Fed decided to cut 50 basis points, that was an insurance policy. That was him buying insurance because there's really not that much wrong with the economy right now. He's buying insurance for the future. It was not saying, hey, this is an emergency cut.
57's at 510.
We need to get 50 basis points on quick. So that's one of the reasons why we disagree with those who say the Fed's behind the curve. We think the Fed's about right here. They could have eased earlier, but easing now is fine because they're going to hit their targets, and they've laid out the path pretty well for us.
All right, interesting stuff. Yeah, that's been a question that I've asked this week is just who has that right. So you're in the camp that the dot plot is telling us the real story. All right, Andrew Wells, CIO, Sanjak Alpha, thank you so much for joining us here on a Friday, and have a great weekend.
Thank you very much, Diane. Have a great weekend.
You got it. We've got a lot more to come here on Trading 360. Next up, it's the big three stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals, and Joe Teagate takes us through the trades for Apple, Microsoft, and AMD. That's coming up next here on Trading 360 on the Schwab Network.
460. Still knifing. $420. I got 564.83 for the last support on the SPY. That's my third one. See if that holds there.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Trend Investing.
1 p.m. Eastern, only Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab. Trading at Schwab is powered by Ameritrade, bringing you futures and
just hit it.
Around-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade,
just hit it.
Cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Schwab Network's like no other financial media you've launched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Welcome back to Trading 360. I'm Diane King Hall. Nicole Petalides will be back with you on Monday. Time now for the big three.
Looking at the SPX right here.
Three trades. Vin Lichtenstein will take us through the charts. And here to take us through the
320.
trades is Joe Teague, portfolio manager of the Rational Equity Armor Fund. It is great to see both of you.
Let's see what happens here. I've got some at 320.
Trade. Apple still getting a little bit of love today after a run yesterday.
Yeah, bucking the trend today, continuing their rally 2 days in a row. So a nice move from Apple. And, I thought the last interview you had with the last guest was just really, really good, really insightful. I think I should be tuning in more frequently because that was very good. I might be a slightly different take. I think the Fed looking
He's
at
under a different
potential
take.
risks. They have inflation on one hand, trending the right way for them, but not where that needs to be. Jobs trending the wrong way, but not really in a way that really is any concern. I think the Fed chose to go growth over inflation. They chose that. The last question was very important. You talked about the dot plot. Expectations are not as severe as the Fed's saying. So the Fed's trying to get the market to say, hey, we're going to be aggressive. We're going to bring rates down to whatever they think normal is. And then look at this year's dot plot versus what the Fed did. The market was saying,
Right now I'm having a red day.
The Fed was saying, no, rates are going to stay higher. So the Fed was fighting inflation then, and they had a few tough times. They kept on hitting the market over the head saying, hey, we're going to be fighting inflation until the market finally got it. I think that's going to be the case going forward. The Fed's going to have a couple more aggressive cuts, in my opinion. The Fed wants to get this into the market's head that they're going to get rates to normal quickly because they want to give.
I just got into the SPX,
give us a little bit of
and
growth.
I'm down on. I took a loss on the SPY.
These stocks will benefit in the short term as long as the economy stays strong. I think these stocks will do fantastic. So yes, I am looking at Apple. They have new products coming out. I think they'll be
We're at
a boon to them. I like the
440.
price point on these targets. Maybe these AI features aren't so amazing, but the price for the phones seems good, and this will all boost their bottom line. Their subscription revenue continues.
I grabbed a little bit of SPY here too, but I'm real scared about it.
In history of buybacks, so I think that will also be boosting them. So yeah, I'm looking.
We got to break the 21. It's weird how the TTM is different
these names with calls because there is the risk of the economy
than the
south, but I want to
my regular chart.
So I do think we will see some more upside exposure.
All right, and Ben, take us through what you're seeing in the chart for Apple.
Yeah, Diane, that was quite the fundamental bullish take.
We're at
I'm gonna
450.
paint the same picture in terms of the technicals because across 3 time frames.
Now, if we can break the
all
21 on the
three,
SPX, that'll be a great deal
that's the
for
one
me.
behind me. Bottom left, top right, trending higher, simply put. I've got a 5-minute candle chart to begin our look at shares of AAPL, and you can see as we look back to, well, we're talking just a couple days ago, we were trading down around that 215 level, rallying all the way up to, well, 231-ish, we'll call it, holding this upper level just shy of 230 right now. I like to look at areas for consolidation where the market kind of leaves us that footprint and that path in terms of the trajectory it's taking, easily identifiable to the upside here. I identified 4 areas where we've balanced. Currently establishing value around 228, so on a 5-minute candle chart, as long as we hold above 224, we are trending to the upside, working assumption that we're establishing value at higher and higher levels. Stepping away from a 5-minute candle chart, 4 hour shows you almost identical pattern. Again, bottom left, top right. You got the 237 high in your sights here now from earlier this summer, if you remember. And you can also see how we've been a little bit of choppy, kind of range bound after coming off those August lows where we didn't spend a lot of time. And by definition, an extreme such as you don't spend a lot of time down there. And also by definition, you don't take out key areas that were established on
We're
the way
at 470.
Again, now we've got an upper and a lower extreme established, the August lows, those highs from July. Hey, we're bouncing off the middle of this range that we've been in for some time now. That provides nice momentum for a retest of that high there again around 237, 238. I wanted to show you another chart which is showing you again the similar bottom left, top right pattern. Taking a look, first and foremost at the daily, I feel like it's been a while since we last
I'll get 100% out of this one.
About a breakout to the upside. It was looking like we were starting to
Fucking
see
fly, man. I tell you what, I'm getting annoyed with outside interference.
Take a look. You can see, again, 220s the area I'm looking at now. We got a daily candle chart, but across.
How dare him look at me in an intense moment.
Bullish pattern playing out. Joe, any final thoughts before we move on to your next trade?
Couldn't have said it better. It's been a great run for them. Yeah, I want to see it continue.
All right, let's move on to your next trade. You've got Microsoft also in focus today.
Microsoft, another big mega cap tech stock, another one that I absolutely love just forever. Microsoft, now they're the leaders in the cloud space. That's going to be a big component of the AI revolution, of course. Azure,
we got to break this here squeeze.
Revenue, just a really fast, it's still huge.
Or we get out.
Place, but it's still really quickly growing. So I just find that to be very attractive for the next couple quarters especially. And of course, this is another company with a very large buyback, not as large as Apple, but we're looking at 60 billion in buybacks. So yes, more tailwinds for Microsoft. I think the next quarter, I'm really liking it. Maybe it'll be a tough time for the next week or so. The end of September can be seasonally tough, but for the next month or next 3-4 months, I'm a big fan.
All right, Ben, though, let's go through the chart for Microsoft and what you're paying attention to.
Yeah, I'm a big fan as well, Diane, especially when we get into that longer-term chart. Now, the short-term
480
intermediate, somewhat clouded, right? Especially compared to our last example, Apple, where we saw that really well-defined staircase-type pattern to the upside. You can see behind me on a 5-minute candle chart, not a lot of really well-defined definition one way or the other, up or down. You kind of just got this sideways consolidation, random type price activity throughout this week. Upper extreme, lower extreme established here, but again, no real well-defined trend. So I would say when in doubt, zoom out a little bit, and we'll do just that. Take a look. Here you can see, I mentioned it was somewhat clouded when we get into the intermediate. This is a 1-hour candle chart going all the way back to, we're talking about beginning of June. But I like to look at these areas of value, not only to help us determine trend, but also when it breaks down. And we saw that happen. We were trending higher all the way up into that 470 level. And then look at this. Into the beginning of July, we started to take out key areas that were established on the way up, bottom out here in August, kind of work our way back. But the breach of 4845 was not what the bulls were looking for. And since then, again, you can see somewhat kind of contained price activity. Well-defined lower extreme, August lows. You get the highs from earlier this summer up around 429. Now, stepping one more time back into what do I got here? A daily candle chart queued up. You can see a little bit more clarity, that staircase type pattern that I look for. Again, well-defined upper and lower extremes. So we've established a range here. 430 is where we're balancing now as long as we hold above 360. Now, again, this is a longer-term chart, so that's quite a wide sort of breadth of price, but basically a bullish pattern. What I like is the fact that we're working our way through the middle of the balance area. A higher low just formed. Again, there's momentum here, Diane. I think there's some energy, and we could work our way up and retest that upper extreme. Let's wait and see what the broader market. I feel like that could definitely help if we continue to see a rally in the S&Ps, the Dow, NASDAQ starts to play catch up a little bit. Microsoft would be a big part of that story.
All right, well, let's pivot to your final trade, Joe. You're looking at AMD under a little bit of pressure today, but on track for a gain for the week.
490.
Tell us about what you're paying attention to with AMD.
Yeah, AMD down, all the semis down, risk off after yesterday's big risk on. That's not scaring me away in the slightest. I think it's a fantastic stock, fantastic story.
Come on, baby, bounce.
NVIDIA, we know how they've sold, countless AI servers, AI chips. AMD has a very strong competitor now. It's been a while to get there. They have the M1300, so I think this is a possibility to break into that AI market share, which just has driven NVIDIA to astronomical levels. I think it's finally time somebody cracks into that, and really there has to be, because NVIDIA can't make enough for the demand. There is going to be demand for whatever AMD is putting out there, and I think they have a pretty good product.
All right, Ben, what are you looking at when it comes to the chart for AMD?
Yeah, I really like it. Again, more along the lines of our last example, Microsoft relative to Apple, but let's just take a look. And we're going to move through this 5-minute time frame very quickly because it's more Microsoft than Apple is what you're seeing here, right? Just chop, not a lot of conviction one way or the other. So move on. Again, step back, look at a different time frame. This, again, that intermediate kind of looks a little bit more like a flipped mirror image of that Microsoft chart we just looked at. Nothing like that Apple chart where it just jumps out at you, screams trend up, yo, you look at me, really well-defined type staircase pattern. Here we had trend to the downside that broke down as we tried to rally up to that 150, 153 level, but look, it broke sideways, hasn't been exhibiting much conviction since, but a step back really helps provide clarity in this example as well. Well-defined trend up off that 2019 low around $20 if you remember, to briefly above 227 earlier this spring. Currently coming off a test of that lower extreme of balance that's been forming around 170, but again, this is the range that we've been in. Well-defined upper, well-defined lower extreme, which held above 115. Bullish pattern here on the longer term, Diane.
All right, bullish pattern on the longer term for AMD. Something to watch. AMD, Microsoft, and Apple. Thank you both, Joe Teague, Rational Equity Armor Fund, and Ben Lichtenstein.
480. I'm tempted to sell these here soon if we don't break.
Spotlight the upcoming election and the impact it could have on the market during the presidential term, the next presidential term. That is next on Trading 360.
More 10 cents on these. Needs to break here.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's
Yep.
Market on Close. Join
There's
me
the
and
drop.
Oliver Rennick for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere on any
Come on,
device
baby.
for free.
Break it.
Only on the Schwab Network.
I think we hit resistance, but I'm not for sure yet. I'm going to get out of it here real soon. If this don't turn around.
Strategist with Morningstar's Index Group. Dan, thank you so much for joining us this Friday. All right, let's talk about the expectations. You all have a lot of data on the expectation for impact, no matter which party is in. What are the market trends? What's the kind of broad takeaway you have from your data first?
Yeah, it's I'm gonna, rather than infuriating half your audience, Diane, and delighting the other half, I'm gonna frustrate all of them by being a politician and saying it's really hard to draw a causal link between the political administration and stock market leadership or bond market leadership.
Bullshit.
We did do a study a few months back looking at asset price returns under the four past administrations. Stocks did do best under Trump. And you could, attribute that to the Trump tax cuts and other sort of policies under the Trump years. But there were also big tax cuts under Bush, and you see here that on an annualized basis, the Morningstar U.S. Market Equity Index was in negative territory under.
Well, we got hit with 911, you
There's
dink.
obviously a lot of other factors happening. Context is key. There's a complex interplay of variables that you really have to look at. You can see here that stocks have performed very well under Obama and Biden as well.
And then talk to us.
That's because they print all the money.
Trends in terms of we'll start with.
Well, so did Bush. I mean, I got 3 checks from him for $300 a piece. He started all the crap.
Let's start with that.
Right. So very interesting. I looked at what the best performing equity sector
We had a huge.
market has been under Biden.
We had a recession when Clinton left. It was handed down to Bush, and we started recovering. Then we got hit with 911.
AI enthusiasm. It's actually been energy, not renewables. But traditional oil and gas stocks have actually led the U.S. market under Biden. It's really counterintuitive. I don't know that you can credit it to Biden's policies. It's really market forces that are driving that. And if you go back to the Trump years, very interesting. The reaction.
It's now 10:32, and I want to get my steak started, but I'm in.
Was really positive.
I'm in calls on both of these right now.
Basic materials, energy. The small cap value segment of the U.S. equity market really benefited most from the Trump election in November 2016. The perception was that domestically oriented, economically sensitive, rate sensitive sectors would benefit from the Trump platform. So there was a big rally.
If it wasn't for geopolitical issues, we probably would have never had a recession. We really haven't had one, but it's always been. It was COVID, 911. We had a total shutdown when 911 hit. And they had to so they passed out stimulus checks, and I think that was the start of it all. There's a big debate about we've ruined capitalism because we handed out checks to the private sector. Here's $5. Go, baby. 510. I'm gonna get 300. I think 100% out of this. 530. $620. Go, baby. 100%. Oh, damn, man. I'm sick of this. Always clean. FBI, keep a monitor on this call right here. Hello, who are you? Pieces of crap. I'm almost to 100% on this call right here. I'm down still for the whole works, but we're getting close. I mean, I'm not down now because of SPX. But I'm seeing 3 soldiers here, 4, and got 3 here. So we can get to the VWAP on the SPY. And I got these at 25 and 29. And I sold all my SPXs. Come on. Bounce. Don't pull back yet. I want to get 50 cents out of this so I can get back my money. We've got a yin yang right here, which I don't like that. Oh, here we go, here we go. They're buying at the bid, or they were. So I think we can get up to this channel up here if this keeps going positive. Right there. Jimmy. Don't dip. We can go down to the yin yang, which I don't want to see that. That's right there off the 21. On the SPX. And the SPY got the yin yang right here on the SPY at the 50. So if we hold, oh, no. Right now I'm up from 25 to 39, 40. I got the 200 SMA as an exit idea. That's a Head and Shoulders. Yeah, perfect Head and Shoulders right there at the 200. So that's where I'm going to get out of this trade, I think. We're at 6:30 now. I sold all my calls on the SPX, so I'm it's 100%er. And here on SPY, come on. Oh, damn it. This is really getting under my skin. Always clean. May I help you? Yeah, what's up?
Good morning. My name is Elsie.
I don't care what your name is. I want off your damn call list.
A and B, you are eligible for various
I ain't eligible for shit.
like monthly $180 cashback, dental, vision, hearing, prescription coverage, and food card at absolutely no cost.
No, bull crap. It's going to cost somebody something. Get me out of here. I don't want on your call center no more. You hear me?
Okay. I apologize. I will make sure to put your number in the do not call list.
Do it now.
Take care and goodbye.
I'm sick of it. Okay, I about got 100% here. $100%er. SPY and SPX, profit. If we break the 200, this could be a miracle trade. I mean, this is really tight. We got 3 white soldiers. I'm going back to my TTM here. We got the 200 right here. There's a big difference on these two charts. Look at this. Come on, you piece of crap. I got so mad yesterday with them calls. I bet you I got 15 of them. I don't want your damn welfare. Can't you get it? It's costing this country too much. If I want your help, if I want it, I'll call you and tell you I need it, which I never have. I've had food stamps for 3 months. And I went through a college thing where they let me go to college for 2 years because I had epilepsy. I kind of like his CTM better. Sorry about that, YouTube. You're just getting under my skin. So my apologies. I mean, the AI, I don't know if it's a good thing or bad. It's got calm down, Jim. Take a chill pill. Don't ever call me when I'm drinking coffee either. I mean, yesterday pushed me over the limit. They're going to do that same thing day after day after day. I don't want on that stuff. And I blame AT&T a lot too. But again, my apologies. If you have children around, tell me. I'll tone it down big time. So we're getting ready. We've had 3 white soldiers. We're retesting in the 9. So this is very important if we can break here. Oh, I had 2 different charts up. No wonder, you dumb bat, dingbat. I had the SPX and the SPY. Yeah, see, it's still a big difference. So I don't know. I don't know which one to go off of. I've traded with this one for so many years. I have to answer my phone because I own a business, and one of these days I'm going to get on here and just freak out on them. They're going to say, I ain't going to do business with this guy. So right now we're bearish, but we're still bullish. As long as we stay above the 9, yep, there we go. So we could dive down some more now if we don't hurry up, if this body doesn't stay above the 9. Showing some sign of weakness. This is a descending flag, so it's bearish. And that call number 5 or 4. $120,000 contracts are bought there on the SPY. Ooh. Where'd it go? It was in there somewhere. So keep an eye on the SPX here again. We're at the 63. We're kind of close to a shoulder line. It can drop down to here easily though. That'll be there's a couple resistance levels. There's a support right there, one of them. Let's put that one in there. Cut off the left extension. It's right to the 63, so we could rebound here. And these are, oh man, they were just cheaper just a second ago. Again, my apologies. I feel bad. If I wasn't live, or it could have been a lot worse. But I'm so tired of them calling me day after, I mean, especially the last 2 days. It's like they're God forgive me. I forgot even what I said. I might go back and listen to it and record it and put it on YouTube. Say what this is what happens when you bother Jimmy. What time was it? 10:54. When he's trading. We're only 2 notches out of the money on these 5700s. 580 to $7. Bam. Now we got a 1, 2, 3 resistance. break the 200. Show some resilience, please. Man, I really feel bad about that. I'm good at holding myself back. But I'll tell you, I don't like being in a room where people can't get along. And when I'm in a tense moment, like a trade, I don't like call centers calling me up because I run a business and one of these days I'm going to freak out and lose a customer. But I got to answer that phone because I'm on call for 24 hours a day. Because of COVID, or somebody take a shit. Like one time someone took a shit in a hallway at the IRS building. I had to go clean that up. So I wasn't too thrilled about that, but I had to go. They had to go too, I guess. Yeah, we might not get an extension up to the upside here. I mean, it's going to be tough. But the feeling I was getting through the commentary this morning wasn't too hot. FedEx, for one.
We're going to bring in Joe Mazzola, head trading strategist. We're going to bring in Kevin Green. We're going to bring in Andy Swan from Likefolio. We're going to bring in Alex Coffey. We're going to bring in Ben Lichtenstein.
And James Howard. Bring James Howard in.
Think about it. Beat up names. Boeing, of course, beat up and going through one problem after another. 5 below. That's on about 44% off of its highs. And then we'll wrap up with Ulta Beauty. The stock's down. Warren Buffett likes it. Berkshire Hathaway likes it. We'll see what we can come up with in all 3 of these names. Now, before I bring in my guests, before we get this show started, let's check the 4 major indices.
I like Ulta during COVID, but not now.
12 o'clock Eastern.
I mean, this thing's up too much. What are you talking about?
21.5 points to 56.91. Dow Jones Industrial.
It's already had its bounce.
84.5 points to 41,000.
We had a double top up here.
Down even 0.5%. 99 points to 19,000.
SPY, I mean, this SPX is scalpable big time.
15.5 points to 22.37.
There's up $100 right here, just off that one candle.
My co-host for today's show, he's going to spend the entire hour with me. Poor guy, Mr. Kevin Green. Thanks for coming on live from Denver.
We break the 9. It's an easy shot up here to number 4.
Get that? Good to see you, Kevin. You were in the office this week. It was good to have you in. Kev, incredible week. Incredible news flow coming out throughout the week. Here's the thing. When the bell rings at 3 o'clock today, what is Kevin Green going to remember about this week?
Obviously, the Fed cuts are going to be the biggest thing on the radar here and the reasoning behind it. Now, we are going to get a slew of Fed speakers next week, probably too many, but we're going to get a bunch of Fed speakers next week. They're probably going to come out and justify the meetings for the cuts, and if they continue to address the fact that inflation is on the right track rather than employment being a little bit of a risk, then I think that's probably going to be ultimately bullish for the market here. But we do have a lot of economic data as well. So, going back, you see risk on tone. the Russell, if you're looking at the Russell, kind of approaching
Break the VWAP.
trying to break out to the upside. I think next week we got to just look for
We need SPY to break the 200.
A phenomenal week for equity traders out there trying to recapture new all-time highs.
Yeah, that's right, Kev. Usually after the Fed quiet period, they get quite loud.
Randy, did you take a trade with Bobo?
See that already this morning with Christopher Waller coming out. Now, though, let's bring in the head trading strategist at Charles Schwab and Company. That's Mr. Joe Mazzola to the show. Coming to us live from the West Coast. Joe, again, I'll ask you the same question. Big week, a lot of news breaking, even news breaking this morning, actually. What is Joe Mazzola seeing?
I am pleasantly surprised, I guess, by the follow-through we saw yesterday from the Fed announcement. You know, a lot of times you kind of get a head fake, right? And we saw that the day of Wednesday. But I was amazed to see how much futures rallied and how that carried forward into the cash market in yesterday's trading. I mean, just take a look at what we saw with the NASDAQ, over 2.5%. You know, so it wasn't just technology. You saw it in the Russell. So the small caps were up over 2%. You know, the only laggard was really the Dow. But you know, when you look at the sectors and the strength and the performance that we've seen, you know, the same story kind of holds. It's really the interest rate sensitive names that have kind of carried forward in terms of relative strength. You know, that pans across utilities, real estate, financials. Just looking at kind of the percentages of stocks above their 50-day moving averages in those three sectors, and they're all well above 80%. Utilities and real estate is all 100% above their stocks, with their stocks above the 50-day moving averages. So there's a good amount of strength within those sectors. And then market breadth as a whole really picked up this week as well. You know, we're back to areas about 77% of the S&P 500 is above the 50-day moving average. You know, not so much in the NASDAQ, but that's kind of been the story all year. It's been a chosen few there. But then the Russell really saw some decent strength, taking that back up to about 2/3 of those components above the 50-day moving average. So look, it was a nice broad-based rally yesterday. You know, you might expect some fading today, kind of given the strength that we saw yesterday. And you're seeing a little bit of that today, but it's not a big give up considering where we came from.
No, I think, Joe, that's exactly right. I think this is a rounding error to what we did yesterday. I told Oliver Rennick this morning, what's my goal for today? And the goal for a lot of traders, just hang on to what you made yesterday. If you can keep it at or near that number, that's the end of a really good week. Kev, speaking of a really good week, let's talk about the 10-year note, right? The 10-year note has come down off its recent highs. The technical levels, it was overbought on the upside going into the event on Wednesday. A lot of people talking about yields creeping back higher the rest of the week. Is that just a technical bounce? And now that actually today already, 10-year notes starting to firm up here, how do we see rates going forward? How do we look at the move in 10-year note this week and the move in yields?
Yeah, I think the 10-year yield is not only just this week, it's been over the last couple of weeks, Kev, where the 10-year yield, if you're looking at the rate itself, probably was overdone to the downside here. And so after the Fed rate cut, we had a renormalization of not only just the curve itself, but also the 10-year.
What have I done here? I think I found a new trick.
When it comes to the 2-year, that's structural in nature. So a little bit of an unwinding, and actually it's bullish if you think about it.
Oh, I had an arrow on. Okay, never mind. I ain't found crap.
You want to see a really strong correlation or a negative correlation between yields kind of moving to the upside and equities moving to the upside. That would signify risk on sentiment in the market, investors trying to chase yields, and then the opposite.
Come on, break, baby.
You have some type of event that does occur.
I don't know if it will break or not, so I'm really debating on getting out of this. But then I know if I do, it'll be a shameful thing to do.
The curve, especially on the 2-year side here, I think is a positive sign. The market is also just very enthusiastic that we are in one, cutting at pretty much all-time highs. Two, that could spark activity when it comes to housing, and maybe that does free up some inventory. I'm a little bit skeptical of that. But also when you kind of look back at the trends here, usually when we have an event or a recessionary type of an event, in this picture from the Fed, it's usually also coinciding with the credit.
I got to go back and listen to myself. I mean, that was.
And that's just not the case right now. And until that actually happens, I think we are going to be in the.
I can't get over it.
The credit side of the
and I'm wanting to have a steak.
Really adds fuel to the fire for an equity sell.
I can walk away from this and just pray
Joe Mazzola, traders like to
I
simplify.
can get 200 or 300% out of it. We're squeezing any moment.
And just
Any,
one clear theme that we can trade.
we're going to know
along with.
something here within a few minutes.
This has been a noisy.
It's going to either break it or give up. 1 bits, 2 bits, 3 bits, 4. Break it out so I can make some more. We have, really some hard resistance levels. If this breaks, I'm pretty sure we're going to move up a lot more because we got the VWAP, we've got the 200, and then I've got this number 4 resistance here. I don't want to sugarcoat nothing, but man, it'd be nice if I could get to 568.50 with these. And then we got a small barrier right here, so we could hit that and pull back and hit the 200 and then take off. I got a lot of these calls. I overloaded myself because I was mad. We're back to 50 cents again, 49. So let's break it. Let's just continue it. Let's just not stop here. Last resistance 567.46. So I said we'd come back and hit the 200. Now we, oh. No, break it. I got 300% on the SPX if I'd held it, almost. But I had to get out. I mean, it was up 100%. That's a good trade. So when I cook the steak, I'm going to do a searing job. It's called a cold sear. Come on, baby. Let's just go ahead and finish the job. It says we're finished in a way. Calm down. Hello, this is James Howard with Always Clean. May I help you? You know, when you don't answer it when I talk, I know you're either a punk or a piece of crap. So what are you? Is this the FBI recording? Am I under an internal investigation? Who is this J.N. Keithley? That's a weird name, you know it? Does your mother dress you funny? Jimmy doesn't like to be put on hold. I mean, we're so close to breaking resistance here. I just got to hold on a little bit longer because I've been here before where I just go ahead and sell it. We break the 200, I think we're, our next level is going to be at 56.99, which is a double top off the head of this Head and Shoulders. In fact, I'm going to put a line right there off the shoulder line. See where that takes me. Yeah, see, that's way below. We're above the shoulder line, which is good. This is good. I said we'd come back and retest that, and that's that shoulder line, so that's real good. As long as we come back and retest the old resistance, we should pop up here, 56.98.79. Buffett likes Ulta, huh? It's definitely cheap. Ulta is a perfume and that kind of stuff. It's weird how my emotions, man, go from like desperate to flabbergasted. I've been like, it's been like that for the last, 3 weeks with me when I get in these kind of trades. And I haven't had that experience, well, I've had it, but I haven't had that much going on for a good year like that. Now we're losing a little bit of support here. I still got some of these calls left on the SPY every time I hit 50. But I want to break it. I don't know. I won't be able to know if I can find that. I want to record that. I think I want to listen to how I talked. I'm surprised YouTube ain't blocked me yet. Sell and leave runners. Let's break it, Met Tab. We got a 1, 2, 3 bits. Actually, a 1, 2 bits, but I'm going to call it a freebie. Let's squeeze out of this here ascending triangle. It's almost like a rising wedge if you look at the 1 minute. So we're going to know here in a second. I'd take some profit though, definitely. Because we're not getting that 50 cents that I want. Five, 10, 15, 20, 25, 30, 35, 37 minutes. And it's 12:20. We've got a whole hour before the fat cats come back. Oh, there's some nice blocks coming in here. 2,600, 1,000. Those are nice blocks. A block is amount of ticks, trades. What do they used to call them? I can't remember what they call the size, but it was something else. I used to trade just on blocks when I started trading. I think they're called blocks, but there's something else. They're called something else. I'm gonna go get it. I gotta get something in my belly, an olive or a couple olives. I'll be right back. I hate to leave. Bring it. There we go. There we go. The third resistance is right here. We're back to 50. Scale some out here. Okay, here. Doing in my olive. Oh, what else can go wrong? I'm going to assume it's mine. How disgusting. What else is going to go wrong with me today? $10. What turned into a pathetic day just now turned into the most magnificent day. Just break out. We're almost up here to double top. This is one hell of a recovery. The option's at 1040 right now. I'd scale some out, do something smart. We could go higher. Come on, baby. Let's just go all the way. A breakout, it's going to pull back. I don't want it to pull back to the old resistance. I really don't. We could come back and hit the 9. 567, 67, 67, 67, 67, 67, 67. Snake, breakout, pullback, boom. Snake, breakout, pullback, boom. Okay, now here we go. We need to hold this support and move back up to the upside. Now we are at a resistance level, so you really got to ask yourself, do I need to go to lunch? Or are we going to teach the market a lesson here? Break it. We're flagging out again. And after I get out of this trade, I'm going to cook my steak. Come on, break it, bitch. You've gone this far. Don't stop. We could get a big knife. I mean, we're at that point right now. Oh, God. Always clean. Always clean. May I help you? I need a I can't even hardly talk. I'm in great stress right now. I need help. Please. These calls are taking me to the limit. One more time. Break it. We're flagging out. We're going to know any minute. I mean, this is really good enough. I need to take an aspirin. Or Nancy, give me a Valium and a shot of vodka. Okay, something ain't right here. There's some big blocks still going through here. Looks like they want to try to keep it up. See, this is a pennant flag. It can go either way from here. And Fat Cats will be back in 40 minutes. That's called a pennant. This is your flagpole. And we've got 1, 2, and a 1. I could almost call this a 2. I can call it a 2. And we're getting ready to have a doji, so we're going to do something here soon. I wouldn't add no, I wouldn't, I wouldn't be, unless we broke resistance, and that'd be a double top. But we could pull back. $568 is what we got to break. Break! $568.37 is next, and the tape looks marvelous. $7,600 right there. Somebody bought a big lot. Not compared to that 120,000 down here. So they're happy. There's 1,093. As long as I keep seeing 1,000, they went from 1 to 5 to 1,000 now. From 120,000. I mean, Keep pounding. Yeah, it might be Mikey. I just want to get 10 more cents out of this. These ain't bearish here. These are bullish still. And we did come back and retest the old resistance. Come on, baby. Let's go ahead and break out. I could sell them right now. I mean, shit. Oh, God. What the fuck? Always clean janitorial. Now I run a business, and you're interrupting my business. I would appreciate it if you took me off your call list, or I'm going to really do some serious damage. It's either to my phone or to your face. And I will get the FBI involved. I'm going to give you one more last warning. Bitch. Don't call me no more. Not good to be greedy? I know. I've been here before. But I'd love to get to the shoulder line. This tape just looks too good to say no. But it could be a lot of other. SPXs are 1120. $1,700 there. Keep going. Man, this tape's strong. I can see rookies getting out of the trade. All right. Just get my number. Come on, baby. I'm proud of myself. Let's see if I want to keep this going. I'm not sure about it now. I'm definitely going to check my blood pressure after this. And I'm going to have a steak. I want to try to, I got a little bit, I wish I had some heavy cream. I'd make a cream sauce. Come on. They're not selling it yet. There, we might be seeing some selling now. There's 1,300. We've got some bearish candles right here. We're almost there. Some more buyers are coming in. There's another 1,300. Unbelievable. I can't tell you how happy I am. $1,700 right there, 500 there. Okay, Jimmy said 568.37. Randy, make a business decision. I'm about even on my challenge account too. I held them. I'm only down 100 right now on that challenge count. If we could just get a little bit more. I mean, I can make that up real easy, but I'd have to do it tomorrow or Monday. or 63. I need 66. $63, and I needed 66. So I don't know if I should sell it or I want to get that. I'd love to make 20 bucks off this trade, at least. Or 64. Keep going. I think I'm going to go. Now there's a red flag right there. Let's see if this. Come on, give me 66. I got 4 more pennies. What do you think, Randy? Magnificent? I know what you think. Where's Mikey when you need him? Man, my hands are so sweaty right now. I can make back 100 real easy here if I sell it now. That's a red. That's a no good flag right there. That's the first one. Just come on, 3 more cents. Oh God, I'm gonna make it. I'm gonna make it. Come on. Boogity, boogity. She ain't wearing no clothes. Okay. I got to make a business decision. Tape slow. There's 1,500 there. That'll keep me in the trade just a little bit longer. Please, I don't want no phone call. Okay, the chickens have left the hen house. Okay, it's giving me another chance here to say get out. See if I catch this thing green. Fat Cats, we've got 25 minutes before they get back. We're getting ready to squeeze one more time. We're stayed above the 9. As long as I get that candle above the 9, I'm staying in it. But we're getting ready to know real soon here what's going to happen. Real soon. Somebody keeps buying 1,000 of them. Okay, Jim, make your mind up. You're just pushing your luck. If you're in anybody in this trade from the bottom, I want you to take your profits. Because I think we're getting to the end here. And then I'm going to go in there and cook that steak. Fly? I wouldn't advise that. There's the bull flag right there. Okay, I'm out. I'm out. Probably wasn't the brightest thing, but it was a lot better than what I was. I got out at 57. I added on at 40 cents. The other ones I added on at 25. We could probably break out more, but Damn it. It's all right. It's, anyway. Woo! So my challenge account took a $180 hit. First initial entry was 92. I added on at 47. I needed 66, and I got out at 57. Might have to do a little exercising. Okay. So I got 700 left to trade in my challenge, but I think I'm just going to wait. But I did real well in my regular account. So I'm going to go in there and sear that steak. I'm really not that hungry now. Trump shooting, what? Secret Service internal investigation reveals communication gaps and lack of diligence. No shit. I wouldn't be able to trust him. I'd just message him, Trump, and tell him I can't trust these guys. I mean, heck, I'm not even a Secret Service. I would have known to man that building. It was too hot, and you're out breastfeeding it. I mean, come on. That chick should have been fired on the spot, and whoever left because it was too hot. I understand they wear the black suits and they're all, but man, change them to white. But that was a bad dereliction of duty. Oh well. I would have loved to have got 66 out of it and come out even. There's some big blocks being sold now. 10,000 right there, another 1,400. So I'm gonna go see what I can do with this steak, and I'll be right back.
To 1990. You know, Alex, we were talking on the Future Show this morning about the rally we've seen in the broader market, new all-time highs this week multiple times, the S&Ps, the Dow, and I was reminded of an old trader in the pit who used to talk about how the stock market was created to generate wealth, he would always say. He'd basically say, just buy into this thing and hold on long term because, again, this was created to generate wealth and it will over the long term. This is one of those stocks, right? You've got a staple stock here that's
Pepsi.
Done very well for the long-term bulls. Stocks above the 200-day moving average, just below the 50. They're kind of teetering around the 2 for some time now. Again, a reflection of that consolidation phase that we're in.
Yeah, debt-based monetary system relies on growth, right? There's constant expansion of the money supply. Something that's priced in
There's the chart,
the money supply. You'd expect, as long as the company's still chugging along, and in the case of Pepsi, it's only grown. You'd expect to see a chart like this. It's one of countless charts dating back to that time frame that look like that. In fact, If it doesn't look like that,
it's got problems.
You're looking at a name like an Intel. You're looking at something that's struggled, and there's usually a reason behind it. But the catalyst for today's down move, you could attribute, I think, pretty safely to this Morgan Stanley downgrade to equal weight from overweight. They didn't move the price target, but they talk about kind of organic sales growth weakness lingering as consumers are trading down and things of that nature. Last one on our list, though, is CrowdStrike. Let's talk this big tech player. I'm not surprised, I guess, Ben, how this is starting to unfold, which is it seems there's this huge shock. They're essentially the reason that, things shut down for a lot of the technology world for moments as things have to be patched because of a mistake. And there's this immediate reaction of like, hey, sell the stock, get out of this. They're going to have problems to deal with. And they do. They do have things that they're dealing with. There is going to be, repercussions for that monetary as well as perhaps, business growth. But at the same time, this was so integrated into so many things. It's not the easiest of things to just back out and replace with something else when it comes to cybersecurity and the importance of that. And it's certainly not going to be cheap to do that. I think what we're slowly realizing is, yeah, they made a mistake. Yeah, maybe the leash is a little bit tighter than it was. There's not a lot of slack in that leash anymore. However,
this is why
they're a pretty important company to the tech world.
This is why I like trading with the Tasty trade. Is I got in this trade just like that, and I was able to get out just like that. And when I got in it, I had 93 on the order, and it gave me 92. And when I got out, I had 56, and it gave me 57. So, that's that. And when you've got so many calls, every tick is 20 bucks. Now I'm sure I probably could get more out of this, but I don't want to think about that. But I was in and out of it. Once I pushed that trigger, bam, I was out. There's no hesitation. But you've got to have volume, and they got to be good stocks. But you're in and out at the limit, not at the market. The market, I don't know what the market would have gave me. Always clean, may I help you? Never tell you that AT&T sucks. If you use their phone service, I feel sorry for you. Because I'm getting these bullshit calls every single day. And it's going to drive me nuts. I'm a patient man. I'm a simple man. I like back massages from Asian chicks. I like to study the kangaroo rats in Africa. I got a little property up north that I'm thinking about giving away. And I want to move to Hawaii. I'll be surrounded by Asian chicks there. Did everybody? Who else took that call with me on the SPX and the SPY in the room? Randy, I want you well. Might have you join my little diet with me. We'll go carnivore. In fact, I'm going to check my blood pressure right now too. I've been doing it. I kind of calmed down now. Mine was always too high. And sitting down and stuff, you might want to step around, walk around a little bit. Fat cats are back in 5 minutes. Yeah, mine's kind of high right now. Do it one more time here. Yep, mine's just a little high. I got a strong heart. That's what they told me when I had my monogram, or whatever you want to call it. FedEx bounced $5. Starbucks is getting pumped by the fat cats. I'm glad that turned around for me. Yeah, I got to.
overlapping at the same short strike. It's neutral to bullish, but what's fun about this particular strategy's risk profile is what you'll see is it actually peaks out at a lower price. So the best case scenario, even though it's neutral to bullish, is actually lower. I oftentimes see this as like a buying of the dip strategy or leading the stock to the downside. But if it's done for credit, which it is in this
Don't go in big.
credit, you take no upside risk. Perhaps you can actually even be profitable if the stock does turn around, make a V bottom, or just stabilize. It does also really bring that break even down quite substantially. So break even in this case is $239.50. That's quite a bit, almost $20 full below the current share price. And it does have risk-defined, aspects to it too. You have a max loss theoretically of 950. That takes place below 230. So you're talking about a massive sell-off. Not impossible. I mean, it's down $40 today, so it's not feasible for it to be $30 lower over the next month. But it is risk-defined below 230, limited to $950. So keep $50 if all these options expire worthless. Have a chance to make $550 if it pins 245. And $950 is the max loss below 230.
Okay, let's move on. We've got another stock to take a look at here with Ben Watson back, and with another chart, and we're talking CrowdStrike. That's right. Talk to us, Ben. What are you seeing there?
Well, once again, I mean, I think Alex talked a lot about this, that singular event that drove the price of this stock down. We saw a big green reversal candle as buyers started to step in, push off the dip off that August low. And then we get the earnings announcement, which kind of muted that upward trend. But that built this kind of skewed double bottom or W flying W pattern here, maybe even looking at it as kind of an ascending triangle. Today we get the gap up rally breakout of that with some pretty good momentum. Now, to be fair, it's off the highs a little bit now this morning, up now still 6% roughly on the day. 318 becomes really that next point of control, or that node of volume in this resistance profile, or that volume profile on the side. You see that corresponds with some previous levels of resistance, not only on the downward move, but also previously back into that April-May timeframe. This was acting as a resistance level. So that may be the next target overhead. Beyond that, you've got the one standard deviation line out there at around 348. So if this continues to move in that bullish trajectory. On the other hand, just below this level, if it breaks 286, then you've got the point of control on the volume profile bars there at 262, kind of cutting right through that pattern. If you go over to the left to confirm what we're seeing on the right, that 262 level, also a horizontal level of support through that January, February, March into April, May timeframe. But we've gotten a bullish RSI, leading prices higher. It's booming out of the gate here. There's definitely some bullishness, but beware if it breaks the support at 286.
What is it, 286 here now, 318. Ben, looks to me like we're kind of stuck in the middle of this range here, and should we take those levels out, it sort of provides a lean towards potential test of the upper extreme or the lower extreme. Again, I sort of like it here. We're hanging out right in the middle band of this area that we've been in for quite some time here.
You bet. And I'll tell you what, now barring lightning striking again here, this has some momentum behind it. And it's
so I'm glad I got out. We're at 47 now.
I see it. That next level that
so I'm going to go get my steak going.
Is that 318 range, Ben?
Okay, let's say goodbye to Ben Watson. Bring Alex back in. Ben, have a great weekend. Appreciate the charts and the key levels. Let's bring Alex back in to trade this chart. And Alex, talk to me. It sounds like he's established a couple key levels to the upside and downside for us. So do they coincide with the levels you're watching for a trade example?
Yeah, I think so. I mean, the big 300 level is one that a lot are focused on. It was the City Analyst price target as well, and that's really where we're targeting for this particular example. October 18th, 290, 300 call vertical, $5 debit, so equal risk reward. You're risking $500 with a 295 break even, with a chance to make 500 if it goes above 300. Looking for that to happen over the next month here, Ben. So pretty straightforward, but risk-defined example. And if it does continue to just reclaim level after level, this one has a chance to be profitable. But most importantly, you're not going to be exposed for that full drawdown if it does, fall back to those lows of August for whatever reason, which was down near 200. So I think that's the part about these type of strategies that can make them, interesting for some is, hey, look, I can create a strategy that'll benefit if what I think happens does ultimately happen. But I can also choose how much risk I want to take to establish that trade, which this allows you to do. So risk 500 with a chance to make 500. Need CrowdStrike to rally about $7.
So Monday I'm going to be looking at FedEx and see if we get a retest of the double bottom or close to it. And I'm going to start a small position in leaps, maybe to December. See, they're just a little bit too high right now. That's a big jump from there. God darn. Man, this is pathetic. Always clean. Is this Tampon Wayne? Tamplin. Who is this?
This is Olivia calling you from the Accident Helpline. How are you doing?
Accident Health Line?
The reason for this call is to inform you that it was reported that you were involved in a car accident within the last 2 years, and the compensation amount for being innocent at the time of your accident hasn't been delivered yet. Is this correct?
Oh man, it was my fault.
Let me bring a claim investigator on the line.
You don't need to
Who will
bring
give you more
shit.
information on how you can get this compensation money.
I don't know what it is with these people. I gotta figure out a way to answer that phone call. I'm just gonna, from now on, if there's 3-second pause, I'm gonna be hanging up on them. That's the only way I think I can handle this. Because I'm gonna end up having a heart attack by the time it's said and done. I can't let these people get to me.
Welcome back to Next Gen Investing. Alex Coffey alongside Ben Lichtenstein, the host of Futures, who's in for Jenny Horn. It's time for FOMO. We're talking Apple, and joining us to help discuss is Diane King Hall, Senior Markets Correspondent for the Schwab Network. So let me get this straight, Diane. Friday the 20th, we got iPhones in the stores, but these AI features that we're all supposed to be excited about, we don't get those till next month.
No, they're not here yet. The phone is here. The iPhone 16 has hit store shelves today, the 16 and the 16 Pro.
No face cam today?
It is an event day for Apple, big event
Thank
day.
you.
Shares are moving higher. Wouldn't necessarily peg it to exactly to the release of the iPhone 16, because keep in mind, one of the big factors that we've been looking at is the arrival of the next wave of Gen AI within Apple devices. We knew Apple had been kind of late to the party of this massive push within Gen AI, but it's here in the sense that they have talked about it will be released in updates starting in October. In terms of how analysts are looking at it, you have kind of mixed views on today's release in the sense what Rosenblatt says. The early interest in iPhone 16 looks a little less than the iPhone 15, but they say
Man, I'm glad I didn't sell them.
features not even.
I was down quite a bit in this trade. I'm glad I didn't sell them. And when I added on, I waited a little longer and added on more to my other account because, I've got a challenge account and only had like 700 in there left to trade with. So I didn't want to spend that. I should have. I could have got another 20 contracts and that'd have been a pretty little trade at 25 to 60. I'd have got out of that trade for sure. But But I did well with the other one. 300% almost. 250. And then I traded the SPX too, and that was 100%. Plus, it could have been more. A lot more. I'll go get that steak started. Got to have it because I'm already past time. I should have had it at 10. Now I just wait until 3 and have it. They want business, that's for sure. They ain't getting mine.
Noticed, just as a layman, all those different time frames look pretty much the same. This is one that just seems to be building momentum regardless of the time frame you select.
Absolutely. Let's take a look again at the daily candle chart because this is really impressive. A minute ago, we were looking back, what was I said, beginning of 2022. I added a little bit of time on. We're now going back to the fall of 2020. It was trading down around $100. What I like to look for, Alex, you know, these areas of consolidation where the market kind of goes a bit more sideways than not. And then you get these breakout type phases where you take out most recent highs, again, consolidate, regain composure. It awfully looks like a staircase type pattern to me building up. Now, the other thing that's significant is each time that you establish a new area, if you're bullish the stock, you're able to kind of draw a line in the sand that you don't want to see it taken out. So again, while we're balancing around 145, you don't want to get below 122. A bullish stance while we're balancing around 180 holds above 145. It did, you can see that. And while we've been balancing and currently balance around this 220-ish, we'll call it. Maybe it could be even brought down a little bit with that August low. Again, these charts do evolve, and you have to kind of change some of these areas or these levels sometimes. It might be more like a 210, 215 if you did the math here. But basically, again, sideways consolidation, well-defined upper, lower extreme. Now 180 is your kind of line in the sand of the parameter. So again, kind of just with the trend, your friend, continuation more likely than change. What do the bulls want to see? Well, they want to see a breakout above those recent highs around 237 and then high conviction trade, energy, participation, not just a breakout and then kind of get back in that range, a breakout and then a new area of value form at a higher level.
You talked about a test of those highs. I looked at an example trade that would benefit if that exact, basically that's exactly what played out for this stock going forward. So skewed call butterfly, October 18th monthly cycle selected, so about a month in this trade. I think the earnings date was around Halloween, so nothing to contend with there, but perhaps some of this iPhone info starts to trickle in. That could be your catalyst. Buying one of the 230 that's slightly in the money, selling two 240s, that's $10 wide, and then define the risk by buying one 245. So buying a $10 wide call vertical, selling a $5 wide call vertical gives it this skewed nature, which actually removes the upside risk. Still, best case scenario is a target of those short strikes around 240. 330 debit, or is where it was earlier. That would basically coincide with a 230, 330 break even, which is just slightly higher than the current share price, below that all-time high. And also it creates a risk reward that's like, let's call it 2 to 1. You risk 330 with a chance to make upwards of $670. So no upside risk on this one, Ben. If it does rally all the way through 245, which would be a nice healthy move for one of the biggest companies in the world, you simply give up 500 that max profit, so it would level off at 170 max profit. That's going to do it for our discussion on Apple, though. Coming up, we're going to look back at the week that was. We're going to discuss all what's been going on in currency world post Jerome Powell and the Fed and this 50 basis point rate cut. We'll look at gold as well. Stick around. We'll be right back.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. Time for a macro discussion and look back at the week that was somewhat of a historical week. We had the beginning of what may be a prolonged easing cycle, although Jerome Powell, I think, kind of pushed back on that a little bit. Alex Coffey alongside Ben Lichtenstein here on this Friday. You're watching Next Gen Investing on the Schwab Network. Ben, all the actions when it comes to dovish policy has one goal in mind. That's to weaken the U.S. dollar. So, if you're weakening the U.S. dollar, at least that's what you're trying to do, that's what your plan is, make them a little bit easier to get, things that are priced in the U.S. dollar naturally get more expensive. Look no further than gold.
A prime example, I would argue, of that inverse correlation that we oftentimes see between gold and the U.S. dollar and commodities that Alex is referencing there, or referring to. But yeah, I think to new all-time highs today, definitely a chart that's worth taking note of here, so I'm glad we have a little bit of time to talk about this one today, Alex. It's not just the weakening dollar. I'd argue there's 3 or 4 other contributing factors that have been playing out. Trends we've seen in gold, central bank buying, geopolitical tensions that have created this really well-defined bottom left, top right type pattern. You can see it. We're going back to, we're talking about middle of August here when we were trading around 24.20. Again, historic levels achieved today up to 26.51. Let's take a look here. Again, it feeds right into what I look to look for, right in my wheelhouse in terms of these auction market theories, concepts, principles, ideas, and these 2 phases of price development. Just kind of looking at some of the more recent price activity through the middle of August into the middle of September. We were trading around this 25.40 level. Look at this high conviction breakout that comes into play, and then we go a bit more sideways, right? Kind of bounce around 25.90. Looks like we're in another breakout phase right now. This is in line with the pattern we've been seeing. And just stepping away from this 30-minute candle chart, you can see here this is playing out again on the longer term charts as well, Alex. Well-defined trend up off the lows from the start of 2005, around $400, recently above 25.70, 26.70, 26.50 now, and that should be updated in vertical phase, breaking out of the balance that formed around 2400. But you can see again the conviction associated with this trade, very similar to what we saw, if you remember, back in the beginning of the year in January as we took out 2,000. That was a big area of resistance. We broke out, similar to what we saw, if you remember, back in 2020, back in August after the pandemic. And again, you just see that kind of wash, rinse, repeat pattern play out here. It's not just stocks. You know, we talked about it at the beginning of the show. I was joking about that old trader in the pit used to say, this market was created to generate wealth. This is another one that was created to generate wealth over the long term.
Well, at least protected, I would say. And that's what it's done historically. But I love that the exact way that you just phrased that, which is that it's created wealth, because at least over the last 3-year time frame, this is better. This has performed better than stocks. This has performed better than the NASDAQ. This has performed better than the S&Ps. S&Ps and NASDAQ are up something like 33% for the S&Ps, and roughly the same actually for the NASDAQ with its sell-off since July. Gold, on the other hand, is up upwards of 50% over that last three years. It's up 36% in the last 12 months, so it's outperforming on a 12-month time frame and a 3-year time frame. It's also doing so with relatively comparable implied volatility. So you're not like taking more risk. It's not like, you're looking at a biotech company that's got a ton of volatility versus, General Mills, which is a consumer staple, and saying you're outperforming. Well, you're taking more risk. Hopefully you would outperform if the stock went your way. You're talking about an asset that moves comparably to the market in terms of volatility, but has outperformed it handily, and it's done so with very few drawdowns, at least over that same time frame, at least over the last year. So, Ben, how does that play into what we're seeing unfold beyond that? So you see, we saw a weird kind of yield curve steepening play out in the bond market. So it was almost like the selling of the news. And you kind of saw the dollar try to firm up. It hasn't gone anywhere, but it certainly stopped going lower.
Some of that, I think, can chalk up to the yen and some of the other central bank activity that we saw this week. Alex, I think it's a good reminder to speak to the fact that it wasn't just the Fed, right? We also had the BOJ. So just kind of sticking with the yen, they stood pat, did not seem to have or exhibit any urgency in terms of a move next month, even though we did see CPI tick up recently. Bank of Japan didn't change their policy. Again, did not change rates, didn't raise rates, but they did retain this tightening bias that they've had for some time now. We also heard from Norway, Central Bank of Norway, and as widely expected, stood pat. Basically, they continue to push back on some of the speculation they're going to cut rates in the fourth quarter. Australia, if you remember, August employment came in pretty robust, enough to allow them to maintain a hawkish hold. They're going to meet next week, I think it is, September 24th. Bank of England, also, when you're talking about the dollar, this is probably with the yen more important than some of the other two I just mentioned, Norway or Australia. Bank of England leaving their rates unchanged. Again, that was on Thursday, taking a more kind of cautious approach. But yeah, definitely at 5%, leaving rates unchanged. It wasn't just the Fed this week. So you have other currencies on the move that are going to influence the dollar. So yeah, I mean, we saw kind of rates firming up a little bit. I'm not surprised to see the dollar come up, but a test of the year lows, and it got below 100 even, down to 99, but a nice move back off.
It does seem that the market kind of looks at Europe as a whole and says anything the U.S. is dealing with, Europe's got it,
eventually. Yeah,
worse. Yeah. I was going to say they started cutting rates earlier. Yeah. They've had they haven't had the same type of growth that the U.S. has had. So, I don't think the U.S. sees runaway currency risk versus the euro or the pound this time, but where the volatility had been, and you're right to call it out, had been in the yen. And so whether you're looking at the FX pair USD JPY, you're going to see, of course, weakening of that particular product, which really means yen strength. And what you've seen is basically get back to 52-week lows or highs for the yen. You look at 6J, of course, it's going to be priced in dollars, and you're going to see the yen get stronger on that chart. Same thing, just coming off those highs. But when they did bring that volatility, and Japan seemed to be the epicenter of it, of that deleveraging move that you saw at the beginning of August, you had the BOJ basically come out either through surrogate or their actual member and say basically like, hey, look, we're not going to scare the market. And so I think that some of the sting of the uncertainty around the BOJ was really taken out at that moment. And there's no longer this like fear that you're going to have these two banks going dramatically the opposite direction. Subject to change at any moment. But I think there wasn't that much hype for the BOJ this time around, where there was tons of it a month and a half ago.
Absolutely. I was reading comments from Mark Chandler. He's regular on the Futures Show. Alex, he joins us from Bannockburn. today in his newsletter. He said CME futures market non-commercials have their largest gross long yen position in nearly 8 years as of September 10th, and the smallest gross short yen position since January 2023. This produced the largest net long yen position since September of 2016. So a good source for looking at some of the currency movements, explanation to them, and definitely focused on all that central bank activity we saw this week as well.
Good stuff. So we talk about this all day, but unfortunately we're coming towards the end of the show. We're taking a break. When we get back, Kevin Green's going to join us for what's probably the overlooked story of the day. Under 30, we're going to talk Cameco, which is of course, uranium company, but just a lot going on in this space. Stick around. We'll be right back.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinkle. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back. Time for Under 30 today. We're looking at CCJ, one of the names associated with uranium. Joining us now is Kevin Green, senior markets correspondent for the Schwab Network. I can't think of a better person I want to talk to about this headline, all this stuff going on in the kind of alternative energy space. There has been excitement around nuclear, at least some subset of the community of financial, particularly on things like X, for years now. And we're starting to see dominoes fall. Kevin, what do you make of this story and all that's going on in this space right now?
Yeah, this is actually a pretty remarkable day here. We do have, obviously, the news when it comes to Constellation Energy and Microsoft cementing a deal here to be able to provide long-term energy supply for some of its data centers in order to fuel the AI boom. And this is a narrative that a lot of traders have been really trying to focus on. Where are we going to get the energy for these artificial intelligence type of models, these large language models that we are seeing, obviously, a rapid increase when it comes to electricity demand. And so we are seeing, obviously, uranium stocks catching a bid just in general, as you kind of talked about. CCJ is up around 7.2% in this session. And there's an interesting dynamic when it comes to the space, just when you're talking about the mechanics here, Alex. There's not a lot of players or investable companies within the space. So anytime that you see a large influx of investors trying to gain exposure, it's really concentrated in a couple of names. And so that's why we're seeing a little bit of a bump. Now, CCJ is catching a little bit of a bid too, because they're the ones that actually kind of source the uranium for these nuclear reactors. And you have operations in several different parts, especially when you're looking at Kazakhstan, which is arguably one of the largest uranium supply areas in the world. And they have been able to not only outperform when it comes to top line growth, but also their cash management has been top-notch as well. Now, the key to their business is trying to lock in long-term contracts, and they're leveraging derivatives products in order to hedge those positions. So if you see a rapid spike in uranium and there's a massive spike in demand, they're able to lock in those contracts, and then over time, obviously, readjust as the near-term prices are either moving to the upside or downside. So this is one of the names that is a favorite for a lot of social media followers out there, and that's why we're seeing it catch a bid. It's trying to break out here today. If we can get above that 45, let's say 45.20 level, that's where you would start to see maybe a meaningful shift in sentiment for the stock on a one-year time basis.
Kevin, you're gonna love this one. You know, Alex, you're aware. Kevin was in the office this week, and he actually asked me about a fishing situation where with these power plants, they have these cooling lakes. Okay, so in the winter, these cooling lakes warm up. The water is warmer than the normal waters in the lakes and the areas surrounding them. So fishermen flock to these lakes because it gives them an opportunity to actually fish in the winter. Or
Radioactive fish.
No, not necessarily. The water's clean, right? Not the most scenic lakes by any means, right, Kevin? I mean, I think you would attest to that, right? I mean, you're basically fishing in the shadows of a nuclear reactor. But there's some good fish to be had. I was not a huge fan. I've done it a couple times, but near Chicago we got LaSalle. Kevin, you were asking me if I'd ever fished Braidwood, right? I think it was. But I guess half and joking aside here, Kevin, I mean, should we plan a fishing trip? Do we have a destination that we are going to go and get our lines wet in the near future together?
Look, you know, now you're talking my language here. Let's talk about the fish. Yeah, obviously, when you have these nuclear reactors, they have to be near a source of water. So a lot of these artificial lakes do prop up in order to cool the reactors. And yes, they actually have some pretty decent fish. And no, we generally do not see any type of leaks. I think the biggest major leak that we've seen in the past is actually 3 Mile Island, which is where this nuclear reactor is going to be opening up at. So that's a key thing. Just note, a lot of these technology companies, the Googles, the Microsofts, this is not going to be a near-term trend. This is going to be a longer-term vision for them. Instead of trying to outsource a lot of their utility maintenance and electricity maintenance in general and just hoping for the best prices, they're going to try to work with a lot of these utility companies and or find their own solutions. Now, Microsoft's not the only one that's actually expanded in this space in order to try to lock in electricity storage capacity or availability. Google, I talk about this a lot, Google also has a partnership with a company called Fairvo. It's still a private company, but they're utilizing fracking technology to basically tap into hot rock and then creating these geothermal systems in order to power 2 of their data centers in Nevada. It's remarkable to say the least. So technology and AI always gets that focus, but you're also seeing technology being revolutionized when it comes to the utility and energy space, and that's something that these technology companies are really going to be honing in on instead of trying to go to the traditional sources that we've seen in the past.
Appreciate it. You have a great weekend. Kevin Green, Senior Markets Correspondent for the Schwab Network. That's going to do it for Ben and myself. Have a great weekend as well. Everyone who's watching. Coming up next is the Watch List. We'll see you on Monday.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature.
Second nature to me,
This is
man.
potentially a human superpower.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying,
Away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
Set the cues.
Where else I would want my money?
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
I'm Diane.
So this is my Are we going to dump just to the 200 here? 567. I'm going to show my steak here. I'm getting there. This was attempt number 4. Watching the SPY off the 200. One more pullback. SPX. Where's the SPX? Where are you, bitch? Okay. The 5700s. Added one. This is ridiculous. What's the deal here? Are you working overtime?
Hi, my name is Robin. How are you doing today?
No, you're not a Robin. It says here you're a duty yachter. So, yeah, take it and shove it up your ass. Oh, I'm looking at the spy. Shit. What the heck? No, I'm on the SPX. That was earlier. Might be adding 2 more here. $435. Might add another one here soon. 2 more. I'm at 280. Give me 280. Nope, not going to give it to me. I got 435 average. I'm only 2 notches out of the money. I wanted at 280. Blanket. Green. Mr. Nice Guy's done with. I'm done being Mr. Nice Guy to these people. I'll probably get put on the hotline list, and the FBI will be knocking on my door soon. They've been hitting me hard here in the last 2 days. I can understand 1 or 2 calls, but man, 12 of them a day, 16 a day. You can tell they're not porn sites. If there were porn sites, I'd be a little bit nicer. It's depreciating some. U.S. equity indices are mixed. Treasury yields decline as Fed policy week heads for close. I got 2 contracts at 435. I think I'll just leave it alone here. I got to answer the phone. You never know, might get that next call that needs me. It's a little tougher than what I wanted. Okay. If this gets cheap enough, I'll buy 4 of them. Good job, Jacob. I had a call in the kitchen about my funeral cost. Come on. There's the right shoulder twice. Now we should. Come on. Couldn't get to it in time. Well, that's a spy. Well, I squeezed about every dime I could out of that spy. I'm proud of myself. We're still at support. Oh. Good job. I'd call it quits. I am SB. 3's a charm. 4 might set an alarm. This is my 4th trade right now. Don't give them satisfaction, keep my cool. Okay. It's just not a good day to be calling me. I'll give it a shot next time around. You know, I got one of them polls, and they kept asking me about abortion. And I told the lady, I said, I don't care about abortion. I care more about the borders. Ask me about the borders. Well, that's coming. So I got about 5 questions on abortion. They think it's all about the abortion. Maybe to some people, that's all they care about. But, you know, if I ever get a chick pregnant, I'm going to have the baby. I'll leave it up to her, but I'll stop what I'm doing and be a man. Okay, I need to hurry make a business decision here. I got $870 in this. And I'm going to be adding 2 right here. $2.50. Double bottom. Yeah, because it'll stress me out if I keep reacting the way I do to these people today. Break it. I'll be right back. Worth it. $435 and $250. I'm going to calm down next time they call, I promise. Do. Where are them spies at? I kept getting them calls all night long. To 6 o'clock last night. Come on, people. And I blame AT&T because they're the ones that got breached. They wanted me to freeze my credit. Okay, this ain't working out too hot. Might have to get out of it here soon if we don't hold this bottom line support. That or I get a bunch of them at 125 again, like I did yesterday. And that paid off big. $3,200. Well, nearly have as much. There's 125. Okay, here we go. Come on, baby. $1.45. Got 244. Calm down, Jim. And see, I even get belly growls after I eat. I've never heard that before. After you eat. I think my stomach likes this new diet. Spy not holding? Well, I know my arms are feeling a lot better. I can see muscles I've never seen before. tempted to go out and buy a scale, but I really don't want to. Come on, man. Don't do it. Quad witching. Blanket. That hurt. Damn, come on. One, two, three. We're squeezing any moment. I think. My day's not really been that good today so far. Well, it has, but it hasn't. I'm gyroing. And it hurts. You'd be surprised what this little bit of twisting will do for you. I forgot what the torque was on this. I think it's 40 pounds. If I remember right. WMIGFX. Breakout. This is where I got in yesterday at 125. We got down to 105. But we're a lot different time frame now. We got 19 more minutes before power hour.
Loans for our private credit exposure.
How much leverage is there in that sector?
So typically, it's called 4 to 6 turns on EBITDA. So these underlying companies already are levered. Then you get to the funds that you're going into, and these funds, some of them will have low leverage or little leverage. But then you can have funds that maybe are 2 times levered, meaning if you give them $1 to their fund, they will make $2 of loans on your behalf to already levered companies. So you have to be careful about credit selection and work with managers that are making good loans. In the CLO space I mentioned, that is a much higher leverage environment. So that's a space that if you see markets, there is a correlation with public equity markets. If you see public equity markets sell off, you could see CLO equity pricing down 30-40%. Why would someone invest there? They're getting 14 to 16% yields, cash on cash yields today.
Well, that's a nice yield. Let's talk a little bit about the PE space. And I know there's some areas of growth and opportunity that you're paying attention to. You talked about retail investors having more opportunities to gain exposure there. BlackRock giving retail investors access through one of its portfolio. What's the advantage that retail investors can gain getting into the PE space?
So first, since approximately 2002, the public equity markets have done about 10% per year. Private equity's done closer to 14.5% per year. So that's a 20-year plus period where you've seen private equity in the aggregate outperform public equities by 4.5% per year. That's a staggering number. Now, obviously, past performance is no guarantee of future results, but we do expect that return premium to exist into the future for private equity. The real thing that, to point out is 20 years ago, if you wanted private equity, you had to go in what we call a drawdown fund. Commit, they take your money over a number of years, and then they give it back to you. Not all your money's at work at any given time, and you have very limited to no liquidity. On top of that, minimums were high. Right? You'd be surprised to see a manager with even $1 million minimum investment. The products that managers are coming out with today, putting the same exact deals that they're putting in their institutional drawdown funds, are fully funded. You can buy it all on day one. You can have periodic liquidity subject to limitations. So you can change your mind if you want to. The fees have come down. So you can get into these funds at relatively attractive fees for the industry. And then lastly, the minimums.
$155.
$50,000, $25,000 per investment in some cases. That has really expanded the playing field for both advisors like myself and how we deploy capital for our investors, as well as, you know, the average investor. Even if they're a do-it-yourselfer, you can work directly with these managers in some cases to build out the exposure you want. We think it's a very, very meaningful trend going on in the industry.
When you say the fees have come down, what kind of percentage are you seeing?
So it's a great question. So, you know, be prepared for sticker shock. Typically in the private equity industry, which is more expensive than private credit, the standard kind of fee that people talk about is
sticker shock. How dare you?
Seeing in these new products today, there are managers coming out with, you know, I spoke to one this morning, their fund has a 1.5%
Should we went for a walk?
Performance fees. We're in a manager that we did a fund 2 years ago that was that 2 and 20 structure. Their new evergreen product.
I'll be right back. And go to the kitchen and get a milk.
For the mass affluent channel is going to have a 1.25%
My arms are sore.
management fee and a 15% performance fee. So while the fees are still high, they are coming down. And we've seen that trend over the last 5 years, and I expect the fees to continue to decline over time.
And really quickly, just to clarify, you said that 14 to 16%, I think that was the number you quoted, return.
I'll take 56.92.
Space average is net of the fee.
Correct. It's 14.5% per year since 2002.
Okay. All right. And last, really quickly, just the last thing you said, less so real estate. Why real estate and why less so?
So that's just a personal opinion on our side. Real estate market's been very challenged the last few years with, you know, the higher interest rate environment. And private credit, it's more of a relative thing, right? Private credit to us remains incredibly attractive. If you're able to get 10 to 12% cash on cash yields in this market today, given everything that's going on, we love being there. And I'll point out, for 4 or 5, this is not new, you know, this is not new. And for the last 4 to 5
That's
years,
why you said
we have
wake up?
seen the press continuously raise the alarm about private credit. We're 4 or 5 years into this, this kind of cycle here, and the returns have remained strong. We do not see default rates spiking to really alarming levels. And so we really rather be in private credit.
All right. All right, we will have to leave it there. That is Aaron Hodori, Managing Director and Chief Investment Officer at Schechter Investment Advisors. Thank you, Aaron. Have a great weekend.
Thank you. You too.
Thank you. Still ahead, we want to bring in our panel to dive into FedEx, which is seeing shares plummet after the shipping giant reported its quarterly earnings last night, which missed expectations. What else turned investors sour over the stock? We'll discuss after the break.
How's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now.
Should have grabbed a bunch at 125, like I said. 10 of them.
Made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms.
I'd be looking real good right
The
now.
Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
I'll be right back.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the Watch List. I'm Diane King Hall. Time now to dive into earnings from FedEx released last night. Shares are under pressure today. Want to talk about the big picture here. Let's bring in our panel. Andrew Wong, a managing partner, Runnymede Capital Management, and Sandra Cho, founder and president, Point Wealth Capital Management. Thank you all so much for joining us this afternoon. Sandra, let's start with you. FedEx missed both top, bottom line. What are your takeaways from their latest quarterly report?
Hi, Diane. Thanks for having me. Great to be here. Yeah, there's a lot to unpack here. The stock is down about 14% last time I checked today. And, it's really not just a matter of the fact that they greatly missed their earnings expectation, but it's also that the mood, the kind of tone of the CEO was that FedEx faces some really strong headwinds here. They lost this big contract that they had with the United States Postal Service to UPS. They try to streamline things. They have a big initiative.
They lost
called
UPS.
Drive, where they're trying to reduce their overall expenses, but they weren't quite able to do it. Now, it's early on, but it looks like it's still an upward struggle here. So, and then
Wow,
they
that's the
merged
opposite of what I heard
two
yesterday.
of their services, FedEx Ground and FedEx Services, to what's called Federal Express.
It really is.
Trying once again to streamline things, reduce costs, but labor costs being as high as they are, that's been a struggle. UPS has done a bit of a better job with that.
Okay, we're at resistance.
So, for the
Let's
short
break
term,
it.
The stock's going to be under pressure. For the long term,
I'm even.
it's out.
Yeah.
And then Andrew, what are your takeaways on what stood out to you? We also know FedEx cut their
Oh
guidance
man,
as well.
125.
What do you make of their latest report?
Thanks, Diane. We like FedEx. I think that the stock is down, as Sandra noted, nearly 14%.
Should have grabbed them.
I think that that's a strong reaction to a relatively modest EPS guide down of 5%. The stock remains attractive at about 12.5 times the next 12 months consensus earnings estimates. So before we get into the positives, I just want to take a look at the earnings report more broadly. I mean, there was a decline in demand for FedEx's services, particularly the U.S. domestic package market. And because FedEx is considered a bellwether of the U.S. economy, this suggests that businesses are reducing their shipping activity and consumer spending is down.
I mean, that's a big wow to me because the way they talked about it yesterday. What is this? Oh, okay. Thought I had a bill due. What is today? The 20th. I didn't check here. Make sure I don't have any bills due. $3. Yay! Profit. I'll take it. I mean, shit. Out at 350. Thank you, Magnificent. I wish I would have bought them damn things at 125. I'd have made $2,800. No joke, Jack. Whoops. Wrong room. Dang, $5. No. No. No, no. Oh. 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 The call center's got me going today. Ugh. That's all right. You know how much that would have been? Almost $5,000 if I'd bought the 125s and added on, because I'd have got 10 of them and I'd been at that 18 again. And Oh boy. Gosh. Okay. Did you make a business decision? Okay, calm down. Calm down. Take a deep breath.
Drums of the island, you're beating in my heart. You're with me no matter where I roam. If ever I wonder, if ever we're apart, I know that you will lead me home. I love each valley, each gift and each hill. These are the things that I love and always will. Though I may roam 10,000 miles, drums of the island, you're beating in my heart. You're with me no matter where I go. If ever I wonder, if ever we're apart, I know that you will lead me
Yakadee.
And
lead me home. Know that you will lead me home. That you will lead me home. Hey. Gosh, it really burned me. It really burned me bad. I mean, I seen the knife coming and I jumped right in it. Then we had a pull back and I added twice, and then that third time, at 125, I mean, I sat here with looking at 10 of them. I wanted to get 10 of them, but I was so stressed out yesterday with that trade. And then today again, I mean, I was down from, well, 113, 193 cents to 25 cents, and I just didn't. I took a big risk there on the SPY and held it. And that was in my challenge account. I should have, if I couldn't have done that. I mean, I could have, well, it had to get 435, so I would have got out even. Because I could have added one, and I could have got out, I guess, with 100, 200. But I wouldn't be able to buy it at 125. I got to learn how to. I mean, I'm getting better at. Well, I'm really proud of that first trade I did today, holding as long as I did. I could have got $5 out of these though. That'd been 100% gain on 8 of them. Five minus 5 minus 244 times 8. That'd been 2,000. Profit. And at 125, it would have been a lot more. A lot more. I'm going to take 244, 2.44. Let me see here. I'm going to do that 5. Minus 2.44 minus 1.25 equals times 8. No, that ain't right. 2.44 plus 1.25 divided by 2 would have been 185, $5 minus 1.85 times 8, 2,500. Seems like it'd be more than that. Let me try it again. 5, oh, excuse me, 2.44 plus 1.25 divided by 2 equals 185. $5. minus 1.85 equals 315 times 8. That's better. That's 2,500. No, that's way off because I had 10 of them. So it'd have been $3,000.
His doubts around just how soft we can land. Kind of seems like a little bit of a broken record. Gotta love Jamie, you know. I'm always interested to hear what he has to say, but
Jamie Dimon is not afraid to give a worst case scenario version of any topic. He's actually quite adept at doing that, right? He was talking about rates going to much higher levels before anyone else. When they were higher, he was talking about them going higher. So Jamie Dimon, it seems like he manages risk from a worst case scenario perspective and what can happen. And then he works up from that. And as you know, Jamie Dimon loves to give a good headline and loves to give a good comment. So I'm not surprised that he weighed in. Remember, the market looks to him for commentary and what the largest bank in this country is doing. So, no, Jamie Dimon weighing in, I find it entertaining, and I like the fact that he's willing to be so brutally honest when, frankly, some people aren't.
Yeah.
But he's definitely risk averse, and I think that's why J.P. Morgan navigates these waters so well.
he's also kind of clever in that he has his own view, of course, but he always couches it in a distinctly untrader-like way, where he's like, I don't know, I could be wrong. So to your point, kind of setting the baseline for, it seems, the lowest bar that he could function off of, and if it's not worth panicking, then he does always kind of finish his statement by saying, don't panic, which he literally did in this one.
Exactly right. So, listen, once you understand his characteristics and the way he works, it's easier to absorb and consume what he gives out. So I think he does exactly what you said. He'll go to the worst case scenario first and then work his way towards the middle and basically say, yeah, if that happens, it's still not a catastrophic event. Don't panic.
Yeah, definitely. All right. Okay. Banks, by the way, all right, but kind of a little bit of a quiet story this week in the market. Financials still stuck below their high from earlier this month. Thanks, Kev. Appreciate the thoughts. J.P. Morgan today down about 0.25%. Still hasn't really recovered from its hit earlier this month.
Magnificent, did you take that trade?
Garrett Melson, portfolio strategist at Natixis Investment Manager Solutions. Garrett, welcome back to the show.
Thanks for having me, Oliver. Happy to be here.
Thank you. So we've
Who's
got
Jimmy
50 basis
Joe?
points, maybe bigger than some thought. We got a big rally yesterday, kind of cooling off today. Does this change meaningfully the calculations that you got to do to figure out where to put your money and where to put your clients' money?
Yeah, so from our perspective, not a whole lot. We were anticipating...
Who's Jimmy Joe now? The name change? So I can get you straight. Okay, IMSB1, great. Did you take that trade? Jimmy Joe? It's better than Jimmy John's, so I appreciate that. I'd have had to ban you if it was Jimmy John. Jack. Is your name James? There's a guy named Jim, works at the IRS, and I said, I've been waiting all my life to say good morning, Jim, to somebody else besides me. And he's probably a little younger than me. I'm going to ask him how old he is. Well, it's funny, today I ain't had no more phone calls since that last one.
The Fed, obviously the hawkish one.
I need to call that chick back about the funeral, though. I was kind of rude. I wasn't really rude to her. I said I was cooking a steak. So let me see if I can find her. It ain't Tampon Wayne, so it has to be this one. See if I can give her a message. Might have me a date. See if she can save me money on my funeral plot. We bounced twice off the 63. Your name was, that's funny, man. My name was Bobo in high school. Bo Cephas. No, it was a Bo, who's that? Out of Memphis, that baseball player. Bo Jackson. I was called Bobo. That's funny. I mean, I've been called Bobo for a very long time. No, I don't know what a doppelganger is, but I'll look it up. Doppelganger. I'll look it up. I was called Bobo because of Bo Jackson. I played baseball until I was about 45. Is a person who looks similar to an other person, but not related. Wow. What do you look like? Do you look like this? I want to see if you look like me. You could be my lost brother. 540? You got to be kidding me. I could have got it again at 270 at 540. Wonder what picture I should show you. I'll show you the sophisticated Washboardjim. Or you could have the cowboy look. Do you look like that? Or do you look like this? Or do you look like this? I bet you look like that. Or do you look like this? That's Lawyer Jim. Or do you look like this? That's Bear Jim. Or do you look like this? This is COVID Jim. Or do you look like this? This is the Great Pumpkin Gym. Or do you look like this? A two-headed snake. Here's the naked gym. That was when I was skinny. That's my sister. Or do you look someone like this right here? This is Mophead Jim. I know it. I don't know what to say to myself. Jesus, benumbalumba. These things are at 710 now. Spy, I would still be in the hole on it, but these at 244 at 740, so that'd been $500 a piece. On the SPXs. Oh, I could have got $5 a contract. Five times eight's $4,000, and I settle for $800. You see why I like to stay in Magnificent? I'm good at buying the dip, but I'm horrible at selling at resistance. There's so much money on the table. But I really can't complain, but I'm just saying, I wouldn't be doing this, guarantee it. If I'd have kept all the profit. I know I'd be worth at least $5 million. Maybe 10. There's days, I mean, there's a period of time where it was 60 grand I left on the table, or 40, or 30. And you'll have seen that in the last 3 years. $80 at one time was $120. But I've learned not to be greedy, so it's always better to come out with a win. Damn, things went to 840. Exactly. Exactly. I got to scale out and keep a couple at least. You are 100% right. Oh, one of these days I'm just going to hit every one of them like that. And hell no, I did not hang around at Diddy's house. Obama did. I saw a video of Obama sitting next to Diddy, standing next to Diddy, bragging about Diddy, and Diddy had his sunglasses on and Obama's wiping the sweat off his forehead inside of a house. You know what that tells me? Crackhead. They just got through having a real good blow together. I've not seen one video where he's wiping the sweat off the top of his forehead, Obama, till that one. This could be worse than Epstein. At least Epstein wasn't gay, I don't think. It'd be a lot worse than Epstein's, what he had to go through. And he ain't around, so Diddy won't be around. They'll end up getting him and killing him. I said it. I've been one of the first to say it. Within a year, he'll be gone. Unless he's already got a double in there and he's on his way. I'm glad I never did orgies and stuff like that back in the 70s. We used to have what you call, they weren't Diddy parties, but there were B&B parties. Bustle and Brown. We had 150 people over every weekend, every other weekend. But it's nothing like that. Just kegs. I don't know if kids do that nowadays or not. Probably not. I don't hear about it much. Heck, I don't even see kegs being hauled out of the liquor store anymore.
Pretty fun. In a world of very M&A scrutiny, that sure would be a fun one.
Intel's having a good day.
Of the justice system, or lack thereof. So,
golly.
Intel obviously been in a lot of pain, so maybe it's a solution. Interesting story there. All right, coming up, we're going to take a look at the options flows. Russell right now down 0.75%, but it's pretty calm everywhere else.
Wall Street Journal reported Qualcomm approached Intel about a takeover.
The levels they've been at for most of the day. S&P's at 5,700.
This is big news. This is huge news. It ain't big, it's huge. You're the sophisticated Jim. This is big news. I'm 20 hours too late. Ah, damn, I'm in the wrong chat. Yeah, I just saw that, Parge. I got 2188 for the first support. So far it's hearsay, but they say buy on the rumor, sell on the news. Okay, I'm going to use a different approach. Always clean. My name's James Howard. May I help you?
My name is Becky from Senior Benefits. How are you today?
Well, I was doing real bad there until you called. How are you doing? They hung up on me. I was trying to be nice.
Verizon Wireless, your call cannot be completed as dialed. Please check the number and dial again. Announcement for Welcome to Verizon Wireless. Your call cannot be completed as dialed. Please check the number and dial again.
I was being nice. Call me back, please. I've been waiting for you all my life. Where's Summersville, Missouri? I'll come visit. You sounded so sweet. Senior benefits. She hung up on me. I thought I did a good job. Did I do good on that one? Someone grade me on answering the call there, please. I wanted to be her friend. QCOM is much better than Intel for sure. Well, okay. I'll give it another shot if they call me again. But she was real sweet. Oh my gosh. Look at that. Oh no. 1570. 1300 times 8. Oh. Panic attack. It went to 15. Oh. 15.70 minus 3.40 equals times 8. Oh my gosh. $1,230 times 8 is $10,000 paycheck. I'm all worked up. Oh my God. I could have had a $15,000 day. 16. More than that. I looked at the SPY too, and I'm gonna cry. Oh. 13, 14, 16 grand, 17 grand. Plus the other ones. I could have had a 17 grand day today at least. Did I hold him? Oh. R, did you hold him? Whew. Jeez. $125. Imagine 125 to 1600. If I'd have got the 125s, I would have left a lot on the table. 30,000. Okay. Well, what makes me decide between the SPX and the SPY? I'm going to tell you. If I think the SPY, I look at the SPY. I got these two charts up. And I've got this one set up as the VWAP. And I've got my SPX over here. So I'm watching, if I'm watching the SPY and I think it's going to break the VWAP, I want to trade the SPX because the SPX doesn't show up on the VWAP. There's no VWAP with the SPX, so I correlate it to the SPY. And if I think the SPY is going to break out, or if I think it's going to bounce, I want to take the SPX because I know I get a lot more money out of it, although I might have to spend a little more, but not really. I mean, these things were $1.25. These things were at 25 cents. So it's 5x. So I'm thinking I can get 5x easily through the SPX than I can the SPY, but my SPY is my leading indicator. It's like the like the head and shoulders right here, maybe. You got so I got a head and shoulders here on the SPY, and when we pulled back to it, I was more or less thinking, okay, we're at the right shoulder, breakout, pull back. And then another head and shoulders right here. And then you got that big hammer. So I'd have jumped over here. And you got the big hammer sitting right there too. Same one that's right here. They almost trade identical. So why not just throw a couple, 500 maybe in the SPX to where you throw $1,000 in the SPY at 125, you could buy, I mean, at 20, instead of buying 10 or at 25 cents, I'd probably buy more. But I know I can get 5x maybe if I trade the SPX. So more or less they run the same. They run correlation to each other, but I can use the VWAP. I can use the 200 SMA and just trade the SPX instead because they run together. Look at these charts. They're almost identical. Practically identical. And I get 5x out of this where I can just that's why I get them mixed up sometimes because I chart it up, like if I was trading a SPY, like today I got in the SPX and I had wrote it down on the SPY chart. See how they're pulling back the same? They run together. Does that help? Does that help any? So I have a double chart set up, one with the SPY and one with the SPX. I just like to have the VWAP because it's a leading indicator that I like to trade with. And I've been trading with the VWAP for years. There's a thing called the anchor VWAP that I'm starting to learn how to trade. Called anchored VWAP. And this is on TrendSpider, which I have an account with. And that's the anchored VWAP right here. And that's to be used like as a resistance or at a support. Right now it's being used as a resistance. It's a little different than the regular VWAP.
Connected from real rates. It's a really important
this
thing.
is
There's
Jake, and this is
something
another
else
video
that's
that's
happening, right? There's some other premium, to your point, whether it's central banks or maybe it's the geopolitical, whatever the premium may be. Like, there's no question that gold is doing something.
Always clean. This is Jim. May I help you? Amber. Amber. It's 25 seconds, baby. I've been waiting for you all my life. Hello? Amber Patterson. Are you married? I'm looking for a beautiful wife. I got a lot of money. You'll never have to work ever again. I promise. Are you there? Amber, don't leave. Amber, you're gone. I told you I had a lot of money. I'll buy you a car. I'll buy you a house with a swimming pool in Hawaii. And we'll raise lizards together. And we'll have a roach collection. In Hawaii, they can grow as big as your thumb. And I'll buy you flowers. And I'll take you out to dinner every night. And we'll go to a luau. And we'll hit all the islands. There's 5 of them. I'll take you to the top of the volcano. I can do it. Call me back, please. Pretty please. I love you. Amber Patterson, please. I still got to work on my approach. I'll work on it. Amber, when I saw your name, my throat went dry. I love the name Amber. My best friend named his wife's name was Amber. We could go out on a double date. And me and Jeff will switch back and forth. Yes, I'm bipolar. I'm getting there if I keep getting these prank calls. It can only go so far without breaking, what do you call it? Without falling over the edge. This is ridiculous. Always clean, may I help you? Are you calling me back, Amber? Patterson? This is ridiculous, honey. It's either talk to me or... How about if I sing you a song? Do you like to be serenaded too? Roses are red and violets are blue. I wish you would talk to me like I talk to you. The skylight is blue with an old burnt moon. Come to my home and we'll have dinner soon. Goodbye. I love you, Amber. That guy's a nut. Okay, I'm going to go into the bathroom and piss. I'll be right back and see what I missed. Parge, you think I handled the phone call well? Magnificent, you want to give me a grade? I'm definitely running people off. We've only got 7 in here now. Great. I'll be right back. We're at the 200 again. Okay. Oh man, it's already 3 o'clock. Time flies. Wow, it's already 3 o'clock. Well, I've got to say that today was definitely out of the ordinary for me today. Again, I let these phone calls get my way, and I got to answer them, so I don't know what to do. This has really been bad the last couple of days. I can understand 2 or 3 calls, but and AT&T is the one that breached, and I haven't had their service in 8 years. I had it for a short period of time because I got a little upset with Verizon, and I went back to Verizon. But AT&T had a breach last year or beginning of this year. I guess I got on a call list or something because I'm getting all kinds of people calling me from, and I don't know what's real or fake anymore. So today was definitely an odd day for Jimmy. Someone in the room did what I do, cost average down. It's a risky thing to do. I want to make sure that we understand that, especially if you're new to trading. But there's times where I've sat here day after day after day and sold for a loss, a small loss, because I'd use, I'd get out. Once it hit my entry point and it went below it, I always sold it. Sold it and got out, and there's times where I held on a little longer. Then you get in them big knives where there's nothing you can do about it, and you're down quite a bit. So I started cost averaging down about 5 or 6 years ago, 7 years ago, but not as good as I do it now. I mean, it took practice. It took me a long time to realize, well, it just hit yesterday's low. Maybe this is a good spot to get in the trade, or it hit today's double bottom low, intraday low, after it broke and breached my pattern, and then I started seeing stuff. Since I started trading the snake, I started studying patterns a little bit closer. I was more of a trend line trader. So if it didn't hold my trend line, you know what I mean by trend line, it's like today. I called this pullback to the 50 SMA, and look where we hit. We hit support. I got to share this with another room here. Huh. Well, it's not posting, which is strange. Very strange. 5. That's strange how my computer's acting right now. Could be, So I used to be like a trend line trader where I just traded a trend line across. And then I started studying patterns, Fibonacci's, and I realized where the supports and stuff was on the patterns. And if it come up and broke what was a support into a resistance, I would continue in the trade. But so I always had a little bit more patience, and then I keep adding more patience, and all of a sudden I'm just holding most of the time and buying the dip. If I miss it wrong, nobody gets it 100%. There's people that are probably a little bit more stricter about their entries than I probably am sometimes. But I take a lot more risk, and I usually end up on top by doing that. I see things that other people don't see. But I was definitely feeling a little bearish this morning at first, and we had that big pullback, and I guess I'm going to get in, and then it didn't hold, and so I'm going to take a break and get out of here, clean my kitchen. That steak was still a little bit too tough for me. I might just start cooking them in my Instapot and see how they taste there. See if they're real tender. And then, I don't know, I'll figure out a way to where I can enjoy them. Maybe a thicker cut. But today I got a little upset a few times with the phone calls because I'm down like $500 or $600, $700. You know, I don't want to be bothered with phone calls if it's going to be someone asking me if they want to give me free whatever, pay my bills for me. I don't trust things like that. So I'm going to get on out of here. A hands-free Bluetooth device. Something's going to have to change. But I was saying, someone in the room, cost average down a trade, didn't tell me, and he kept going on, and he come out, made $60. But it's a lot better than losing. But you never know how it's going to turn out. So when you do that, you got to know that you're taking a risk. But after you see someone do it over and over and over and over and over and over again and come out green, you have to kind of say, well, he's only had one failed trade like that since I've seen him trade, where it didn't work. And then he sold it, and then it did bounce. But here, the last 3-4 weeks, I've been caught in a couple of trades, which is telling me something that we're in a very volatile market until the election is over. And I think it'll be like that until the election's over, because we live in uncertain times when it comes to politics. I mean, none of you have been around, younger, have witnessed an assassination attempt 3 times on a president during an election year. Reagan got shot. I was 2 years old when Kennedy got shot. I was 8 when Robert got shot. Then was it Ford got shot, or somebody else got shot? Reagan got shot. Anybody that loves America usually ends up getting shot. Mostly, I mean, even today I would call Kennedy, John F. Kennedy, a Republican. Because I have the values that he has, but my friends don't have the same values that they used to have, or at least they were hidden. They're more or less Marxist socialist. And I have a lot of friends that are musicians and live that hippie life, but music is their mantra, you know. They're good people. It's just I just don't think like they do. I used to. It didn't bother us none until Obama got elected, and then everything just kind of went to hell in a handbasket. Someone just sold 2.5 million shares of Intel. So they got out on the pop. It's a rumor, so you don't want to take too big of a risk. Could be a bidding war coming up with Intel. That's probably the next thing you're going to hear. If Intel's smart, they'd go ahead and sell it. Because it's just not worth what it used to be. It used to be the number one stock, just like NVIDIA is today. But now it's the worst stock you want to possibly own that's in that market. I mean, everything was Intel. Computers were all Intel. And then Microsoft came. Now NVIDIA is here, and AMD, and Micron, and all them other ones. More competition. But it's not like Boeing. Boeing's a monopoly. So people are going to have their money in Boeing waiting for it to finally reverse. And a new CEO can make it pop. Maybe that's what they're waiting for. They've already gone through 2, I think. And they got a new one now, number 3, since the catastrophe. And they're always the top notch that wants to take on a big risk. And sometimes your name can turn around a stock. It's like the way they were talking about Jamie Dimon today. He used to be the number 1. And now that he don't agree with a lot of things that Wall Street agrees with, he stands up for the Jewish people, and Wall Street doesn't. They say they do, but they don't. They put it on a back burner. So I'm going to get on out of here and relax. I've got pretty tensed up today with these phone calls. I'll come in a better person tomorrow. I'd say the government was probably behind it, because we had the Cuban thing going on back then. And we had Russia, the arms race with Russia to the moon. They still won't open up the files on that one. And we probably will never know the truth about the Trump shooting either, which to me sounds real hairy. I don't understand why they weren't protecting that building. That was the closest building to them. It didn't make no sense. My great grandma could have probably shot that shot off and hit him with it. And this new nut that they got down there in Florida, oh God, he's definitely a radical. I guess he went over and fought in Ukraine. He wants to go to war with Russia. I don't want to go to war with Russia. I want to make peace with Russia. I think I always liked Putin, but not, I can't like him now, but I thought he was pretty cool there. Just stay out of my business kind of guy. Same way with North Korea. They get a little riled up when Democrats are in office. So I'm going to get out of here. Today was a very tense day for me with these phone calls, and I could have probably been a lot better trader if it wasn't for that. So I got to answer these calls. I've just got to recognize the numbers, I guess. But today and yesterday have been ridiculous. I get 20 or 30 calls a day, and that could drive anybody batty. I've had this number for a long time, 20 years. I don't think it's the same number I had in 2004 when I got back from Hawaii, but I'm pretty tense right now, so I think I might just go for a walk. Today's Friday. I got a lot of stuff I could be doing. I got to rearrange my house now that I got this new air conditioner in here. I'm going to just clean it up real good. But today could have been a $30,000 day if I'd just been more patient and held on to my trades. And that's not spending a lot of money. $5,000. So I might do a lesson this weekend. Be sure to hit the like and subscribe button so you get my videos. I want to thank the room, Magnificent, and everybody that stuck with me today through all the thick and thin. I run most of you off, it looked like. Thank you, Magnificent, for keeping me in line. Jesse, you take care. Roaring Kitty. Randy, let's wish Randy well wishes. I'll get an update from him this weekend. I'm going to head on out. I love the Jewish people.